are never uniform. They're across the board. And then once you found a sector where you've seen a drawdown in prices, and I don't follow the Indian market deeply enough to do it, then my view is we need to take the companies in that sector and look at individual companies to see, did they get a correction that was more than deserved? I'll give you the US analogy. The sector in the US that's been hurt the most by this AI story is software. So the damage has been, it's been devastating across the sector. You have from the biggest names, Adobe, Microsoft, to the smallest names. Does the software sector deserve a write-down? Absolutely. I think AI is going to change the economics of the sector and the margins. Are the companies in the sector all deserving of that same markdown? I don't think so. So to me, that's an invitation of, and I'm going to take it up in the next couple of weeks, of taking individual software companies and asking a kind of generic question. What will the good software companies have as characteristics that will allow them to keep AI at bay? Maybe they're more consumer focused. Maybe they have more people interaction, things that AI will have a tougher time replicating. And those might be companies that my money should be going into. And I would say the same kind of exercise in India is worth doing now, especially after you have a market correction, is look across sectors. Look at the worsted sectors and then go company by company. It's work. But remember, active investing is work. Anybody who suggests to you there's an easy way to find cheap Indian companies is lying. I would say that about finding cheap companies anywhere in the world. It's going to be work. It's going to be a lot of work. And unless you truly enjoy it, don't do it.
That's a fair point. But that analogy you spoke about, can it extend to Indian software companies as well? To go company by company and see what really gets hit?
I'll give you a very simple measure to use to see whether a company will face a threat from AI. The more of what you do, which is mechanical and not with very little people interaction, the more likely it is that AI will replace you. Take the outsourcing companies, right? Do I need a person on a phone supporting me if I have a question? Probably not, because they're reading from a script. Well, AI can do that. So one of the things I would look at is, what does this company do? How sticky is its business? Can people replace it with software that does what it does? And that's the reason business software will be more exposed than consumer software. Software that runs in the background. You go into a store and there's software running in the background that determines, how the store business is run. That software is in the background. Nobody interacts with it directly. That's the kind of software that AI can replace fairly easily. So one thing I would start to do is not treat all software companies as a monolith, but start breaking them down. What do they do? What do their products and services involve? How much human interaction is involved in using their products and services? And the greater the human interaction, the more difficult it will be for AI to enter that phase, because inertia is a tough force to overcome. So if you're used to doing something as a person, it's tougher for AI to replace it. And I'll give you an example. With a lot of what we do in Excel, let's face it, AI can do as well and in 1/10 of the time. But the truth is, we're so used to hitting these buttons that allow you to do things in Excel that we're going to stay wedded to Excel longer than some business software that runs in the background. So I think one of the things you're looking for is, what does that software company do? How sticky is its business? The more mechanical and less sticky the business is, the more likely that AI is coming for you.
Aswath, we can go on speaking because you put things so succinctly, but thank you so much for your time, and we hope we have a conversation soon. So that was Aswath Damodaran, the valuation guru, speaking about a host of topics, right from SpaceX valuations to AI and what next for Indian markets. Thank you so much for joining us on this special interview. We'll take a short break, but stay tuned. All the action continues on the other side.
केसरिया से हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin near $60,000 levels on technical bounce. Germany leads MiCA crypto authorization on deadline. Dubai's Vara licenses 50th crypto firm. Strategies Michael Saylor hints at another Bitcoin buy. Well, Bitcoin is trading back near its $60,000 mark, supported by improving regulatory sentiment and a technical rebound after the recent oversold levels. Now, the investor confidence has also been aided by continued interest in the US spot Bitcoin ETFs, and the market participants will now watch whether sustained ETF inflows can help extend the cryptocurrency's recovery. Germany is leading Europe's race to regulate the crypto industry as the European Union's MiCA rules come into full effect from July 1st. The country has now 57 authorized crypto asset service providers, nearly a quarter of all MiCA licenses issued across the European Union. The move is expected to strengthen investor confidence and set the tone for the next phase of crypto regulation across Europe. Well, Dubai is strengthening its position as global crypto hub. the city's Virtual Assets Regulatory Authority, or VARA, has now issued its 50th license to a virtual asset service provider. Now set up in 2022, VARA was amongst the world's first regulators dedicated solely to the virtual assets industry. The milestone reflects Dubai's push to create a regulated and business-friendly ecosystem for crypto firms. Executive Chairman and co-founder of Strategy, Michael Saylor, has once again fueled speculation after posting the company's Bitcoin acquisition chart on social media with the message, "We are going to need more charts," and of course, sentiment going up in the entire crypto space. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Interestingly, your main cryptocurrencies have been doing well. Bitcoin, Ethereum, XRP, all of them going up between 1 to 4%. The important support and the resistance level for Bitcoin stands at 58,000 and 60,000 respectively. And now is the time to take a look at the crypto strategy of the day. Here's what to keep in mind. If you look at the market outlook, there is a cautious recovery at play. Some kind of short liquidations are moving towards the positive momentum. But remember, the Bitcoin support level still ranges between $58,000 to $60,000 levels. Now the recovery focus will definitely be there on the ETF inflows, especially in the starting of month of July. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulation, taxation, or the broader industry. The team is able to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome back. You're watching Ask Profit right here on NDTV Profit. It's a good day, rather, because we're seeing some recovery now on the bottom end of the index for the Nifty 50. As you look at that, we're back above that 23,900 mark, but we'll hope to be back in the green very, very soon. But why it's a good day because you've seen pressure today largely coming in from individual names, largely in the auto pack. So when you look at the heat map for the Nifty 50, you've seen players like Eicher Motors that are currently under pressure. The Delhi EV policy is having an impact on that portfolio of Eicher Motors as well. So stocks down 3.8%, recovered a little bit, but continues to see that impact today. On the other hand though, Maruti Suzuki is one of the top Nifty gainers for today. Big brokerage call coming in on that stock also is leading to some positive momentum at this point of time. Nestle, Titan, Bharti Airtel, Bajaj Finance and Finserv, as well as Adani Ports and Enterprises continue to be the other gainers for the Nifty 50 today. We're seeing some pressure yet again being built in on tech names. So Infosys, Wipro are some of the names that are continuing to be under pressure. Very interestingly though, Tata Consumer also continues to be under pressure as of now. And in terms of the sectoral heat map, that's visible as well across the board. We spoke about the Nifty Auto that has now come back into the green. So in terms of the sectoral heat map, you're seeing that impact continuing on the positive side of things as well. So at Nifty Realty continues to be the top gainer, while Nifty IT yet again second day in a row continues to be under pressure as well. The advanced decline ratio though is the other important factor. Now, we've been talking about that the benchmarks continue to be the story, both for the Nifty as well as for the Bank Nifty as well. As of now, we have inched up materially in terms of the advances compared to the declines. The mid-cap, small-cap index also show you that reflection, slightly trying to get back into that neutral zone as of now for the mid-cap 150. And the small cap 250 is now comfortably in the green and hoping to sustain so, and the BSE 500 as well, where the individual names continue to dominate. Yesterday was all about Astral as well as what we saw on Persistent. Today, Canfin Homes, Metropolis on the gaining side, Birla Soft, Eicher Motors and ZF Commercial, the top losers for today as well. But If you haven't already, do start sending in your WhatsApp queries, and to answer them, we're now being joined by Swati Hotkar, EV Technical Research at Nirmal Bang, and Astha Jain, Senior Research Analyst at Hem Securities on the fundamental side of things. Thanks so much for joining in to both of you. And let me take the first question now. And this one's coming in on Canara Bank. Sanjay from Bangalore is actually holding these shares at roughly around 132. Astha, he wants to hold it for the next 1 year. Would you recommend him to continue holding? Is this also a good time to buy? Very good morning to you.
Hi, good morning to everyone out there. So talking about the Canara Bank, first of all, it is the fourth largest public sector bank in India. If I talk about the asset quality is also very, very strong because GNPA has been contained below 2%, 1.84, and NNPA at around 0.43. That is below 0.50. Now, if I talk about the other parameters also, they have shown a very strong loan growth. Now, my idea here is if anyone wants to hold this counter, this is one of the good counter to stay invested in. And the price target, which I want to really attribute to this counter, because what we believe that Canara Bank has a, that potential to move more upside from here. So we want to attribute price target of around 135 to 140 at the initial level to this counter. Stay invested in because of the good asset quality which the bank is having. They have shown a very strong loan growth as well.
The next query is our first caller query coming in from Delhi. Sanjay, you can go ahead and ask your query.
Yeah, morning ma'am. This is Sanjay from New Delhi. Thank you very much for taking my call. I am having Manappuram Finance 200 shares at the price of 316.50 paisa. I bought it in the month of December 2025. And since long, I could not have been able to get any decent return or not even my cost prices. Now, once again, it has come to the same level of my buying. I want view about it. Shall I hold it or shall I sell it out and switch it over to Shriram Finance instead of this Manappuram Finance? Please guide me.
And this is for short term or long term?
This is for short term, obviously,
Okay.
but I got stuck in December, so it took 6 months from there.
Okay. Swati, should he continue to hold Manappuram Finance or switch to Shriram Finance?
First of all, good morning, all of you. Definitely, you can hold on this Manappuram Finance at the current market price because I believe the counter is under the formations of the inverse head and shoulder pattern. And downside, it has a very crucial support at around 305. So, maintaining that as a stop loss, you can hold on the long position. A swift rally can be witnessed once the stock manages to view the breakout of 330. Then, at least for a short to medium term target, I'm looking forward to a target of 380 to 390 levels on the higher side. Shriram Finance is a no wonder is a good stock, but as of now, we have already seen a run up rally from almost 880 to 1050 levels. So we might witness some sort of a profit booking. If you want to enter into this particular counter, any dips towards to 980 to 1000 levels are the attractive levels to take a long position. But at the current moment, I will suggest to hold on the Manappuram Finance.
Got that view, Swati, and welcome to the show. The next question coming in now, and it's on Supreme Industries. Our viewer asking if it's a good time to enter this stock right now. Astha, we've seen, of course, the Astral demerger take place yesterday, and both Astral as well as Supreme Industries were under pressure. How are you viewing this development? Do you feel that it has a direct impact on Supreme, and would you recommend to enter, or maybe wait for a quarter, let the Astral demerger number come through for both the businesses, and then take a call?
So even I would like to wait because what I believe that although we know that Supreme is one of the leader if we talk about PVC pipes, CPVC pipe, HDPE pipes, etc. Along with that, the kind of distribution network this company is holding, it is very, very strong. And the kind of tailwind it is enjoying from, the kind of macro environments we are operating in. I think all these factors are signaling towards strong upside. But right now, my idea here is that this stock may fall further from here, as we all know the ongoing news about it. And hence, don't enter into this counter at this point of a time. I believe that this counter can show more downside from here. So rather than entering from at the present moment of a time, enter it at the lower level of around 3000. So don't enter into this counter at this point of time.
Query is coming in from Ram from Hyderabad. He has around 100 shares of Genius Power, bought at a price of 350. Should he hold or exit? Swati, any view on this?
This view is positive for a longer term horizon. Short term, definitely we are witnessing some sort of a profit bookings at the current levels. But I will not suggest to book the losses at the CMP. If you want, you can definitely hold on. A pullback rally can be witnessed up to 330 to 340 levels. So on every rise towards those level, you can definitely exit. But at the current level, hold your long positions.
Hold your long positions. Got that view, Swati. But the next question now, and this one's coming in from Hyderabad. Naresh has a stock query for us. Naresh, very good morning. Thanks so much for joining in. What's your query?
Good morning, panel members. Regarding this, I have the stock IRFC, the quantity is 300. I bought it 176. So I am in long 24,000. So what is the view on about the IRFC? Like, how is the future? Can I hold or can I exit?
And Naresh, when you bought this was from a fundamental standpoint?
Yeah, I'm looking for long-term fund.
Got it. Asta, he's definitely bought it at elevated levels, currently trading at 90, bought at 173. Would you recommend him to average or just continue as holding? And what could be a level that you would be watching out for, if any, to exit?
I think there are a few reasons that why this stock has not performed so strongly. First of all, what we know that due to this OFS, we got a huge supply in the market. Secondly, the valuation is one of the concern for this company, and we have seen that is going to derate. In fact, that has got derated. So that is also one of the point that we believe that why this counter is not performing very, very strongly. So some of the reason OFS, etc. Now, if I talk about the other parameters also, I believe that IRFC is such a counter that one should remain invested in, but don't expect a very, very strong side of, a stock appreciation from this point of a time. Because there are few points also which are signaling towards the positivity. They have got a very strong operating efficiency. And in fact, their credit risk control mechanism is also very strong. But my idea here is average it at the lower level. If you are patient enough to hold it for a long term, that is 1 year time horizon. So right now, I'm not seeing any sort of relief in the stock prices. It can fall downwards. So if you have a patience to hold it for a long term, say 1 year or more, then remain invested, because what we believe that this stock can move further downside from here, where we can see the level of 80 also.
Okay. The next is a caller query coming in from Hyderabad. Murli, you can go ahead and ask your query.
Yeah, this is Murli. Good morning to all the panelists and you and ma'am. So this query is on Lloyd Engineering. I have remaining Lloyd's Engineering.
Okay.
I have 350 shares, which is an average of 9.32. I've been holding it for last 5 years. Started buying at 5 rupees and stopped at 10 rupees. Sold around 200 shares and booked some profit. Now I'm looking at should I hold it for the target of 100 and what could be the long-term view.
Okay. Long-term views. Then I would go to Asta. Asta, any view on Lloyd's Engineering here?
So what we know about Lloyd's Engineering, basically it is into the heavy engineering equipment, and it works in that space. Now, why this counter is now in the focus? Because what we know that previously they were into pure fabrication. Now they are started transitioning from a pure fabrication company to a diversified engineering company, etc. So my idea here is that yes, one should remain invested in this counter. 87.550 it is quoting right now. It may move till the level of 100 in the medium term. So hold is a strategy from my side for this counter.
Got that view. But the next question coming in now is on Eicher Motors. We spoke about the counter being under pressure today on the back of the Delhi EV policy. Now, largely about 3% of its models go into the state, but more importantly, that if this is renewed interest into other regions as well as a similar policy, that will be something to watch. Also, just currently one model, the Flying Flea in the electric vehicle space, also having an impact in terms of portfolio compared to its peers as well. But Prashant from Bengaluru has bought these shares at 6930. He's actually looking at it as an opportunity. Swati, on the charts, what are some of the important levels that you're watching out for? Because we've seen buying from the lower end from where it started off. And could this be a very important move either to exit or to buy more at this point of time?
Yeah, Yeah, at the current level today, we have seen a long profit bookings, and the stock has given the breakdown of the 20 days moving average, which is the little bit concern point. If stock manages to keep the closing below 7100, then I believe that this like of selling pressure is likely to be intensified, which will take a stock to back towards to 6800 to 6700 on the downside. So I will suggest to book your profits, whatever you're gaining at the current market price, and if you want to create a long position, 6750, 6800 at the good levels to take again a fresh long position. So at the CMP, you can book your profits.
Got that view, and a very interesting one, Swati, at that. But viewers, Swati as well as Astha, it's now time for the rapid fire round in this edition of the show. Keep your answers as short as possible. First question coming in on Avanti Feeds. Muralidharan from Pondicherry bought the shares at 1104. Currently, Astha is sitting in a 15% loss. Would you recommend him to buy more or just stay put? Astha, I think you're on mute.
I don't recommend buying in this counter because I believe that this counter may fall more. So just hold this counter, but prepare for more downside from here.
Mr. Sankaranaran is holding 35 shares of Nugent Software, bought at a price of 1,169. He wants to know the long-term view on this, Astha.
Nugent Software is looking good to us, and definitely I would recommend him hold. My idea here is that Nugent Software is well poised to move till the level of 550 to 600 in the long term.
Between Equitas and South Indian Bank, Swati, what looks better for the short term is what Raj is asking.
Yeah, as of now, if you look towards on the banking stock, definitely South Indian Bank looks promising at the CMP. I believe it has a very strong potential to reach up to 50 to 52 levels. You can go for a South Indian Bank.
Next query is for you, Astha. It's on Saxoft Technology. Sriram from Chennai is holding 100 shares, bought at a price of 119. He wants to know the fundamental view. Should he hold or sell?
Partial profit booking is recommended because what we have seen in the last 3 days, this stock has risen very, very high. So just book partial profit into this counter.
Josh Engineering is the next counter. We don't discuss this too much, Swati, but Satyan wants to know that he's bought these shares at 528. What would you recommend? What do the charts suggest?
Yeah, as of now, it's under the selling pressure because already stock was trading at a higher levels. I will suggest to exit or maintain the strict stop loss of 490 rupees on the downside. Any pullback towards 540, one should exit the loss.
The next query is for you, Swati. It's on Reliance Industries. Padma from Bangalore wants to enter this counter. Is it a good time to enter?
Definitely, one can go for a long position at the CMP, but not at a current lump sum capital should be invested. Any dips towards to 1250 also is the attractive level. At least 20-30% can be accumulated at the CMP.
Gunasekaran from Tamil Nadu is bought into Regal Resources at 88. Astha, a relatively recent listing, but what would you recommend?
Regal Resources, he is already bought at 88, so just hold this counter for the breaking.
The next query is for you, Swati. It's on ITC. Saurabh from Bangalore has bought 27 shares at a price of 366. He wants to know the short-term view on this counter.
My view is positive. The charts looks very attractive. Positive divergence. If you possible, try to average it out at the CMP. Short-term target is 320 to 330 levels.
The next one coming on Container Corp, bought at 512 by Mohit, who's from Ludhiana. He wants to know, Astha, if he should continue to hold for the next 3 years.
Container Corporation is a hold from our side for next 3 years, but this is a counter which moves very slowly, so be patient with that. But yes, it can move upward till the level of 550 to 600.
The next query is for you, Astha. It's on Yes Bank. Arvind is holding 200 shares at a price of 21. He wants to know whether should he add more of Yes Bank at current rate.
So Yes Bank is looking good to us from the fundamental point of view. Yes, one can add more this counter because I think profit recovery they have shown, and in fact their loan growth is also seen some sort of revival, but at the lower level of around 24 rupees.
The next one's on NTPC Green, bought at 99.5, Swati, and this is our viewer Siva. He wants to know an exit strategy for this counter.
See, at the current level, I will suggest to hold on if you want to exit. Put a stop loss of 94 rupees, take a 2 rupees more risk, but it has a potential to reach up to 103 to 104 levels, so you can hold on.
Got it. Well, that was the last question of the rapid fire in the first half of the show. Swati as well as Asa, stay on. A lot more stock related queries on the other side after this very short break.
presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already done so, do start sending in your stock-related queries as well. But pull up the Nifty 50 very, very quickly as well, because we of course started off the show just a tad above that 24,900 mark, and we have slipped through over the last half an hour or so as well, back below that level. So continue to monitor where we can find that stability. Of course, 23,800 continues to be an important mark. let's also look at the advanced decline ratio also very quickly of how that's moving up, because in terms of the advanced decline, that continues to show an inch up materially as of now in terms of the advances and continuing to do so at this point of time. So monitor those as well. But let's go across, take our next question from Hyderabad, and Ajay is now joining in for a stock related query. Ajay, good morning, welcome to the show. What's your query?
Good morning to all. I'm holding Rustomjee shares 420 quantity at 480 level.
Okay.
For the past, I think 8 months like that, we have been holding. Yesterday, this stock shown little bit momentum. Is that continued rally? I want to know, is it good to hold or else should I exit from this counter?
Got that view, but and is this more of a fundamental buy, right, Ajay?
I want to know both, please.
Okay. Astha, let me come to you then. First on Keystone Realtors, the space actually hasn't done too well over the last few months. What's your opinion? Astha, I think you're on mute.
If I talk about Keystone Realtor, I think there was some news yesterday. On that basis, we have seen a big jump into this counter. Now, very well known by the name of Rustomjee, and their main focus is in the Mumbai metropolitan region. What I feel about this stock is that they have got a good or a decent revenue growth of around 28%. And I think the strong redevelopment projects are there in the pipeline, which I believe will definitely going to benefit the company in coming future. So there is no need to book profit. We have seen some sort of volume activity also yesterday. I think this stock will going to perform in the long term. Remain invested in this counter.
Next query is coming in from Mahesh Babu from Hyderabad. Here he is holding few shares of Nykaa, bought at a price of 120. He's a long-term investor. Astha, any view, should he continue to hold or switch to any other company?
So I think Nykaa is such a counter where one should remain invested in. There is no need to switch to any other company, because what I believe that first of all, what are the positives about this company is that they have got a very strong growth in the revenue along with the profitability, which is reflected in their financials. And I think there is a scope for the more growth from here. So remain invested, because some of their private label brands like Dot, etc., they are working well for the company. Remain invested in this counter for the long term with a price target of 350 to 380.
Got that view, Astha, but take another caller now from Andhra Pradesh. Bharat is now joining in for a stock query. Bharat, good morning. What's your query?
Good morning, sir. I am holding 300 shares of Apollo Microsystems at the price of 408.
Okay.
What is the target of the stock? I will go to the Swati, madam.
Got it. Well, Swati, on Apollo Microsystems, of course, the last 1 year stock's done very well, over 100% return. Is that momentum expected to continue?
Yes, Puneet, definitely. Last 2 days back, we have seen a very strong bounce back rally from 380 levels, managed to give the breakout of 20-day moving average, which comes to nearby 415 levels. And the volumes are slowly and steadily moving along with the price movement. The short-term target is 440 to 460 levels. So you can definitely hold on the long positions by maintaining a strict stop loss of 405 on downside.
Okay, Shashant is holding 120 shares of HDFC, bought at a price of 797. Should he sell, add or hold? Astha, any view on this?
So definitely HDFC Bank is a hold from our side for the long-term purpose. And we have seen some sort of news flow is going on. But if I talk about the other parameters also, like some leadership changes we have seen. But if I talk about the other parameters also, then the strong asset quality with the strong margin, net interest margin which this bank is enjoying is unbeatable. Along with that, they have got a very massive, deposit base. So we are liking this counter, and I think one should remain invested in. Maybe it will take some time to move upwards, but ultimately 850 to 900 can be set as a price target for this counter in the short to medium term.
Got that view, Astha. But the next question coming in now, and this one's on from Preeti from Raipur on Coforge. She wants a 1 to 2 month view, Swati. We've seen that consolidation yet again at that 1450, 1500 odd mark. Do you feel that that's there to stay for a while, since we've had a run up from the lows?
Puneet, already the counter is an uptrend itself, but slowly and steadily is trading in the formation of high tops, high bottom, well respected 20 days moving average. The only concern is it's facing a very strong resistance nearby 1550 from the last 2 trading 2 to 3 trading sessions. Once it manages to clear those resistance level, a soft rally can be witnessed, which will take a stock towards 1600 to 1650. I will suggest if you are looking for a longer term horizon, definitely you can stay invested in this particular counter. If not, then please maintain the strict stop loss of 1470 on a downside. If it's break those level, then we might witness some sort of a more profit booking in this particular stock.
Okay. The next is a caller query coming in from Chennai. Shankar, you can go ahead and ask your query.
Hello, sir. Good morning.
Good morning.
After hitting 52 shy of 210 sale last month, it came down to almost 20% now. Shall I enter at current levels or purely short-term trade?
Okay.
I want valuable advice from the expert.
Okay. Swati, any view on sale, any targets, any stop loss?
Yes, no wonder the counter is trading nearby the oversold zone. We might witness some sort of a pullback rally. So if you want to create a long positions, you can go ahead but maintain the strict stop loss of 165 rupees on the downside. And the short-term target will be at around 185 to 190 levels.
Got that view. But the next question coming in now, it's on BEL. Our viewers bought shares at 429, holding 20 odd shares. I'm asking if she should continue to hold or sell. Swati, back to you, because we've seen multiple times this level tested at 400 and we've always seen a pullback. Is this one also similar, expected to do so?
Yes, Puni, you rightly pointed out that the pullback has been witnessed from 400 levels, but it got stuck at the resistance levels of 430 levels. So up to those levels, we might witness some sort of a pullback, but it will be a short-lived. So if you're having a long positions, hold on by maintaining a stop loss of 400 rupees. If you get any pullback rally towards to 430, try to exit the long positions. The medium to short-term targets is a little bit cautious at the current levels. So try to book the profits on every rise.
Okay. Balasubramaniam from Bangalore is holding 60 shares of Hindalco, bought at an average price of 542. Now, given the fact that aluminum prices are coming down, should he continue to hold Hindalco or exit? Any view on this, Asta?
So in Hindalco, in our view, is a hold from my side, because we all know that it is a Aditya Birla Group company. And I think what is a major focus about this, although we know that right now, metal stocks or metals are in particular in a downward momentum. So that is why we are seeing the fall in the stock prices. But it is now, I think, running on the aluminium super cycle theme. So there is no worries on that. And definitely their business growth is also very, very strong. But all these are phenomena for the long term. So here, view is only long term. So long term, stay invested in.
Got that view, Astha. But the next question now coming in, and this is from Nitika from Pune on SJVN. She's bought these shares at 99, currently sitting on a loss on this counter. Would you recommend Astha for her to continue holding?
SJVN, because she's incurring loss right now. So my idea here is at least wait till the break even to come in. Maybe it will take some time. So she has to be patient enough to hold this counter at least for 3 to 6 months. So if the time horizon is that, then definitely she should remain invested in, because the kind of industry it is operating in, I mean, there is a massive opportunity in the renewable space, and they are working on the renewable capacity enhancement. And in fact, their order book is also very, very strong. So my idea here is stay invested in this counter.
Abdul from Kerala is holding 233 shares of Tata Motors passenger vehicle, bought at a price of 404, currently sitting on a loss of 15%. Should he continue to hold, average or sell? For the he wants to know the targets for the next 6 months. Swati, any view on this?
I will suggest to hold on at the current market price, because already the counter is sitting at a lower levels of the previous leg. But downfall can be expected, which will take a counter towards to 320 levels, which are the previous gap supports. So if you want to average out positions, wait for some more time. Any dips towards to 320, 300 at the attractive levels to take a average out positions. And upside for a short-term period target is coming at around 380, and beyond that level, 400 levels can be seen.
Got that view. Also, Swati, on IndusInd Bank as well, Gautam from USA wants to enter the stock now. Yet again, another counter where you've seen that consolidation on that 900 mark. Would you recommend him to enter now, or look at some other opportunity?
I would suggest to enter at the current market price as well. 30-40% of capital can be invested at the CMP, whatever the quantity you are planning out. Upside, it has on the verge of giving the breakouts of 950. If it manages to give the breakout of those levels, stock will enter into the 4-digit minimum target is 1050, then 1200 levels can be seen. So if you don't want to miss out the rally, at least buy 20 to 30% of whatever the quantity you are planning at the CMP. And if you're getting any dips, since the markets are very uncertain, we might witness some sort of a dips towards to 850, 870, you can definitely add on the quantity at the low levels.
Okay. The next query is on data patterns and it's for you, Astha. The viewer wants to know whether should he enter data patterns from long-term perspective.
So I think right now we are very much seeing that we are seeing some sort of momentum in the all defense space counters, and data pattern being one of them. Yes, we are liking this counter. And my idea here is that one should remain invested in the data patterns, and even in fact a new position can also be taken because the kind of order book they are having and industry tailwind is also there. Remain invested in this counter or enter at a level of around 4400 or the price target of 5000 to 5200.
Got that view, Astha. But the next question, this is from Uma from Bengaluru. And Swati, she wants to add a pharma stock in her portfolio. Currently does not have one. Anything that's on your radar that you like currently from the space?
Gland Pharma looks very promising at the CMP. But if we have seen that from last 2 years, the stock was under the consolidation phase within the range of 2000 to downside 1500. And this month, we have seen a breakout of those levels. Whatever the rally we have seen, a downfall from 2021 to 2023, the stock manages to give the breakout of 61.8% on the monthly chart, which is known as a golden ratio in the Fibonacci retracements. So 2200 was a breakout level, and it has already given that level. So I will suggest to go for a long position at the CMP. Upside target, I'm looking forward at around minimum 3000 levels, and beyond that 3200 levels can be seen. So at the CMP, 40 to 50% can be accumulated. Any dips towards 2200, you can keep on add on.
Right. The next query is coming in from Srinivas from Guntur, and it's on Maharashtra Seamless. He wants to know whether should he buy this counter from long-term perspective. Astha, any view?
So Maharashtra Seamless from the long-term perspective is looking good, and definitely one can make an entry into this counter. But at a lower level, this is what I believe. So entry is recommended, but not at the current level, at the lower level, because what we know about this counter, that first of all, it is a Jindal Group company. It is into the seamless pipe, and in fact, the recent financial performance was also good. But the kind of valuation it is right now enjoying, I think lower levels are recommended for the fresh buy. Maybe at around the level of 580 to 600 with a price target of 680 to 700.
Got that view. That's on Maharashtra Seamless. But the next one, then pull up the chart of Jyoti Labs as well for the year, because Arun from Tamil Nadu has bought these shares at 264. So pull up the long-term chart, because it has been under pressure after that news came through, that 44% downtick from the highs, of course, in the last 12 months. Now, Astha, the agreement with Henkel, I think, being void now is definitely a key negative. So would you just recommend Arun to exit this counter now, or probably just wait it out at this point of time?
So I think what we know that some of their brands, apart from I think Ujala, I'm so sorry. Ujala is one of their brands. So I think some of the brand has got a very good visibility. So in fact, Ujala is it is into the washing segment. So yes, in fact, EXO is also one of the brand. So some of their brands have got very, very good visibility. And in fact, the structural growth story is also there. Yes, we know that some kind of a negative news flow is hovering around the stock right now. So at the lower level, one can enter into this counter, and it may see more downside from here. So those who have this counter in their portfolio can remain invested in as well. So buy at the dips or hold. This is one of the strategy which one can apply to this counter for the price target of somewhere at around 220 to 230.
The next query is coming in from Zeenat from Ranchi. She's holding 285 shares of Castrol, bought at a price of 208. Should she continue to hold this or switch to some other counter? Swati, any view? Should she continue to hold or switch to some other counter, and what would be your recommendation for the other counter?
Yeah, at the current level, you can definitely hold on because the counter is forming a very taking a swing supports of around 180 rupees. So taking a 4 rupees more risk, I will suggest to hold on because the counter has given the formations of inverse head and shoulder pattern. Any momentum towards to 188 will open the door for 195 to 200 levels. So take more 4 points risk, hold on the long positions with a strict stop loss of 180. And if you get any positive move towards to 195 to 200, try to exit the longs.
Got that view of Swati, but let's go across, take another caller now from Jaipur, and Raj has a stock query for us. Raj, very good morning. Welcome to the show. What's your query?
Yeah, good morning. My query is regarding the Harsha Engineering. I purchased 100 shares at rate of 430, and I intend to purchase more at this current price. And could you please give me the the 1 year horizon on this share?
1 year horizon, got it. Astha on Harsha Engineering has been around for a while now. What's your view for Raj?
So Harsha Engineering here, we will want to have a 1 year perspective. 1 year perspective is good because what we believe that these engineering stocks, they have got a very, very strong potential, and the kind of order book this stock is also having. I think this is one of the counter which has a good revenue visibility going ahead on the back of a strong order book. So from 1 year perspective, it is looking good. Remain invested in or buy at a lower level of around 400, the price target of 500 to 520.
Next query is from Ikambaraya from Hyderabad. He is holding 70 shares of SBI, bought at a price of 1030. He wants to know whether should he continue to hold this or exit. He can hold the stock for the next 2 years. Astha, any view on SBI?
Definitely a hold from our side because one of the largest PSU bank it is, and what we have seen is that the kind of asset quality they have shown is a very strong. Apart from asset quality, in fact, the growth story is also good because the growth which they have shown in their loans also is very strong. So my idea here is yes, one should remain invested in. Price target can be set at around 1150 to 1200 in the long term.
The next question, coming in now, and this one's on IRCTC. Now, Praveen from Chennai wants to know if it's a good time to look at the stock after its correction. Now Swati, we've seen multiple times this query come through, right, from a bunch of viewers. Seems very a lucrative trade, but what's your view on the charts? Is it a good time to buy, or should he ignore?
Frankly speaking, Puneet, my view is a little bit cautious because this kind of a share normally give the rally during the budget seasons only. I believe that we might witness more selling pressure, which will take a stock towards to 480, 470 levels. So try to ignore this particular counter at the current market price.
Okay, the next query is coming in from Mahalakshmi from Hyderabad. She is holding 120 shares of E2E Networks. The average acquisition cost is 316. Can she add more for the long term, for the next 2 to 3 years? Astha, any view on E2E Networks?
So, first of all, here she wants to add more. My idea here is, yes, one can add more this counter, but at the lower level, not right now. So maybe 400, it is as it is quoting 400 right now. So at the lower level, one can enter into this counter. Now, if I talk about the business of this company, is that first of all, they are into the AI first cloud infrastructure company that we all know. Now, their financial performance was also very strong because what we have seen in their growth, it is like totally a turnaround story which this counter is started showing it. So my idea here is on the back of a very strong profitability and the turnaround story, this company can show more upside from here. Yes, one can remain invested in or buy it also for the price target of around 500.
Got that view. Manish from Bengaluru actually is holding on to Sula Vineyards. And let's look at the 1 year chart also of this one because it has been a disappointing story. Stock's trading at 153, so he's at a loss already and holding on to 600 shares. So you see that downward trajectory down almost 50%. Astha, the earnings haven't kept pace. Would you recommend Manish to exit this counter or continue to hold?
So my idea here is because it is one of the largest wine producer in India, and it is not only producer, it is a wine tourism company also, as we all know. but the financial performance is not coming in line with what the kind of business this company is having, and that is why we have seen not performing very strongly on the bourses as well. So idea here is, yes, one can partially exit from this counter and hold partial quantity with a price target of 180 to 200.
Well, let's start the second round with the rapid fire now. Swati as well as Astha, you know the drill. Keep your answer as short as possible. The first one coming in now on Standard Engineering. Harsha has bought these shares at 115. Swati, stock's trading at 250 now. Should she book out?
Wait for some more time. Any buying, any coming towards 145 to 150 levels, one should exit the longs.
Next query is on Vedanta Iron, and it's for you, Astha. Murthy from Vizag wants to know whether should he enter this counter. Any view?
Enter, but at the lower level, not right now, maybe at the level of 265 to 270.
HDB Financial bought at 740 by Shiv Kumar. Astha, he bought it a year ago, now back at that price. Would you recommend him to exit?
I recommend him to hold somewhat more upside potential is left in this counter, so just hold with a price target of 780.
The next one's from Savio from Dubai. He's holding on to Aditya Birla Lifestyle shares and asking if it's a good time to hold for the next 2 years. Would you recommend that, Astha?
Yes, Aditya Birla Lifestyle is a hold from our side for the long-term purposes.
Got it. The next one, coming in now, and this one's on Coal India. Our viewer wants to know if it's a good time to enter for the long term. Would you recommend that, Astha, at this point of time?
No, at the lower level, one can enter into the Coal India, maybe at the level of 420 or 415.
The next query is for you, Swati. It's on MTAR Tech. Mahesh from Maharashtra is holding 100 shares, bought at a price of 7,540. Should he continue to hold this counter for the next 1 month?
Yes, definitely you can hold on by maintaining a stop of 7,300 rupees for immediate target of 8,400.
Netweb Tech is the other one. Rajesh wants a long-term view. There's a big QIP now announced. Astha, what's your view?
Long-term view is positive, and I think it can touch the level of 4,800 to 4,900. So yes, positive on this counter.
The next query is for you, Swati. It's on Ola Electric. Sunny is holding 15,000 shares, bought at a price of 54. What's the technical outlook here?
Technical outlook is positive for longer term horizon. I'm looking for a target of 55, then 60 levels can be seen. So you can definitely hold on or average it out if you're getting any dips towards 38 levels.
The next one's from Abhiraj from Palakkad. We spoke about HDFC Bank, but Astha, he holds ICICI in his portfolio and wants to add either HDFC or Federal. What's a better pick?
Federal Bank. I would like to go with Federal Bank at this point of time.
The next query is for you, Astha. It's on Kirloskar Brothers. Lavanya from Iluru is holding 300 shares, bought at a price of 2,180. Any targets and should she continue to hold this counter?
Yes, please hold this counter because we are really liking it. Price target can be set at around 2,400.
Sudheen is holding ITC at 303. Now, Swati is asking a 6-month view, but of course the fundamental story has changed because of the taxes. So, is that visible on the charts as well?
Yes, 320, 325 are the likely targets in the 4 to 5 months. So, you can definitely hold on the long positions.
Next one coming in now, and this one's on data patterns, bought at 4264 from Dilip. He wants to add more at this price. Should he do that, Swati?
No, I'm not at the current level. Any dips towards to 4,100 or 4,000 are the attractive levels to take a long positions.
Also on EU Small Finance Bank, Swati, Vijay from Chennai wants to know a short-term target on this counter.
As of now, I'm witnessing some sort of a profit booking in this particular stock. Wait for some more time. Any dips towards 2,000 or 980 levels are the attractive levels to take a add-on position or the fresh positions.
On NBCC, our viewers bought 1,000 shares at 123, and this is Santi. Astha, he's asking if he should continue to hold or book his losses now.
Continue to hold with a price target of 115 to 120.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Swati as well as Astha, as always, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, out of time on this edition of the show. Thanks so much for watching. Stay tuned. A lot more action on the other side.
presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. In this show, we get in very interesting companies and to see whether any alpha can be made or not. And we try to decode the entire picture and also get the management to talk with us. But Before we start talking about the company for today, let me give you some hints. Try to guess the company, what this company I'm talking about. The first hint, it's a listed garment exporter. Also recently a big beneficiary of the FTAs which have been recently concluded. Stock is up 18 times in the last 5 years. It has been a multi-bagger. It's of course in the textile industry. The clients include Ralph Lauren, Target and a lot of global marquee players. And of course, we had mentioned earlier about the FTAs as well. The company in focus, try to understand what this company is. It's of course quite global, as I had spoken about, and that's the second part of the company's name as well. The company in focus is Pearl Global. This is what we are talking about. But why are we calling this company? What do we want to know more? What's something incremental right now to call the company right now? The first question, definitely try to understand the impact of FTAs. Is there more re-rating left for the exporters? Because it takes time to actually judge this company. Also, we'll try to understand the dynamics of India, Vietnam, Bangladesh businesses for the company. They have sourcing in different countries. So what works best? We'll try to decode that business model for you, and also the confusion on tariffs. What happens now? Is it the old tariffs? Is it the new tariffs? Or is there something else at play for these exporters? The company's growth outlook for 2 to 3 years, we have to understand, where does the company stand at the end of FY26. Also, the capex and expansion plans going ahead. Of course, FY26 was a good year, stock run up, but will that momentum continue or not? These are the key questions we will be actually asking the management, and the right time to enter. If you're an entrepreneur, if you want to get into the textile business, exports especially, is it the right time? That's one question also. It's pretty interesting for me to ask. And of course, the last one, the benefits of rising spreads. Yarn and polyester in Q1, does it benefit the company? It's a fully integrated company, or there is an angle to the forward integration. Pallab Banerjee, MD of Pearl Global, will be talking with us in a while. Stay tuned with us and he'll answer all these questions. But what does the company actually do? Company के बारे में बताते हैं. One by one, we'll get you all the layers about Pearl Global. Of course, established in the year 1987, so almost you could say a 40-year history. Company is one of India's largest listed garment exporters, and we get into a bit of depth for this company. That is, the products includes knits, woven, denim, outerwear, activewear and athleisure. So there is a big spectrum of products which the company is offering. 25 manufacturing units they have, but I would like to point out, it's just not only in India, it's spread across Indonesia, Bangladesh, Vietnam, and interestingly in Central America there is a country, Guatemala. That's pretty interesting, especially for the US clients. They have kept this exposure. The company has a total capacity to manufacture 101 million pieces per year. This is the most updated number which we have got from the fourth quarter or the FY26 numbers. Provides end-to-end supply chain solutions. This is value as well as premium retailers. And I'll shortly give you the client list also, but hang on for that. Customers, of course, are located in US, European Union, UK, Japan, Australia and Canada. So a lot of developing nations are a part of their client list. In-house laundry capex, that's what they have announced for FY27. The amount is 250 crore rupees. That's where it's going to help the ROCs come back to that 18 to 20% mark. And remember, amongst the textile companies, this company is having one of the highest return ratios as well. But let's understand the revenue breakup, how things are looking. I've broken it down in US and non-US markets. It's all even Stevens 50-50%. But remember, majority or almost the entire revenue comes from exports only. Of course, in Indian brands, India also there are some global brands which they focus on. But who are the global clients? Let's talk about it. We have Chico's, we have Cole and Muji. This is of course a Japanese brand, but looking at the other key clients also for global, let's focus on the other names as well. There's of course Ralph Lauren, Target. Target is of course in the value retail as well. So these are the bigger brands as well, which are the key global clients for Pearl Global. Interesting, right? Let's move ahead and try to understand the other picture, and that's the geographical revenue split of the product. It's knits. That's around, you could say, almost almost 27%, and the remaining 73% comes in the woven segment. These are the product specific, breakup coming in. But what may work for the company? That's the big question. Analysts remain bullish. Only 6 analysts are tracking the stock. All have given a buy rating. But remember, stock has run up. Strong industry tailwinds are coming in all across. We have already covered that. But in the long term means this might be a structural change. Diversified manufacturing presence. So any problem happens in Bangladesh, they resort to India. Any problem in India, they resort to America for manufacturing. So that is pretty strong. Strong incoming capacities which are coming in, that will aid in the benefits, going ahead for the production, and the long-term vendor agreement for Margi clients. So there isn't much of non-stickiness of a customer. It is a very customer stickiness friendly company. But what may not work? Short-term price escalations. The management has spoken about it, so you can expect that in the first quarter. The execution risk, in case the FTAs which are already announced, is there any delay? And there's of course a procedural risk as well. And also the India-US trade deal, the completion is still an overhang right now. So definitely short term and medium term there is volatility, but yes, long term seems like the story is pretty strong. But let's try to understand with our KYC ratings also, how do we judge a company? Of course, it includes income statement, balance sheet, cash flow and return ratios as well. But there are other parameters जिस पे आपको ध्यान रखना होगा. This of course includes shareholding, street cred, and interestingly I have got for you 5 companies where I'm going to do the valuation check as well. So stay put with us, and I'm going to give you those 5 companies and try to understand whether this is the cheapest stock in a textile space or not. And remember, this is after the rally coming in, the outlook of the industry and the company as a whole. Let's start with income statement to show you what's the strength coming in, and look at the CAGR numbers. It's a pretty decent 15 to 20 plus growth coming in the last 3 years, and that is where a little bit of conviction comes that this has translated into numbers. A good structural up move coming in, almost better than the peers also. And if you look at the numbers, pretty decent. The margins also saw a good jump coming to the double digit. Look at that, 10.3%, and PAT also seeing a good up move coming in. And these are the benefits of a fully integrated player. Largely this has been pretty decent, around 9.3, and whether it touches the 10% and holds, that's the key question to be asked. But as of now, the numbers seem strong, so I'm going to give this a thumbs up. Let's get in the balance sheet and let's see what's happening here. Of course, a little bit of borrowing levels, that has gone up around 687 crores as per FY26. But on the other hand, even the cash bank balances, that has gone up almost 747 crore rupees. That means there is a good balance sheet management also at play. But as of now, I'm going to give this a neutral rating. Cash flows, on the other hand, they seem to have been improved, as compared to what we saw in FY24 and FY25. And then you compare that with FY26 and look at that, especially the conversion numbers, they seem pretty decent. The net cash flows have also increased. This of course includes your operating, investing and financing activities, all 3 put together. And it's pretty decent. Look at that, 437 crores of cash flow from operations coming in, and that is showing strength in overall numbers. So as of now, it's a strong thumbs up when it comes to the overall cash flows. But return ratio is something where we have seen a good momentum coming in. First of all, we get in the ROC numbers. These are the adjusted numbers from the company itself. The story starts from FY22, and that is where it starts going up. And now it's maintaining that 28 to 30% mark as well. A slight dip coming in on the capacity expansion and capital deployment. Let's pull up the ROE numbers also to show you what's the growth looking like. And of course, the ROE numbers, this is largely pretty stable coming in, and we see that 20% plus, these rates are coming in. FY26 also we see a pretty, a slight dip coming in. But net, it's a neutral rating for the return ratios when it comes to Pearl Global. Let's talk about shareholding and explain you how things have panned out. Earlier, there was a very little FI and DI exposure. DI was literally non-existent, just 1% 2 years ago. But after what we have seen in textile, the entire industry, look at that, it's up 19%. Of course, FIs have also slightly trimmed their position, but still at 6%. Promoter stake, of course, coming down because of larger blocks coming in. Public stake is down, it's almost 14%, but look at the DIs, 19% stake they're holding. And that is where a lot of interest has come from the mutual funds, especially as textile as a theme. So it's a strong thumbs up when it comes to the shareholding. Let's talk about the street trade, how much stock returns have come in. And if you are a holder of the stock, congratulations, be it short term, medium term, long term, you have made money in all the cases. Last 5 years, the stock is up 18 times. That's a big number to look at. If you're a long-term investor, you have been rewarded. Congratulations. But medium-term basis also stock has done well. From March low, stock is back almost 47% up, 1 year 33%, and this year itself stock has given 23% returns. So even if you are a medium-term shareholder, you have made money in this counter, and because of that, I'm going to give this a strong thumbs up. And remember, whenever a stock runs up, of course, at times valuations do become a bit questionable. But let's have a look at the peers, how things are setting up. I have taken the 12-month forward P ratio to judge the companies. Vardhaman, Gokul, still you could say Gokuldas Expos is expensive, more than double when it comes to the forward P valuation, and still on a cheaper side, companies comes in at 33 times. But of course, from its historical numbers, it is higher as well because of the stock run up. Compare that with KPR Mills and Kitex Garments, the valuation is pretty expensive. So amongst the peers, the valuation is cheaper for Pearl Global, but nevertheless, from its historical numbers, it is slightly higher. So I'm going to keep this neutral rating when it comes to the overall valuations. But let's talk about the outlook. What are the key factors you should be watching out for? Is of course, the beneficiary of the recently concluded FTAs. This is a long-term, strategy, and the textile positions looks good. The clarity comes from the US tariffs. If that comes in, that becomes another major trigger. But right now, it is a slight overhang. If you are noting that down, the capital commitments range between 200 and 250 crore rupees for FY27. And lastly, they foresee that the energy cost escalation might impact in the first quarter. So there are some hiccups. It's not full rosy picture, and because of that, I have given this a neutral rating for the overall outlook. But come over, let me explain you the entire KYC ratings for Pearl Global and where does it stand. Of course, the numbers, be it income statement, cash flow, all of them doing well. That's why I've given them a strong thumbs up. Return ratios, a little bit of moderation is at play, but nevertheless, it's on the higher side if you compare that with another textile company. Shareholding, DI is favorite. DIs have been lapping up, and on the other hand, street cred, the stock has been a multi-bagger if you are looking at a longer time frame. Valuations and outlook, I presume it's a neutral rating, but the total KYC rating for Pearl Global stands at 6 out of 8. It's largely on the higher side of the average numbers which we give, but let me give you a history about this company. This is a company is coming second time recently in KYC. November 2025, the historical ratings we had given was 5.5 out of 8. Largely a slight increase has come if you compare that after the next 6 months, and it's around 6 out of 8 which we have given for Pearl Global. And of course, the stock has run up also in this setup. But let's talk about the speaker. We are joined in by Pallab Banerjee. He's the MD at Pearl Global, and interesting tidbits about him. He has more than 30 years experience in this apparel segment, out of which almost 20 years have come in from MNC Gap. And that's a big name. Of course, he was the head of India, especially in the sourcing category, and that global supply chain solutions is something which he specializes in. And to put that in perspective, that'll be very interesting to have a chat. But this chat, we'll need to wait because there's a short break. We'll be right back.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Welcome back to KYC, and now we are of course joined in by Pallab Banerjee. He's the MD at Pearl Global. Good afternoon, sir. It's always a pleasure to have you with us. I want to first understand the impact of the FTAs. Is there a re-rating for textile companies at a play right now?
Thank you for having me on your show. Yes, FTA is an important milestone for India as a textile industry and especially the garment industry. And I think it will have a lot of positive effect despite what the normal condition is worldwide at this point of time. But still, I think FTA is definitely a major milestone, and most of these customers who are from these countries like UK and European Union, they definitely would like to have a better presence in India with the FTAs coming into the effect. So that should give both sides interest, like from the players out here. That should inculcate better capacity planning or increasing their capacity. That means more investment, and across various textiles and fabrics, which have been quite limited in India. As a country, we have been very limited to only cotton and cotton-based products so far. So this kind of milestone will open it up for multiple products and much more traction, I think we will see.
And Pallab, what's the dynamic of your India manufacturing, Vietnam and Bangladesh? All three countries are there. How does this dynamics play out for your company?
So Pearl Global has got manufacturing across the globe. Like we have manufacturing units in Bangladesh, Vietnam, Indonesia, India and Guatemala. In terms of what we see, the two countries which have done really well in the apparel sector are Bangladesh and Vietnam. This is after China. So as the China plus one strategy played over the last few years, I would say, what we are seeing is that these are the two countries which has really benefited, and the ecosystem that has got developed in these two countries are very, very strong. So Pearl Global definitely takes that benefit of being present and historically for a long time in both these countries. And that's the advantage that we have seen has come to our business over these last 3-4 years in a good way. Compared to a Vietnam or a Bangladesh, India is also a manufacturing. India and Indonesia, they are very similar. Although the proximity to China for Vietnam and the amount of raw material that is available and the ecosystem that got developed over the years in countries like Vietnam and then eventually in Bangladesh over the last 10 or 12 years we have seen is very dramatically different compared to India. Bangladesh had the advantage of no tariff or no duty for countries like UK, European Union and Canada. That really helped them to develop the industry very competitively. And of course, their costs were low. So both these things helped them to build up a very massive industry. And Pearl being there, we have seen and we have taken the benefits and we have got very efficient factories running in both these countries of Bangladesh and Vietnam.
Right, Pallab, but there's always that question on the clarity of tariffs. You know, what is that situation right now for the industry right now? Because there is still, it seems like there is an overhang.
So from US point of view, yes, there is a lot of, I would say, changing dynamics that we are seeing over the last 1 year. So the initially under the emergency power, the IEEPA, I think President Trump had implemented a reciprocal tariff. That has been shot down by the Supreme Court there. So currently there is a section 122, which is applicable till 24th of July. And that is a 10% flat tariff for all the countries which are exporting into US. And this particular tariff, this 10% is levied on top of the MFN duties that were prevalent. MFN duties were depending on which HSN code, every HSN code had a very different duty structure. And it used to vary for linen kind of products. It used to be in the less than 10%. Cotton products were between 10 and 20, I would say. And the synthetic products were more than 20%. So that's the kind of classification that we had for MFN duty. And on top of it, there's a section 122, which is currently prevalent till 24th of July. Now, after this, Trump administration is doing some kind of investigation on all these countries. If these countries are importing or using the benefit of countries which are using forced labor and all, and they want to penalize these countries. So that penalty can be as high as 15%. So that's something India is also undergoing that investigation as compared to many other countries like Bangladesh and Indonesia. In fact, all the countries, exporting countries into US are at this point of time undergoing that investigation. So that thing is the open thing that we have still. So what we hear from the grapevine is that if they put India under some kind of penalty because of this importing goods from China or any other country where there is a forced labor, so that can give to an additional 12.5% tariff. But once this bilateral trade agreement will be signed, which India and US, both the countries have worked towards getting into an 18%, what we heard from our ministers. So I think that's something would be the final one. And technically speaking, like this 18%, once it is comes into effect, that should take care of the MFN. So the MFN should not be there, it should get replaced. But again, with Trump administration, things have been so volatile for the last 1 year. We don't know what will be the final outcome.
Like from the industry, Pallab, what's the growth outlook looking like for the next 2 to 3 years for Pearl Global?
So Pearl Global, we have been planning a growth. We have committed to our stakeholders that we are growing at the rate of anywhere between 12 to 15% on a CAGR basis. That means even the tough years like last year, we did grow significantly, and even also before, we have seen that we have grown at least about 9-10%. But in a good year, our growth has been much better. So CAGR wise, we have committed 12 to 14%, 12 to 15%, and by 2028, our milestone is to cross the 6,000 crore milestone that we want to cross as a top line. So I think we are significantly on, in terms of very solidly, I would say, on track on that plan.
And in short, Pallav, what will be the capex and the expansion plans ahead? I know there's a 250 crore kind of allotment for FY27.
So we have been improving our capacity. So this year, on 31st of March, we declared that we have already crossed 100 million pieces capacity. So with that means like the 6,000 crore is possible at this point of time with our existing capacity. But current financial year, which we're undergoing, we are further adding to it. So by 2028, we are still expecting to have a capacity in the range of 120 million pieces plus annually. And we should be able to do more than 6,000 crore very comfortably.
Well, right time to enter the textile exports, is it that for an entrepreneur? This is a pretty interesting take coming in from a lot of viewers. They wanted to ask, is the right time?
I think textile is interesting, and I would say that all the time is good because, all human beings, we always need clothes. Although, in terms of exports and the kind of sector that the export market to the developed countries, so there I think there are some barriers, like the understanding of the laws, the regulations, the tariff. Those are the things I think are a kind of barrier, and also the compliance standards, which has been also involving the kind of sustainability that they want. So those are things like somebody has to really take care of. But purely if you're making a textile or garments and catering to even to domestic market, I think it's always a good time.
Right. Thanks a lot, Pallav, for giving your views on the company and the industry perspective. It's always a pleasure to have you. So pretty interesting story of Pearl Global and how the India's textile industry is faring. And for these interesting stories, keep watching KYC and stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति STTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable.
Lackluster day of trade today on the Lal Street as weekly expiry and global cues weigh Nifty, which really trades near 24,000 levels. Broader markets mirror the benchmarks, auto and real estate gain, while IT sulks and metals lose shine. HDFC Bank in focus after the key management appointments. Former IAS officer Rajiv Kumar appointed as part-time chairman, while Puneet Sharma of Axis Bank designated as CFO from September 1st. Adani Port strikes a big-ticket deal with Mundi, a unit of Mediterranean Shipping Company Group, to offload a 49% stake in the Vizag port, also for $1.4 billion. US President Donald Trump says talks with Iran to take place in Doha, adding that they would focus on stripping Iran of its nuclear capabilities. However, Iranian Foreign Ministry says that the Iran delegation is only visiting Qatar to advance the efforts for release of frozen assets. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and yes, markets are tentative yet again today. Nifty 50 flirting with that 24,000 level and finding some resistance in really staying afloat above that level. And that's what you see, a listless kind of a directionless kind of a trading session when it comes to Nifty 50. But let's see what's really working behind the scenes. Well, if you really take a look at the sectoral play, IT remains the top dragger once again. So the momentum and the bearishness around IT sector is the one which is a constant in the market. While on the upper side, it's real estate, defense, as well as auto, which is really doing well today. When we really take a look at the bank Nifty, that is trading as Nifty 50 is. But when we look at the broader markets, that's where the action really lies, because mid-cap universe is the one which is gaining, and it is far outpacing the key indices today. 0.5% gain when it comes to the mid-cap universe. When we take a look at stock-specific action, when we talk about the big boys in Nifty 50, and it's some of the consumption companies like Maruti, Titan, even Bajaj Finance, Bharti Airtel, along with Adani Ports. These are the ones which are the top gainers. But on the drag is the IT sector and some of the IT heavyweights which are really dragging down the overall market. Infosys, TCS, and even from the banking pack, it's ICICI Bank which is a big drag. But the story and the headline for the market is that while the frontline indices really remain listless at the current moment, it is the broader market which is seeing some action, and there is value picking that is being seen. All right, let's take it straight across to Siddharth Vora, who's the head of Quant Investment Strategies and Fund Managers at PL Asset Management. Good to have you, Siddharth. Always a pleasure chatting with you on NDTV Profit. What do you make of the kind of directionless and, of course, loaded with a lot of cues, global cues and expiry that the market is really dealing with today?
I think more than today, we've been really constructive in this phase of the market. I think it's a fantastic phase to accumulate, stocks in India. I think three major headwinds that affected the Indian markets in the last, couple of quarters, maybe crude, the first one, the whole AI trade, and the rupee depreciation. I think all these three headwinds that were really bothering Indian markets are gradually going to become tailwinds for India. Falling crude, stabilizing crude, the whole AI trade unwind globally, which is a high probability thing that can happen. And foreigners will start looking at the depreciated rupee as a source of return going ahead. So I think structurally it's looking very good, and this is a great phase to accumulate. We are very bullish, and small and mid caps definitely the place to be rather than large caps.
So while you said it's a good time to accumulate, which are the pockets which you will look to accumulate at this particular time in the market?
So over the last 1 month, we made quite a few big changes. Last 40-45 days in the portfolio, we completely pretty much exited metals as a big part of the portfolio, down from roughly 22% to 3-4% now. We've also exited healthcare, like pharmaceuticals, from the portfolio, and we've reallocated to industrials, automobiles, financials, and energy and utilities. So we've increased the beta of the portfolio. We've reduced some of the larger cap allocation and moved it to small and mid once again after roughly 12 to 13 months. So yeah, we're making the portfolio a bit more aggressive as we speak.
Right. And what are the no-go areas, Siddharth? And how much will you wait for the earnings momentum and also the, monsoon factors to really play out? How will it differentiate and also create new themes for investing or not investing?
So I think earnings momentum, even the last quarter, the numbers were very, very healthy, I would say. There was no concern whatsoever. Small and mid caps delivered better numbers than the larger caps. Everybody has already started discounting, a quarter or two of pain due to crude, due to supply chain issues, due to some margin contraction as well. But I think beyond that, the markets are looking good, earnings are looking good, even valuations are looking very, very not so, expensive or scary. And small and mid caps are really trading at a good risk-adjusted valuation as well. So from a growth value and return dispersion perspective, I think small and mid cap is very well positioned for now.
All right. And when we look at the expectations building, now we are going to enter into the earnings cycle. Do you think that the quietness that we are seeing, especially in the large caps, is also in anticipation of the earnings season that we are entering in? And what is the analysis as well as the estimate of the upcoming earnings? Because we have seen one full quarter of the war impact already. Now that is easing, the pressure is easing, but that particular quarter still has seen that pressure points and crude prices as well as inflation to deal with.
So I think the upcoming quarter will still, the numbers will see bulk of the effect in terms of, input cost inflation, rising the crude impact, margin compression, earnings compression, all of that will be played out in this quarter. So I think the street has pretty much accounted for and discounted for a slightly slower quarter without, making that the trend going ahead and extrapolating that too much into the future. So I think one quarter a bit soft in sectors which are, very input cost dependent. I think that has already been discounted. We should start looking ahead already. And things are looking better when you, go 3 or 4 quarters ahead.
All right, Siddharth Vora, always a pleasure chatting with you. And of course, next earnings and monsoon will be on our radar for the overall stock movement. And moving on to a big development when it comes to private banks, and there is a lot of top brass changes. That is really the theme at this particular time. HDFC Bank appointed Rajiv Kumar, a former IAS officer and ex-Chief Election Commissioner of India, as its part-time non-executive chairman, ending a month-long search for a permanent head following the abrupt exit, remember, of Atanu Chakrabarti in March. But that's not all. There's a lot of musical chairs really amidst this management reshuffle that is really taking place. And Sharad is here to detail all of that. Tell us, Sharad.
Well, it's pretty interesting, and it was very, very busy, especially post-market hours tomorrow at almost, you could say, at 4:22 p.m. There was a very important announcement from Axis Bank where Puneet Sharma had resigned as CEO, and then from Bandhan Bank also another announcement comes in, and that's at 5:49 p.m. where Rajiv Mantri has resigned as the CFO, and HDFC Bank again announces at 10:32 p.m. that Puneet Sharma has been appointed as the CFO designate. Now let's get into the details of how much changes are happening in this BFSI space. Especially for HDFC Bank, there is a finance team, leadership change which is happening, and we already mentioned about Puneet Sharma. He will be taking over as CFO from 1st December. Right now he's a designate. If you look at his street cred, 26 years of experience he is having, and also Citibank, BCG, Tata Capital, that's where he's having one of the largest, you could say, his street cred coming in. Now, of course, this announcement comes after the legal review is done by Atanu Chakravarti. And also, I'd like to give you one more important pointer. Bhavin Lakpatwala, he was expected to be the front runner for this post, but then he joined RBL Bank. And outgoing CFO Srinivasan Vaidyanathan will be retiring this year's end. But ex-finance secretary Rajiv Mantri also becomes the part-time chairman. He comes in the space of Keki Mistry. He's a 1984 ex-IAS officer, and also he's widely regarded as someone who has revitalized the Indian BFSI space during the stress times of 2017-18, and he retired as Finance Secretary of India in the year 2020, February month, and post-retirement also he served as a chairman of Public Enterprises Selection Board. For Axis Bank, of course, Puneet Sharma resigned as CFO for the last 6 years, and the current status for the bank right now, they don't have a CFO. And for Bandhan Bank, if I want to give in a perspective, CFO Rajiv Mantri has resigned and the new CFO status is still pending. So a lot of things are at stake in this BFSI space, and a lot of CFO churn is happening, and now that's what we can see on the musical chairs.
That's right. A lot of action there at the top brass changes when it comes to the private sector banks, also gearing up for the momentum now building in. Thanks, Sharad, for all the details. Now, Delhi has unveiled, remember, an aggressive new electric vehicle policy that really phases in mandatory electric vehicle adoption across the key segments over the next few years. There's a big push coming in for the EV space from the government, and Puneet is here with the focus on the companies likely to gain from the same. Puneet, tell us what is the impact of this policy?
Well, thank you for that. Well, obviously it's a 15,000 crore scheme unveiled by the company. Out of that, 1,500 crores will be purchase incentives which will be given on two-wheelers, three-wheelers, as well as on N1 trucks, which are below 3.5 tons. So you get a benefit across that if you purchase that. Scrappage incentives are separate. You also get incentives for charging infrastructure setup as well. So those are all the key important factors. When you look at the company specifically for three-wheelers, from 1st January 2027, you will be only eligible in Delhi to purchase and register electric three-wheelers. So no longer will the ICE three-wheelers be allowed and the CNG three-wheelers be allowed to be registered. For the two-wheeler side, only electric ones will be allowed to register from 1st April 2028, and all of those incentives will be available for both buyers as well as to the companies who are setting up charging infrastructure as well for the same. Now, when you look at the biggest beneficiaries, there are some legacy companies like TVS Motors. They already have a 17% market share on the EV side of things in Delhi, and hence expected that benefit to continue. Others include Bajaj Auto as well as Hero MotoCorp. Both have a 12% market share each in Delhi, so we'll be expanding the product portfolio from there. While Ether Energy and Ola Electric, both stocks doing well today, are the other gainers with a 9 and 4% respectively share between the two of those players as well. You will see and you are already seeing an impact on Eicher Motors as well, because for Delhi specifically, 3% of all volumes across the country go into Delhi for Eicher Motors, and they currently have launched the Flying Flea. It's still in a very nascent stage, so it doesn't have a readily product available at this point of time in the whole region. Very important to see what happens with Eicher Motors at this point of time as well, but you have to also watch out for how the other states react to such news flows, because if other states also follow follow through on these steps, you will have to look at a key factor, and you have to realize that this won't be an easy step. There will be some pushback coming in from the OEM makers, because currently 2 in 3 two-wheelers sold in Delhi are right now ICE or CNG. So you have to watch out for how the shape up of this industry gets through, but definitely seeing an impact on Eicher Motors today.
All right. Thank you so much, Puneet, for all those details and breaking it down. And adding to what Puneet said, of course, Eicher Motors has seen a downtick, and it's also seen this particular news has been disruptive in the way that both the Ola Electric as well as Ather Energy from the electric vehicle space are the ones which really flying in trade today. And that's the big impact really coming in. So the entire segment of the auto space now cannot be painted with the same brush. This has been disruptive, and it will put the different companies with different formats of vehicles in different pockets and disruption. Let's get chatting with Dhruv Joshi, who's the research analyst at Mirae Asset Share Khan, to talk more on this. Dhruv, my first question, with this disruptive policy, of course, long haul, but the intent of the government is very clear on the push towards EV. How will you segmentalize the different formats and companies offering different products when it comes to the auto sector basis this disruption?
Yeah, thank you for having me. So if we start to look at the entire EV segment, as per se, the entire market, it's still a very nascent stage. And the policy here that's been announced is kind of a very major push from the government. And obviously, you've rightly said that it's still a long haul. It's a lot more push that is, again, required from the government's end as well. If we are to look at how the entire policy is brought down, it's probably to starting to curb with pollution measures. So that's one reasoning from the government, wherein two-wheelers and three-wheelers will be the first primary targets. And then moving on to four-wheelers, which are capped at the 30 lakh pricing, which then brings the market. So again, four-wheelers of the entire Indian market is again just 6 to 7% of the entire market. And coming to Delhi, again, that's even smaller. So a lot more push is required from the government's end. On the OEMs front, probably, we see Tata Motors that has its entire fleet that is already available, roughly its entire fleet already available on the EV front. Whereas if you look at the entire two-wheeler space, that is the TVS, Bajaj, we've started to have an inch up towards the electric vehicle space as well. Ather and Ola also doing pretty much good there, and the overall market right now stands at around 9 to 10% of the entire market. So this EV policy could be used as a pilot in a sense for other states as well as for the country. We saw a similar kind of a strategy followed in China, where the market currently now stands, the EV market currently now stands at almost at 2/3. So we could follow in some footsteps, but a major push. So China put in about $28 to $30 billion kind of a push. So a similar kind of a push would be required from the Indian government side.
Right. So Dhruv, many aspects that you touched upon, and of course the China experience lessons from that. That is one precedent that we can look out for, and whether other states also move towards that in their sustainability and green thrust also needs to be seen. But my question is a little more specific in the near term. When it comes to the larger play by the larger auto sector, and especially Eicher Motors, how do you see the next few years of outlook when it comes to the value creation for the shareholders, given this disruption at the current moment, which will go on and the process will really pick momentum in the later years?
So if we are to look at the products that the OEM makers are currently making, so a lot more push from OEMs also will be required, wherein, we tend to look at just few products from few companies. That's what's actually available in the market. But going forward, we need a lot more products to have this kind of a policy to actually take shape and customers actually grabbing on to this opportunity. Also, what will need to be required from the OEMs front is also to address the range anxiety that actually exists in the market. So if you look at two-wheeler spaces, it's a little growing right now with 100 to 150 kind of a range, which then again leaves the customers with options of a few vehicles. The range anxiety, the range that needs to be improved, will give the customers and a lot more options, which then try to absorb more vehicles and more into this policy. Coming to Royal Enfield, again, if Eicher Motors is in the question right now, Flying Fury is one of the models that they've announced, and they've also said that probably they will be looking into further pushing into the EV policy, or at least trying to grab some parts of it. What is under development is still under wraps, and if it is on the adding to the customers' shareholders value unlocking, at the moment the entire portfolio of Royal Enfield is doing good. Volumes are pretty solid for the company, also in the export markets. So at the moment, nothing to worry as such, but definitely a concern where then you would not be having a pie of the greater things.
Right. So does this particular policy also give a chance to downgrade any of the already existing companies who may get disrupted, Dhruv?
Very, very early to say any downgrades as of now. Yeah, but we will definitely have a look at it once we actually see numbers flowing.
Right. And Dhruv, when we talk about the already existing large players in the auto space, who do you think in pecking order will be the best place to take this particular opportunity, or who is moving faster? And how will the pecking order change because of the EV push by the governments? It's only Delhi right now, but with the EV policy, how do you give that outlook in the overall portfolio of the auto space?
So I think if you look at the overall auto space, if you were to look at the two-wheelers and three-wheelers combined, I think TVS and Bajaj both have equivalently good products already placed into the market. Hyundai is also tying up with TVS to manufacture its three-wheelers again. It's trying to get into that space again. So everyone is trying in their absolute best to get into a bit of that bit of that pie. But at the moment, it looks like TVS with its iQ and the Orbiter, they've already made good enough inroads into the EV space, along with Bajaj Auto again. That again puts it at Bajaj and Hero together put about 12% of the market share in Delhi at the moment right now. So in the two-wheeler space, you could look at those names. For the passenger vehicle side, you would actually look at Mahindra as well as Tata Motors for that fact. Tata has already got that fleet, its entire fleet put in that.
That's right. The already existing players have really taken the competition and the challenge higher. Thank you so much, Dhruv. Many takeaways coming in from what you said. Thank you so much for joining in. Now, moving on to an important story. Sources indicate that Dixon-Vivo joint venture is now in the final stages, and Rishabh, my colleague, is getting all the details on this. Rishabh.
Absolutely. What we're picking up from official sources is the fact that the Dixon-Vivo joint venture that has been in the works for quite a while, that is finally moving towards the final approval. What we're told is that the government is in the final stages of granting approval to this joint venture. Remember, there have been a lot of aberrations and delays up until this point in time. You've had a lot of issues with Vivo being under the scanner for a lot of issues, of course, it being a Chinese company. All of these have played a factor in these in the entire developments. And what we're finally picking up is that the JV is inching closer to a final nod. Just about a couple of weeks back, what we had learned was that the government has the interministerial panel that was set up had cleared this joint venture. So what we are seeing is that this is moving towards the final approval. What we're also picking up this is, of course, this is going to be a massive deal for Dixon. They will be making about 20 to 22 million units annually for Vivo. So this will be extremely value accretive for Dixon once the approvals are in place for this joint venture. So that's what we're picking up. This joint venture moving closer and closer to fruition very, very soon.
important bit of details there coming in. Thank you so much for joining in with that important bit of news development. And there you go, Dixon Tech, 1.7% up in trade at the current moment. Large part of that an impact of NDTV Profit story. All right, moving on amid pause to Iran war as well as reopening of Hormuz, falling crude and higher fuel margins could really help the OMCs recover their losses in around 7 months, provided the current market conditions really persist. In fact, Somit is here with the details on how fast can the OMCs really recoup their losses that we have seen because of the war uncertainties. Tell us, Somit.
Well, if you look at the Brent crude, it is trading near around the $72, $73 per barrel. Now, this is largely because oil has started to flow through the Strait of Hormuz, and oil flow is actually around the normalized level of 20 million barrels per day. Now, this is following the US-Iran deal. Now, apart from this, there are other various factors also which have been actually aiding the oil marketing companies. Lower crude prices is one, but apart from that, it's lower excise duty and higher retail fuel prices, because oil marketing companies had taken a price hike of around 7.5 rupees per litre, and all these three factors are now actually aiding the oil marketing margins to oil marketing companies to earn higher marketing margins at this moment. Now, if I assume that the landed cost of crude is around $77 per barrel in India, then the blended fuel gross marketing margin stands at around 23.1 rupees per litre for oil marketing companies. That is what they are earning by selling every litre of petrol and diesel, as compared to the historical average of close to 12.4 rupees per litre. So a massive earnings is what oil marketing companies seeing at this point of time. Now, if you look at India's fuel consumption, the total fuel consumed in India stands at close to 463 million litres per day. Oil marketing companies have a 90% market share, which means that out of this 463 million litres, they are selling close to 417 litres per day in their pumps. And in the past, if you look at, oil marketing companies had incurred a loss of close to 90,000 crore rupees, and this was over the last 3 months, that is April, May, and March, April, May, and part of June as well. So how much time will they actually need to recoup the loss of around 90,000 crore rupees that they have seen in petrol, diesel, and LPG? Now, given the fact that they're earning around 10.7 rupees per litre or higher gross marketing margin, if that continues, then oil marketing companies are earning an extra of close to 446 crore rupees per day. And at this rate, oil marketing companies would require nearly 7 months to recoup the 90,000 crore losses that they had incurred in the month of March, April, May, and in part month of June. But there are some key risks that is there to this 7-month assumption, that calculation that we have come to. The first biggest risk is crude price moves higher. The second one is INR depreciates further. The third, and this is the most probable risk, is government rolling back the excise duty cut. Now, government had cut excise duty by around 10 rupees per litre, which is also aiding the oil marketing companies to earn higher margins. So if government rolls back that, then the margin earned by the oil marketing companies could be on the lower side. And the fourth risk is if oil marketing companies reverse the fuel price hike that they had taken during that period. So these are the biggest risk that the oil marketing companies are facing at this point of time.
All right, quite an exhaustive analysis there. Thanks, Somit. Completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the Profit Market Pit. Good afternoon, Sharad. An interesting day of trade in terms of the way the week has started. What are the cues that you're picking up?
Good afternoon, Hiral, and of course, remember today the most important trigger is the Nifty monthly expiry. But largely the markets are quite flat, a little bit of gap down opening, but after that a very narrow range when it comes to Nifty. And let's pull up Nifty Bank also to show you how the markets have moved. And over here also we see largely both of these indices are flat right now. Of course, looking at the key triggers, largely we focus on the flatlining of these benchmark indices which we have seen, but the rollover numbers are very much important. If you could just show the factors, where the momentum is happening. Nifty Bank rollover, that comes in almost, you could say, around 68%. And let's get in the Nifty rollover also. These are the monthly end rollovers to focus at. That's coming in at almost 72%. Of course, these numbers are going to change in a couple of hours, but nevertheless, this is something to track. Apart from this also, if you look at it, the other key factors to watch out for today would be a strong buying in the EV themes. On the Delhi EV policy, we saw Ather, Ola Electric doing well. Maruti and Realty. Maruti on the back of course, broking reports, and Nifty IT index. Look at that. That's down 40% from its lifetime high levels. More sell-off continuing. And today Nifty IT index is down 2%. Rupee remains in a tight range, and so does the other global assets. Why? It's a very simple reason for that. Today is an important meet with US as well as Iran in Qatar as well, and that is why most of the assets are in a wait and watch. But of course the technical setup still looks promising on the positive side. But the stocks which should be in your radar with the highest Nifty rollovers on the monthly basis are these three stocks, most of them above 95% rollovers coming in from Page Industries, Vishal Mega Mart and TVS Motors. So these are the stocks which should be there in your radar. But net we can say largely on the indices nothing is happening. Stock specific and sector specific action is definitely there.
It's stock specific and sector specific, and the kind of opening gains that we saw, that's what have been given up as well by the markets in today's session. Thank you, Sharad, for that. In fact, in terms of the watch list, Maruti, that's an interesting one. You have Jefferies, which has upgraded the stock to a buy. You have Ola, Ather, Eicher, all of them that are in focus on the back of the Delhi EV policy, and they are seeing an impact as well. Axis, HDFC Bank, Bandhan Bank, all of them have seen that CFO churn, a musical chairs that the CFOs have been playing amongst themselves with regards to these banks, and that's the reason why these counters are in focus. Tata Consumers, 2 consecutive sessions of downtake is what we're seeing on this counter. Arvind has hit an all-time high, and that stock is in focus. Canfin Homes has reversed yesterday's fall. In fact, all your housing finance companies are also in focus in today's session. No major news, but all of them buzzing in trade. MK has maintained a buy in terms of Genius Power. That stock is buzzing. Kirloskar Oil, 3-day losing streak is what you're seeing on this one. Adani Ports has signed a definitive agreement with Mundi, and this is a $1.4 billion investment that Adani Ports will be receiving for a 49% stake, and this is for one of the ports. Yes Bank is in focus on the back of the 60,000 crore fundraise, and this is going to be a combination via debt as well as equity, so watch out for Yes Bank in trade as well. IT counters in focus, though you have a TCS and Infosys, they've actually hit multi-year lows. RR Kabel has snapped a 11-day gaining streak. That stock is trading under pressure. So some bit of profit booking coming in with regards to RR Kabel as well. On the back of order wins, names like KC International, SJVN and GUVNL are in focus, along with, SW Solar are in focus. Saxoft is interesting. That stock is up 50% in the last 3 trading sessions. In fact, more details in the show. Aurobindo Pharma gaining in trade as well. They've completed the acquisition of Lanet. India Bulls Housing, a 2-day gaining streak is what we're seeing on this one. OMCs also are in focus because now crude is hovering around that $72 to $73 per barrel mark, and that is something which becomes beneficial when you talk about the marketing margins of all your OMCs in trade. Shilpa Medicare, that stock saw an interesting spike in trade, and this is on the back of the tie-up with Orion for a cancer drug. So that's with regards to where the watch list goes. But Sharad, over to you to take the rapid fire as well.
Thanks a lot, Hiral, for that. Now, joining us, we are having Somil Mehta with us. Good afternoon, Somil. Always a pleasure to have you with us at NDTV Profit. We start a rapid fire round, and we have been talking about a lot of banks, especially with the churn coming in the CFO level. We have stocks such as HDFC Bank, Axis Bank, Bandhan Bank, all are in the news. Is there any risk-reward ratio favorable for these banks? It seems like the industry is going through a change, and when an upcycle starts, maybe the management should be there at the right place. How do you look at these companies, and out of these 3 companies, where is the risk-reward ratio much better here?
Good afternoon to everyone. See, banking definitely looks great to me. The best risk-reward ratio at this point of time would be in HDFC Bank. HDFC Bank has taken support at very crucial levels, extremely crucial levels where multiple quarters, trend line has taken support. The stock has taken support from that trend line and started bouncing back, high top, high bottom formation. So HDFC Bank definitely a good time to nibble in here. For investors, of course, I would not suggest short-term trading, but yes, good time for investors.
Right, next stock, Arvind, your view on that. Textiles have been doing well, and now seems like a good volume pickup in most of the counters. Good time to stay invested with this, or partially book some profits.
If you're a trader, definitely book some profits. Great run in the last probably 3 months, from 300 to 600 was a great run. I'll be expecting more on upside, but for traders, definitely book profit.
The concern is in the IT pack, TCS, Infosys, all of them hitting their multi-year low levels. Seems like the selling is not getting over, or there's no exhaustion happening. What does the chart suggest? And is there any short position at play which can be made, at least in the next series?
See, I would not suggest to go short now, because it has given us a very good rally on the downside. Okay, but there are patterns which are being made right now in Wipro, or if you see HCL Tech, there's an ending diagonal pattern formation is going on right now. So I would not go short. Probably if it breaks the ending diagonal pattern on the upside, I'll probably go and buy for short term, not in the medium term, not in the long term. But yes, I'll wait for a breakout.
Somil, RR Kabel, after pressure, little bit of buying is happening here. Do you think the strength is there, or will it be under consolidation only right now?
See, we probably I'll be expecting a weekly negative close here. So my view would be negative in the very short term, medium term, long term, still positive on the stock. I'll be expecting this stock to go down till 2200, 2250 levels. So wait for a support level, or wait for a basing out after this correction is over.
Right, and Somil, your views on Aurobindo Pharma. Largely we see there has been a little bit of volatility in this counter, but do you think on a positional basis, is there any alpha to be made here?
See, pharma stocks are doing great. Auro Pharma has been in a great rally, and I'll be expecting this stock to continue. The basing out is around 1400 levels, and I'll not expect the stock to go below 1400. Maybe there would be some correction a little bit, but overall the view would be positive in all time frames.
Saumil, your views on Samman Capital, where does the stock stand?
Samman Capital, positive. I'll be positive on this stock. It has given us a breakout. 165 and 160, two levels in the medium term outlook, and I'll be expecting this stock to continue the uptrend.
All right, that's the end of the rapid fire round. Over to you, Hiral, for the Google trending stocks.
Okay, thank you so much for that. It's very interesting to see just one stock which is trending on Google. That is REC. If you pull up that one on the screens, and you'll see that's the only one that appears. And there you go. That stock is though marginally down, around 0.1%. Saumil, any view when it comes to REC? Because currently, with the kind of power demand that you're seeing in the country as well, it automatically translates into growth for a PFC REC as well in terms of the funding side of it. How are you, what are charts indicating?
The power sector definitely a good space to be in, but there are some stocks which are not performing well, so I will avoid them. Like REC has multiple resistance around 391. Once it closes above 391, I think I will start looking at it. But at this point of time, REC I will definitely avoid. But in the power sector, there are so many stocks which are doing really well, which is Adani Power is there, CG Power. You can actually add NTPC as well. So the PFC as well. PFC is doing good as well. But CG Power and Adani Power, they both are really good stocks to be in.
CG Power and Adani Power, both these counters. Let's just pull up that one on the screens as well and see what's happening on both these names. But thank you, Saumil, for that. Adani Power as well as the CG Power. Adani Power trading slightly under pressure today. CG Power seeing gains of around 0.3%. Now, Maruti is another one that is in focus. You have Jefferies, which has gone ahead and upgraded Maruti to a buy from a hold. The stock at the day's highest levels, 4.5% up move coming in there. In fact, they have a target price of 16,500. Currently, the stock is trading at levels of around 14,000. They've increased their target price from a 13,800 to a 16,500. What they've said is that it's the easing macro concerns that are making it positive. Secondly, India's PV demand has remained absolutely strong in the first half of calendar year 2026. Your Middle East calm, the drop in terms of crude prices, and the softer metal prices is what is a key positive, because your margin risks are also reduced. They've upgraded their FY27 and 29 EPS by around 2 to 4%, and they're expecting almost 16% EPS CAGR. That's compounded average annual growth rate over FY26 to 29, and the PE at 24 times in terms of FY27, seeming to be reasonable versus its historic as well. So that's with regards to where Maruti goes. In fact, let's get in Gaurang Shah, Senior Vice President at Geojit Investments as well. Gaurang, welcome to the show, and always a pleasure to speak to you.
Thank you so much, Hiral. Great speaking with you as well.
Yes, Gaurang, my question to you is with regards to where a Maruti goes. An upgrade in terms of target price coming in from a Jefferies, the stock at the day's highest levels. According to you, where valuations sit, the opportunity is still ripe?
Well, Viral, good afternoon to you and to all your viewers. A small disclosure before I go any further. All recommendations that I'll be sharing with you on your show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we don't have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might hold their investment interest. We've been positive on Maruti for a very long time, Hiral, now. Yes, there was a little bit of apprehension in terms of their late venture into the EV segment, but nevertheless, better late than never, Hiral, as they say it. One of the largest passenger vehicle manufacturing companies in India. Export markets have shown robust sign of growth, not only for Maruti, but for other PV segment auto manufacturing companies as well. Traction in terms of positivity of more launches in the EV category is going to open up a lot of opportunity. And one more thing, Hiral, that I personally feel is going to work well for the entire auto sector is the signing of free trade agreement with 8+ nations that Indian government has undertaken. this will open up a huge opportunity for exports, which is already doing quite well. So we are positive on Maruti from long-term basis on the fundamental.
Right. So, of course, the positive, view coming in for Maruti Suzuki, and of course on the back of broking upgrades as well. But another stock doing well, and actually the entire, mid-cap, small-cap Pharma has been doing well over the last 1 week or so, is, of course, Shilpa Medicare. Interesting news flow coming in. Stock is also doing well. What's the reason for it? We have Varsha for that. Varsha, what's the important tie-up here for Shilpa Medicare?
Well, the subsidiary company has tied up with Orion. This is for manufacturing of biosimilar of a cancer drug, which is in Europe. The agreements covers nivolumab biosimilar, which is used to treat multiple cancers. This is one of the world's biggest cancer drug, which has recorded almost $4.1 billion of sales in 2025, and opportunity opens up as original drug nears loss of exclusivity in Europe. Now, what does each company will do? Orion will have exclusive rights to register and sell the product in Europe, while Shilpa will develop the biosimilar, will be exclusive manufacturer and supplier for Europe. Also, Shilpa will also be eligible for development of milestone payments and regulatory milestone payments. Now, this takes Shilpa into a fast-growing oncology segment, and which strengthens presence in the European market as well. So, and this is not the first time that these two companies have done the partnership. Recently, also they have done the similar kind of partnership. So overall, a big benefit coming in for Shilpa, and hence you're seeing the stock is up almost 4 to 5% in trade.
Thanks a lot, Varsha, for the detailed analysis. Gaurang sir, hi, Sharad here. Varsha was talking about Shilpa Medicare and why the stock has rallied. Your view on Shilpa Medicare, and also in the mid-cap, small-cap pharma space, a lot of positive news flow developments are happening here now.
Hi Sharad, good afternoon to you as well. So I think the entire biosimilar, API, CDMO and generics, there's a whole lot of opportunity for the Indian pharmaceutical companies who are working in this field in the pharma. And along with that, there is a lot of export opportunity as well. Now, this particular news, as Varsha was elaborating the details, will open up a lot of opportunity. It remains to be seen how the ground level work is done and how the company gets benefited because of this particular advantage that this company's got. It is a strong company amongst the small to mid-cap category, Shilpa Medi. I won't go into specific, Sharad, because we don't have coverage on Shilpa Medi now, but yes, this opportunity will definitely have a strong positive impact on the earnings and profitability. Other names in the pharma sector amongst the small and mid-cap, if you will, we are positive on Gland Pharma, we are positive on Natco Pharma, Aurobindo Pharma. Granules India is something that we are positive on. And my sense is, like I mentioned earlier, Sharad, the entire CDMO, biosimilar, generics, APIs is a huge opportunity for the Indian pharma companies.
Opportunity for biosimilars for Indian players. Interesting. Another stock in focus is Adani Ports. An interesting announcement has come in, and joining us back, we are having Varsha. Varsha, what's the announcement here?
Well, Adani Ports have signed, an agreement, share purchase and subscription agreement with Mundi. Now, Adani Port will sell 49% stake in Viranium Port to MSC Group terminal arm, which is TIL. Now, the deal values Viranium Port at around $2.85 billion. Now, Mundi is actually a subsidiary of TIL, which is a terminal arm of MSC. Now, the transaction, TIL will acquire 49% in Adani Viranium Port. Adani Port will actually retain 51% ownership. That's the majority board control, and will also be the Adani Viranium Port will continue to be consolidated as an Adani Port subsidiary. Now, why this matters? Because this marks largest foreign private investment in Indian port infrastructure, deepens company's partnership with MSC Group, and of course the benefits to Adani Ports will be better cargo visibility, faster ramp up of Viranium volumes, higher Bangladesh cargo share, and of course stronger East Africa trade presence as well. Now, why Viranium is strategic? One is located just 10 nautical miles from east-west shipping route, can handle ultra large container vessels. Lastly, on the financial snapshot of Adani Viranium Port, FY26 income stand at around 843 odd crore with net worth of around 2,813 crore.
Thanks a lot, Varsha, for that maths. And Gaurang sir, just wanted to take your view on Adani Ports also. And of course, there is a standard disclaimer also on that.
So again, the entire port logistics sector, Sharad, looks really enterprising and interesting. Government's long-thought policy of Sagar Mala Pariyojana, specifically with the kind of developments that have happened down south and the ports that have been opened up in the last 6 months to 1 year time, and along with that, Sharad, more ports getting opened up. Needless to say that Adani Port happens to be one of the largest cargo and container handling company. And with this kind of facilities coming up, I think companies like Adani Ports and others will get benefited. The most beneficial advantage is the geographical location of certain ports down south. That will turn into a huge advantage. I can't go into specifics in Adani Ports because we don't have coverage, but it happens to be a strong player in this particular sector.
Okay, so that's with regards to Adani Ports as well, but a lot of other counters that are buzzing in trade on the back of order wins. Jasmeet is joining us to tell us more. Jasmeet, which are the stocks that are in focus on the back of order wins? Because I do see a solar company, you have SJVN, all of them up, what, 2 to 3% in trade?
Well, Hiral, thank you for that. As rightly said, we have a huge order book pipeline that's coming up, and order wins also, which were up in today's trade as well. Starting with the first one, we have Sterling and Wilson Company. Well, this company remains on focus on the back of that massive order they have won, the JV. So the order details are JV backs a big order in Egypt. For this JV is a 50-50% partnership alongside Hassan Alam Construction. And the order is basically for the solar power project in Egypt. Now, if you look at the details of the order is to execute roughly 1,000 megawatts of solar project alongside 600 megawatts of battery energy storage system project as well. Now, if you look at the order book of this particular counter, it roughly stands at 11,000 odd crores as of FY26. So massive order coming in with this counter as well for roughly $560 million. Well, the second one is KEC International. Well, this company with an order worth rupees 1,700 crore, and this particular order is won by the division where it operates under transmission, distribution, cables, and conductor division. Now, if you look at the order book of this particular counter as of FY26, it roughly stands at 4,000 odd crores on YTD basis. Well, the last one is again an order win where SJVN signs a power purchase agreement alongside JUVNL, and this particular agreement is to supply power which will be produced using the hydro, which is an interesting one. And this project is based out of Himachal Pradesh. So all in all, these are three counters that are in focus on the back of that order wins we see.
Thank you so much for that. Gaurang, from the names that Jasmeet just mentioned, any coverage or any views that you have?
KEC International, Hiral, happens to be under our positive coverage. We are positive on that. It has been an underperformer, Hiral, accepting that. Numbers for the couple of quarters gone by were a little bit suppressed, but I think all that is now in the rearview mirror. As far as SG Solar is concerned, so we like this particular sector. There are two names on which we are positive as far as solar cells and solar panels are concerned, and those are Premier Energies and Vari Energies. We positive on this particular sector.
But the retail interest is back, and the stock I'm talking about is Yes Bank. Important announcement, board approval of 16,000 crore fundraise via debt and equity. Of course, the equity capital base keeps on increasing in this story, but is it different this time? Gaurang sir, your views on Yes Bank right now?
Well, Sharad, I wish it was different because it's a long wait, Sharad, not only for you and me as we are associated with the market, Sharad, but also for all those investors who have been stuck in Yes Bank for a pretty long period of time. So we have known, a lot has happened in the bank in the past, not going into those details. But now there are some positive news which are coming out. So I hope that this turns around the fortunes of Yes Bank and the long-awaited period for investors who have got stuck in Yes Bank. We don't have any specific coverage as of now, so I won't go into buy, sell and hold. But like you mentioned, Sharad, it's a long and winding road for Yes Bank to come back to stability.
Okay, so long road ahead for Yes Bank with 3% downtick coming in on that counter. Prestige also is another one which is in focus today. In fact, you have a Morgan Stanley, which has given it a thumbs up. They've maintained an overweight. They have a target price of 1,920 on the counter. What they're saying is the pre-sales at 6,300 crores in April and May is something which is strong. and the pre-sales is ahead of the run rate that they had expected. Demand is intact despite the AI job loss concerns in Bangalore and Hyderabad, and they're expecting rents to go up further. In fact, the hospitality listing may await almost 778 keys, and the Aerocity Hotel completion is what they are eyeing. FY29 rentals of 4,000 crores at 7.5% cap is almost two-thirds of the enterprise value, and they're suggesting attractive residential and hospitality valuations. And the other one I have is MK has come up with a report on G&G Electronics. They have a buy target price of 725, a 10% up move already today. The target price, you're still almost $100 away from there. They're saying that they are valuing the business at 30 times the June 28 price to earnings kind of valuations. And this is one of the largest refurbishers of laptops and desktops. They're operating through its brand Electronics Bazaar. And the strong competitive moat comes in a high growth, profitable and ESG aligned business. They're expecting revenue, EBITDA and EPS CAGR of 24, 30, 37% respectively as well. And in terms of component pricing, 8 GB memory modules have jumped from $23 to $120 in the last 6 months. So the price spike is almost 5 times between October 25 to April 26. Gaurang, Prestige and G&G Electronics. 2 brokerage notes, your views.
We are positive on Prestige, Hiral, and we've seen that there has been a record number of registration as far as residential and commercial properties are concerned, and the city of Mumbai is way on the top as far as these are concerned. And the new launches and the new ventures that Prestige Estates is planning to go into, I think this will add to the positivities as far as earnings and profitability is concerned. But having said that, real estate sector still remains a high beta in terms of volatility. Good times, it will be outperformer. Bad times, it will be leading in the front to go down. On the other company, G&G, we don't have coverage, so I won't go into specific. But Prestige, we like on the fundamentals.
Prestige positive in terms of where the fundamental views go. But thank you, Gaurang, so much for joining in. Always a pleasure to speak to you as well. Completely out of time, viewers. A thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the
industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Lackluster day of trade on the Lal Street as weekly expiry and global cues weigh Nifty, which trades near the 24,000 mark. Broader markets mirror benchmarks. Autos, real estate gain while RLT sulks and metals lose shine. HDFC Bank is in focus after key management appointments. Former IAS officer Rajiv Kumar appointed as part-time chairman, while Puneet Sharma of Axis Bank designated as CFO from the 1st of September. And Adani Port strikes a big-ticket deal with Mundi, a unit of Mediterranean Shipping Company Group, to offload a 49% stake in the Viringam port for $1.4 billion. Oyo parent Prism is moving closer to its market debut. The hospitality major has filed updated IPO papers with the SEBI for a 6,650 crore rupees fresh issue with no offer for sale by existing investors. The company plans to use the bulk of the proceeds to repay debt. And Delhi unveils an ambitious new EV policy accelerating the shift towards electric mobility. The policy mandates phased adoption of electric vehicles across key segments over the next few years, backed by incentives and regulatory support. And the IMD issues a yellow nowcast warning for Mumbai, forecasting light to moderate spells of rain at isolated places over the next 3 hours. The department has also issued an orange alert for the next few days. Hello and welcome. You're watching Lunchtime Trades, and the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour. And while you grab your lunch, this will be the best thing that you can listen to. I'm Hiral Dadya. First up, if you have to look at what's happening in terms of the weather space. Now, we were just talking about the kind of rains that India is looking at as well, and Mumbai. The IMD alerts that have come in. The question over here is what is happening with regards to the deficit that was forecasted, number one, because if you're looking at the Kharif sowing as well, it has dropped by 22 to 23%, and that is what we're looking at. And this is data as on the 25th of June 2026. The impact of this is going to be interesting, and to discuss more on this, agricultural economist T. Nand Kumar joins us. Mr. Nand Kumar, always a pleasure to speak to you. This is Hiral on this side. My question coming to you is, we are talking about the Kharif season, which has seen a drop of 22% in terms of sowing. What is it actually telling you? Because a drop in sowing, you are looking at a deficit as well. What is the economy staring at?
Well, I would think that it's a matter of concern, definitely, but not yet time to panic, because we still have a sowing window open for probably the next 3 weeks. Some transplantation could take place. I would look at a rise oil seeds and pulses as important areas which would need attention. Now, if you look at the sowing deficit, it's about 9 lakh hectares in paddy, but most of it is in states which are rain fed, and therefore productivity may not be affected that much. But yes, there will be a shortfall. I would be more worried about Telangana, Andhra Pradesh, Orissa, and Chhattisgarh as far as rice is concerned, because that's where we may have a deficit production this year. But definitely, I think we should be looking at a lower production than last year. But that's, to me, not a matter of great concern because FCI has enough stocks of rice. But where the pressure would come would be oil seeds and pulses, and I think that's something that we have to be aware of.
So, Mr. Nankumar, what are you baking in terms of where inflation goes? Because the moment you're seeing the hit in terms of paddy, maybe that's not a concern because we do have some more time, but you're talking about pulses and oil seeds. How are you looking at the inflation impact of it?
Yeah, I think pulses would be more. Let me get back to rice. I think what FCI needs to do probably is to pull out its stocks and push more into the open market if there is a reduction expected in the production of rice. I think we would know that by about end of July, and I'm sure that they have enough stocks to push it into the market as open market sales. But I am not sure whether they will be able to allocate the same amount of rice for ethanol. I think that's probably a no for next year. I think the current allocation expires today, so I suppose that cannot be renewed. Now, pulses are more difficult because Kharif pulses are multiple. Tuar dal, moong, urad, everything. And these are not easily available across the global market. So I think we'll have to plan an import of these pulses right early in earnest and see where we get them. Oil seeds are a little more difficult from a point of view of production, but edible oil is available. So I think it'll have to depend more on imported palm oil and soya oil. So I would think that inflation in pulses is what would be a big question mark. We need to be aware of that.
You know, the other question I have, Mr. Nankumar, for you is the data that the tractor sales is pointing to, because usually the moment you see the monsoon, which is in a deficit, it has a direct impact in terms of tractor sales as well. Yeah. And we have seen this. I mean, you have calendar year 21 and calendar year 23, which saw lower than LPA rainfall as well. And that's when you did see the tractor sales, which were on a downtake. However, if you have to look at 2026 as a year, and usually bunch of your tractor sales come in the first 4 months of the year. This time around, the tractor sales is not giving you that kind of a trend. It is showing you strength, and that's the number that is being reported so far and what is getting registered in terms of your Vahan data. Is there a contradiction there?
Well, it could be that, the first 4 months may not really reflect because the drought, the real impact of low rainfall hits you sometime in June. So you could probably be on an optimistic curve till then. And suddenly, because if I was agriculture secretary in 2009, and I can definitely say this year is not as bad as 2009. So tractor sales, I wouldn't give too much credence to it. I think I would go by the data of sowing and also the date of sowing, because late sowing would give you some crop, but not necessarily the same yield as a normal year. So I think we should be ready for a lower crop. How low? I would want to look at it probably end of July.
So, Mr. Nankumar, if someone has to actually watch out for in terms of what could be expected, because currently you're not only talking about the rains, you're also talking about the West Asia crisis that is going to have an impact, and everyone's baking in that impact only from the second quarter of FY27 onwards. And if you have to look at rains as well, what should someone watch out for in the next 2 to 3 months?
Well, I would think that use of fertilizer will go down for 2 reasons, because if there is no rain, there will be a less use of chemical fertilizers. and less rainfall. So I think we should look at a lower production figure than last year, but then we'll have to look at each crop. And I would think that pulses definitely would be lower, even though they are rain-fed crops and they can be sown even in July. But I'm sure that there will be a shortfall there. Rice could see a shortfall, but I think with the stocks, we should be able to manage. But it involves an intelligent management of existing stocks. Oil seeds, again, as I said, the two oil seeds which are Kharif primarily are groundnut and soybean. Now, soybean is not a big oil content seed, therefore it's not that big, but groundnut and sesame oils could see a little pressure. So let's look at the inflation in pulses, in edible oils as probably in the next 2-3 months, and how we handle that is how we get imports into the country and fill up the need.
So it's going to be interesting to watch out for. Thank you, Mr. Nankumar, for your time and speaking to us and getting us the clarity of what all this would actually mean in terms of expectations as well. So that was an interesting conversation that we've had in terms of the El Nino impact and your Kharif sowing, which was actually 22% on the lower side. Yes, we have a couple of weeks where it could pick up, but it all depends on the rain gods as well. But moving on, earlier today, we spoke to Aswath Damodaran, who's a professor of finance at NYU Stern School of Business, about the AI boom. Let's listen in to what he had to say with regards to the dark side of AI and how AI will actually impact jobs. He's in conversation with Tamanna Inamdar.
It's a macro issue, right? The most optimistic stories about AI, the kinds of stories that lead you to put 10 trillion, 15 trillion, 20 trillion as market for AI, are terrifying stories. For the AI market to be worth the 26 trillion, for instance, that you saw in the SpaceX prospectus, I would estimate that 1 out of every 2 white-collar workers would have to lose their jobs. Lawyers, consultants, bankers, journalists, where do they go? What are they going to do? And think of the income that leaves the economy when those people lose their jobs. Who's going to be buying all this stuff that your AI products and services deliver? So it is potentially catastrophic. You don't want the best case AI scenarios to play out, because while they may be great for AI companies, they're going to be catastrophic for the rest of us. At the other extreme, AI could just be a tool that allows us to become more productive, in which case it's a much smaller market. That's bad news for AI advocates, but it's good news for the rest of us.
1 in 2 white-collar jobs are at risk. That's the word coming in from Aswath Damodaran as well. But moving on, Delhi has gone ahead and unveiled an aggressive new EV policy that phases in mandatory electric vehicle adoption across key segments over the next couple of years. Puneet is here to tell us more in terms of the companies that are likely to gain from the same and the ones who could probably lose as well. Puneet, in terms of impact, what is that looking like?
Right. Thank you for that. It's definitely a big policy. A lot of those details that have come through in April have been replicated into the final policy as well. So 15,000 crore EV policy. Out of that, the direct purchase incentives are around 1,500 crores. So that will be available for people like you and me who will buy the vehicle and get a direct incentive for buying an EV space. There are multiple benefits around for scrapping as well as in the charging infrastructure zone as well. But this policy will come through on July 1st and as outlined will run through till FY30 as well. So when you look at the key details also of this particular policy, there are certain key winners in the two-wheeler space. Of course, that will be important because from 1st April 2028, only electric two-wheelers will be eligible to be registered in Delhi. From 1st January 2027 itself, only electric three-wheelers will be allowed to register. So when you look at the key names as well, one of the beneficiaries will of course be Mahindra and Mahindra in the three-wheeler space because they have been increasing the market share with newer products, and Bajaj Auto, which has also recently launched the electric three-wheeler as well. Within the two-wheeler space though, this will be distributed across the legacy as well as newer players. So you are expecting some decent growth for within the two-wheeler space for TVS Motor, which has a 17% market share in Delhi. Bajaj Auto and Hero are at 12% each, and Ather and Ola Electric are the other ones with a 9-4% market share already in Delhi as well. But you will see a larger impact on Eicher Motors. The stock is also down today because of lack of scale of EV products currently in its portfolio. They have launched a flying flea, but it has been a slower launch, so that will be something to watch. For Eicher Motors specifically, Delhi accounts for 3% of its overall volumes as well, hence seeing a larger impact on Eicher Motors today in terms of stock price performance. And finally, what you have seen in exemption. Now, there's no direct benefit for the four-wheeler side in terms of purchase incentives, but road tax registration has been waived off for electric vehicles as well. So you are seeing that impact, but not too much for hybrids as well yet again. Continue to monitor all of those impacts, but definitely Eicher Motors taking it on the chin today.
Absolutely. Eicher Motors, the stock of the day, which is taking it on its chin as well in today's session. But thank you for that, Puneet. But moving on, HDFC Bank has appointed Rajiv Kumar, a former IAS officer and ex-Chief Election Commissioner of India, as its part-time non-executive chairman, ending a months-long search for a permanent head following the abrupt exit of Atanu Chakrabarti in March. But that's not all. There is a lot of musical chairs amidst this management reshuffle. Sharad is here with more details. The stock trading absolutely flat. Sharad, what are you picking up? Because these are very interesting moves that we are seeing.
Well, it's pretty interesting, and it was very, very busy, especially post-market hours tomorrow at almost, you could say, at 4:22 p.m. There was a very important announcement from Axis Bank where Puneet Sharma had resigned as CEO. And then from Bandhan Bank also another announcement comes in, and that's at 5:49 p.m. where Rajiv Mantri has resigned as the CFO. And HDFC Bank again announces at 10:32 p.m. that Puneet Sharma has been appointed as the CFO designate. Now let's get into the details of how much changes are happening in this BFSI space. Especially for HDFC Bank, there is a finance team, leadership change which is happening. And we already mentioned about Puneet Sharma. He will be taking over as CFO from 1st December. Right now he's a designate. If you look at his street cred, 26 years of experience he is having. And also Citibank, BCG, Tata Capital, that's where he's having one of the largest, you could say, his street cred coming in. Now, of course, this announcement comes after the legal review is done by Atanu Chakrabarti. And also, I'd like to give you one more important pointer. Bhavin Lakpatwala, he was expected to be the front runner for this post, but then he joined RBL Bank. And outgoing CFO Srinivasan Vaidyanathan will be retiring this year's end. But ex-finance secretary Rajiv Mantri also becomes the part-time chairman. He comes in the space of Keki Mistry. He's a 1984 ex-IAS officer, and also he's widely regarded as someone who has revitalized the Indian BFSI space during the stress times of 2017-18, and he retired as Finance Secretary of India in the year 2020, February month. And post-retirement also he served as a chairman of Public Enterprises Selection Board. For Axis Bank, of course, Puneet Sharma resigned as CFO for the last 6 years, and the current status for the bank right now, they don't have a CFO. And for Bandhan Bank, if you want to give in a perspective, CFO Rajiv Mantri has resigned and the new CFO status is still pending. So a lot of things are at stake in this BFSI space, and a lot of CFO churn is happening, and now that's what we can see on the musical chairs.
Absolutely. Thank you, Sharad, for that. So that's with regards to the banking space. But continuing with BFSI, you have big signals that are coming in from the insurance sector as well. The IRDAI chairman says that investor interest is picking up sharply, and this is after the government opened the sector to 100% FDI. In fact, new licenses are being cleared. Foreign players are actually lining up, and general insurance is leading the growth charge for now. Let's listen in to Ajay Seth speaking to NDTV Profit.
Good afternoon, sir. Piyush from NDTV Profit. In May, the government had opened up the 100% FDI in insurance sector. I just wanted to understand from IRDAI perspective how many applications we have got from foreign entities, has there been any progress, any JVs that have been, sought for on this FDI and insurance, any interest?
See, after the sector was opened up for 100% FDI, from the authority, we have already given 2 licenses to general insurance. One was approved yesterday. I'm not sure whether my office has made the announcement as yet, but one was approved yesterday. There's a lot more interest is coming on general insurance side. And the reason is obvious. As I mentioned it, last 10 years, life insurance sector grew exactly as per the economy, whereas 2.5 times, it became 2.5 times. General insurance became 3.5 times. So that growth is more. But I do see the life insurance also has the potential to grow at the same pace because there's a large unmet need. And that's what I would like to work with all insurers, that how we can make that happen, what ingredients are needed. Coming to your question, there's also a lot of interest coming in for some of the foreign promoters seeking to get into 100% ownership position. There are few conversations happening, and one application has been approved already, another one is with us at this point of time. Not 100%, but going up to a fairly large number, and with the intent to go maybe the full go at some point of time. Very recently, there has been an application on life insurance, and that was a very welcome development, because a large foreign insurer coming and taking a big position, that is something showing not only us, we feel that this sector has got the potential, even other foreign investors also feel, the promoters have feel that there is a potential in this sector. A precise number I would rather avoid, because that has more of a commercial nature. Let things fructify, and then you will get to know in due course of time.
Okay, so that's the word coming in as well. A lot of interest that's being garnered in terms of the insurance space, where foreign investors are trying to flock into the Indian markets as well. But moving on, how can we miss talking about commodities? Because usually the kind of trends that are coming up post the war are pretty interesting. We have N.S. Ramaswamy, Head of Commodity Desk and CRM at Ventura, joining in. Mr. Ramaswamy, welcome to the show. Always a pleasure. This is Hiral on this side. Let me start off talking to you with regards to where crude goes. We are at pre-war levels already. We are hovering around that 72 to 73 kind of barrel per, dollars per barrel mark. What is the read that you have in terms of levels that one should be watching out for in terms of crude? And are you seeing any near-term spike?
We find that it's going to be the same range. We need to watch how the actual talks which would happen in Doha and Qatar with the US and Iran. There are conflicting opinions. That's the reason why we saw crude yesterday from a $69. Again, it shot up by almost a couple of dollars, or $1.5. So it's likely to be in that same range. We don't expect a major spike in crude oil prices, energy prices. There isn't any reason or any catalyst that could drive it further beyond maybe 72 levels. So an upside of 72 and a cap on the floor around 68 is what is the range which we can see as a seesaw with the negotiations and the MOU which is going to be signed. So we don't see that going to be any longs being supportive or a short. It's a no trade zone within the range of 68 to $71.
So that's with regards to crude. Your views with regards to gold and silver, because everyone's of the opinion that now that the downtick has come in, is this the time to start accumulating gold and silver, or are you seeing any further pressure?
Again, gold is in a very critical phase, madam. Direction is really influenced by what dollar index is talking about. The medium term sellers are still dominating. They are maintaining their control. So the dollar index which is showing some structural improvement. That is going to give you some direction towards gold. But we are, in our opinion, it should be sideways to bullish is what we expect, because the psychological level of $4,000, which we are seeing gold and COMEX levels, it is always seesawing within that range. So the bearish corrective phase is what is the present situation. Any breakout from the present levels, and if it goes on to close to around $4,150 per ounce, we are going to see some bullish entry or a reversal pattern that can happen. So till such time, it's again a wait and watch. Gold has already been on a lowest since 8 months. We have seen it has lost almost 30% from the January 2026 highs of 5,600 or $5,590. So we are seeing that dollar index and the rate hike expectation, and how the US Federal Chief Kevin Warsh is going to comment or speak tomorrow. Wednesday, we are expecting what is the speech, what is the consumer confidence that can come up today, and what can happen on Thursday on the non-farm payroll. That could give a direction towards the rate hike and the dollar behavior. So we are seeing the range. Unless and until gold crosses 4,150, we wouldn't recommend a buy right now. But if, as a view, it is a sideways to bullish trend.
Sideways to bullish trend is what you're watching out for. But thank you, Mr. Ramaswamy. Thank you for speaking to us. Always a pleasure to get your views as well. But moving on, Oyo is checking back into the Lal Street. Now, parent firm Prism has filed for a DRHP. 6,650 odd crores is what they're looking to raise. My colleague Ridhima Bhatnagar is joining us to tell us more all about the IPO. Ridhima, over to you.
So Oyo parent Prism has filed for an updated DRHP with SEBI, and it will be a 6,650 crore IPO, and the entire IPO is going to be a fresh issue, no offer for sale, which means SoftBank, Ritesh Agarwal, who's the founder of Oyo and group CEO, Microsoft, Airbnb are the investors which won't be selling any shares, and they may raise up to 1,330 crore via pre-IPO placement, and around 4,000 odd crores will be taken from the IPO proceeds to debt repayments. Now, if you talk about the financial performance of Prism, around their 9-month FY26 PAT has jumped over 3 times to 748 crore, and 9-month FY26 EBITDA has also doubled. Now, a 9-month revenue has also risen by 11% from FY25. And talking about their other business highlights, the US business contributes around 52% of their global gross booking value. And this US gross booking value has jumped 155% over FY25 following the G6 hospitality acquisition. Now, if we talk about the demand and the loyalty of the company, around 67.6% of the stays booked through direct demand channels, and repeated demand stands at 61%. Loyalty base has grown to 26.4 million across their apps, Oyo Wizard and MY6 apps. And S&P also has, outlook has now turned positive from stable before. And one more thing to note is the tax overhang, which has been cleared by Delhi Bench of Income Tax Appellate Tribunal, which has squashed their rupees 885 crore tax demand ahead of the IPO. This is like a major relief for the company before the public issue.
Right. Thank you, Ridhima, so much for that interesting, details that you're bringing in as well. So that's with regards to the IPO, but the markets, exactly where we are, in terms of when we started lunchtime trades as well. No major moves, but we're off the day's lowest levels in terms of Nifty as well as Bank Nifty. A lot of sector-specific and stock-specific action is what you're watching out for. And in terms of what's happening in the small cap space, up next is the show that you should be watching with Somit and Varsha. Please stay tuned to NDTV Profit.
India Inc.'s most respected
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका
पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volume. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of Shanti Gold International. The company is looking to do a fundraise, and since April, the share prices are up nearly 45%. How much they are looking to raise and how are they going to deploy the same is something that we'll be asking the management today on the show. Apart from that, we'll be discussing stocks like Saxoft. Now, in the last 3 trading sessions, the share prices are up nearly 50%. The stock is trading at its highest level since November 2025. What could have led to this kind of a move is something that we'll try to decode with our colleague and the fundamental guest on the show. Apart from that, it's Jackson Pal Pharma. Now, they are looking to acquire 85% stake in an Equitas healthcare company. Now, this marks the company's strategic entry into the hospital segment. The stock is trading at its highest level since August 2025. And when it comes to Jindal Photo, that stock is trading at its 4-month high. The promoters have initiated the delisting proposal here. The stock is up nearly 23% in the last 1 month and currently trading at its 4 months high. Now, if you look at the market, the Nifty is doing largely nothing. It's been flat. We are up from the day's lowest point, but we are trading largely flat. The Nifty is trying to hold on to its key support level of 23,950. Also, during the day, we found some support around the 20,850 level. So, 850 to 900 are the key support levels when it comes to the benchmark. Apart from that, if you look at the sector indices in trade today, IT is a top sector loser, down around 2% in trade, followed by FMCG down just 0.6%. On the gaining side, we have the real estate, defense names gaining in trade. Also, the consumer durable sector is up nearly 1% odd in trade. Also, when it comes to the small cap space, unlike the benchmark, the small cap index is up nearly 1% in trade. Varsha, which are the key stocks here that have been buzzing?
Yeah, a lot of small cap stocks, pharma stocks actually are in focus. You have, Gufic Biosciences. The stock is up almost 28 to 29% in the last 1 month. It's trading at 24 times of its 30-day average. You have SMS Pharma also, buzzing in trade. You have Morpen Labs also buzzing. So a lot of pharma names. Apart from that, you have Signpost India, which is up trading at 22 times of its 30-day average volumes. You have SP Apparels also buzzing. Signpost is up almost 12%. SP is up almost 10% in trade. But on the loser side though, you have Advanced Enzymes, you have Gujarat Natural Rubber, you have Omax, which are seeing some kind of pressures. Advanced is down almost 6%. You have Gujarat Natural Rubber also. Omax is down almost 3% in trade. But one stock which actually Somit was speaking about is Shanti Gold International. Now, company is going for a fundraise To speak more about this and what lies ahead for next 2 to 3 years, we are here joined by Mr. Pankaj Kumar Jagwat, who is CMD at Shanti Gold International. Hello sir, welcome at NDTV Profit. We just wanted to understand the highlights of the fundraise that you are doing, because you are also expanding your capacity, almost tripling your capacity. So if you could help us with the highlights of the fundraise which you'll be announcing today.
Yeah, so we are going for a right issue, which we are going to upload it very shortly on the exchange. So everybody will get to know on this line. And we are coming up with a factory in Jaipur, so which is going to be probably start in November by November 15th. And recently we have started one more new capacity around 4 tons a year, which has already started.
So how much of this rights issue, if you could just help us with the amount that you're looking to raise, and exactly how are you going to deploy this fund, and what is the timeline here for the fundraise?
So we have not uploaded on the exchange, so right now we cannot come up with the figures and all, but this money completely would be used for manufacturing purpose, and we'll be acquiring gold with the complete money. So it's like investing full money in buying gold.
Right. And sir, you were in last con call, you also said that you are also looking to raise debt. Anything on that, or your equity on right issue will actually cover the expansion that you're doing?
Equity on the right issue will cover the complete expansion.
Okay, got it. Sir, now, talking about the financials, last year, if you see, the volume growth was only 15%, but the guidance that you've given is almost 30 to 40%. What gives you that confidence, and how is Q1 looking like considering the fall in gold prices that we've seen?
So if you overall see the complete year, it was 15%, but from the time we have received the money from IPO proceeding, both the quarters were around 30% growth. So this year also we are looking, because we are coming up with an office in Dubai, which is going to start very soon, and a new facility and all. So we don't find any difficulty in with around 30 to 40% growth.
But I believe, sir, some new capacity was supposed to come online, which would have aided a much higher growth for you in FY27?
So the new capacity in Marol, which I have mentioned it now, which is around 4,000 kilos, which is already has started. So yeah, it's which has already started. And now my new capacity in Jaipur, which we have acquired a land of 3 acres. So there also we built a factory which should be starting by November.
Without that 4,000 kilo capacity, your growth was 30%. So with that 4,000 kilo capacity, now the growth should be higher, right?
Yeah, it can be a little more higher, because it's we'll be acquiring funds, means will be the funds what we are raising through right issue. So that after getting that fund, yeah, the capacity means it might go higher.
Now, any range you could share?
Range would be difficult for me to share it now, because the office which is in Dubai, the paperwork are going on. Once everything starts and everything gets normal, so we'll have a good volume growth as well as revenue growth.
Also,
whatever we committed, it is going to be more than that.
Okay. Also, as my colleague was mentioning here, the volatility that we have seen in gold prices, how is the company going through that? Any impact on inventory that we could see, given the fact that in the last 1 month we have seen a sharp fall in the prices?
So it's not going to affect us so much, because whatever gold we sell, so we do a natural hedging by buying the gold on the same price, whatever we sold it on the same day.
Okay, understood. And sir, since you're tripling your capacity, what customer commitments or order visibility do you have? If you could highlight us on that also, because tripling of capacity, do you also have the order visibility to cover that capacity?
So we've started a lot of new line of jewelry, which our customer were demanding about it, and we've done all the R&D in the company before taking a new company and starting a new facility. So we had a lot of demand. So seeing the demand, we started a new capacity, which I mentioned it earlier, which is 4 ton. So we don't see any problem in demand right now.
Right, understood. And also, I also wanted to understand about your export market. what is the contribution currently and where do you want to take it? Because which export markets, that is US, UK, Singapore or Malaysia, you're seeing the strongest traction currently?
So we see Dubai is going to be the center area for us to supply jewelry all over the world, and we've started exhibiting all over the world. Right now, we are exhibiting in Singapore. Earlier, we exhibited in the UK. So we have a lot of demand from the customers and all. So we are just expanding our footfall in all the exhibitions. So yeah.
How much would export business contribute to your top line, say 1 year or 2 years down the line?
So it's going to be around 20%.
Okay. And what are the kind of margins that one should look at, be it the EBITDA or the profit margins, if you could share some guidance on that front?
So we would say like would be sticking to 4% PAT, which we've already been achieving it. But last year it was more because the money what we had received from IPO proceeding, we had purchased all the gold without doing the hedging because a lot of the wars and all and a lot of this issues were going on through geopolitical around the world. So we purchased all the gold with the IPO proceedings. So we made a lot of money in purchasing the gold in price wise, and we maintain a good healthy income in operational margin.
Right. And sir, large jewelers are actually, increasingly investing into their backward integration or, I would say going into their own manufacturing. Is backward integration the biggest long-term risk for your outsourcing model currently?
No, the retail store has to buy jewelry from manufacturers like us because they cannot make that kind of designs and so many designs in one shop because they need different designs. So they have to go to people like us. So it's not going to affect. Earlier also they were manufacturing, but still our business is growing in terms of revenue and terms of volume also.
Right. You have also entered into man-made jewelry, Turkish jewelry. So which of these categories is seeing the strongest demand, and are there differential when it comes to margin? Because I think the Turkish jewelry is a higher margin product. So in future, will that inch up your margin?
So we have a lot of different line of jewelry where somewhere our margin is little higher, somewhere it is medium. So, when we compile all the margins together, so we easily see around 4% margin.
Understood. All right. Well, thanks so much, Mr. Jagwat, for coming to us and giving us all the details, and all the best for the business. Thank you so much.
Thank you.
Well, let's also invite fundamental guest for today, that is G. Chokhalingam, who's founder and MD at Economics Research. Mr. Chokhalingam, you heard the management of Shanti Gold International. What's your view when it comes to this counter, considering the fall in the gold prices, and your view on overall, gold jewelry companies as well?
Yeah, definitely the industry outlook is too good because, as I've been saying on the channel, that appetite for gold jewelry is very strong, whatever is the price point. Of course, marginal impact is there when price rises, but now 25% fall in the gold price is good for jewelers. Demand can increase. Coming to this company, I looked at the fundamentals. I also heard him. The one thing, the positives are that it had a solid growth. If you look at the performance for last several years, and stock also trade at only 11.6 times earning on FY26. Promoter holding also very high. These are all positive. And negative side, the fixed asset quite low, but of course now they are going for right issue and increasing the the manufacturing capability. That should address the concern. And second, the valuations are low because they are into wholesale, unlike the retail jewelers who have a branded jewelry business. So that is a reason. So in a net to net, yes, it seems to be a good company for medium to long term, considering the valuation and growth. But again, the investor should understand that the small caps are highly risky, and particularly the gold selling companies. We don't have, as an analyst, don't have access to how the inventories are valued, all that. So there is always inherent risk generally in the industry for this kind of business. So little risk-taking investors can continue to hold and even buy for medium to long term. That's my research view.
Sir, other than Shanti Gold, any other company in the small or mid-cap space that you find interesting in the same line of business?
Same kind of business, no, because they are into manufacturing, but we have covered Kalyan Jeweler, which is a jewelry company, branded jewelry company, because even now the stock is down substantially from its 52-week high. As I said, the 25% fall in the gold price also augurs well for jewelers. The demand is likely to pick up further. Third, I am extremely optimistic that the government would come out with some recycling incentive scheme to reduce outflow of dollar for importing gold and promote recycling within the country. That should also be positive for jewelry companies like Kalyan Jeweler. So we have recommended. I remain optimistic about the Kalyan Jeweler.
Okay. Well, with that, let's step into a short break and we'll be back and address more small cap stocks on the other side.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose.
Fantastic jury, fantastic jury.
Welcome back. You're watching Small Cap Buzzers, where we discuss every small cap which is buzzing as of today. Well, moving on, Saxoft is one stock which is in focus. Let's pull up that chart, please. The stock is up almost 10% in trade. It's up almost 50% in last 3 trading sessions. What's the key reason behind that? We have Jasmeet to tell us more about that.
Well, Varsha, thank you for that. As rightly said, the stock has been really rallying a lot. Let's quickly understand what does the company do before we get into the other details about the company. Well, the first one, the company operates as a tech company where it provides business intelligence solutions and also information management to a lot of mid-cap IT firms and prominently based out of USA. Let's quickly understand the stock performance. Well, the stock has rallied nearly 50% in last 3 trading sessions. But if you look at the chart over last 1 month, the stock is up nearly 50%. The majority of the gains of the month is coming from this last 3 days itself. And over a year, the stock is hardly up 4%. So we can say the extended fall and non-performance of the stock over last 1 year, but the majority gain that we are seeing over last 1 year also is coming from the gain we saw in the last 3 days. Now let's quickly understand about the FY26 financials and understand the key triggers that might be the reason why the stock is buzzing. If you look at the FY26 marks as the first year for the company where they crossed the 1,000 crore milestone in terms of the overall revenue. Also in terms of the margins were aligned with what the company was expecting. Well, secondly, the company is also delaying decision being delayed of the clients. So when that ramps up, the company might see the revenue going up further. This delay in the client decision making is coming on the back of that AI fear that we are seeing. But the third aspect is the overall investment in AI. The company has been doing it and expects good returns going ahead. Now, if you look at the key numbers, the revenue is up nearly 13% while the EBITDA saw an uptick of 28%, and even the margins expanded by 200 BPS for the entire year in FY26 and crossed that 18% mark for the company. Now, lastly, the PAT saw an uptick of 22%. We look at this company from on a macro level of how it has performed over the last 8 to 9 years. We do see that the revenue has grown consecutively 16% at a compounded over the last 10 years, while the PAT has grown nearly 23% consecutively on a compounded basis over the last 10 years again. So we see a good top line, bottom line growth for the management. But the overall revenue from the top 10 clients is concentrated by 58%. So that's something to watch out for. Now, in terms of the vertical split, the majority revenue for the company comes from the emerging vertical, and the BFSI is the second largest vertical with 31% stakes. And when you look at the overall geography split, the company gets 50% of its revenue from the USA and rest comes from the US, Europe and the other countries.
Well, thank you so much, Jasmeet, for all the details. Mr. Chokalingam, 50% in last 3 trading sessions. That's a huge gain that investors have seen. What should one do? Should they sell? What would you advise to investors on this counter?
There are 2 things which I would like to present. One is general, the behavior of small cap stocks. Once again, we are seeing a massive rally in small cap stocks, micro cap stocks, like what we saw in 2024 September. So one should be very cautious, investors. I mean, because whatever happens to fundamentals, these small cap stocks can go for a big correction when market, corrects. So that should be kept in mind. Coming to the stock, to be fair to the stock, yes, the company has done very well in terms of growth. Last 5 to 10 years, they have done really well. Strong balance sheet. There is no doubt about it. And, the only concern is that, apart from strong balance sheet, the company also had done very well in the latest quarter. The only concern is that there is no institutional holding in the stock. Dividend payout is very low, 10% of the profits. And so even the fixed asset is very low, just about 25 crore. They are able to do 1,000 crore business. So these are the things one should keep in mind. But the valuation is comfortable at around 20. So net to net, yes, little risk-taking investors can continue to hold and they can even buy the stock.
All right. Well, the next stock which is in focus is Jagsonpal Pharmaceuticals. Let's pull up that stock, please. It's up almost 8%. Now, the reason why we are seeing this kind of buzz is company is going to acquire 85% stake in Aequitas Healthcare, which marks company's entry into healthcare distribution platform. Current Aequitas promoters will retain actually 15% stake and the management team will continue with the business. So they are acquiring this. It's a small acquisition of 21 odd crore, which will be funded through internal accruals, and the transaction is expected to close by July 15th. Now, about the target company, which is Aequitas, is a Mumbai-based pharma company which supplies medicines to hospitals and works with leading hospital chains across India. FY26 revenue was around 53 crores. So it's a small acquisition that the company is doing. This gives Jagsonpal an immediate hospital distribution platform though. And so company will actually expand beyond traditional prescription market, which provide access to fast growing hospital segment. The hospital opportunity, if you see, the hospital channel almost contributes 10% of the pharma industry sales, and the sector or segment itself is growing faster than the overall pharma space, and the Jagsonpal existing brands can be actually pushed through this hospital network, and the cross-selling opportunities will also emerge. So overall, a small deal, but yes, a positive one for the company, and hence we are seeing the stock is up. Mr. Chokalingam, wanted your view on this counter and also on the overall pharma pack, considering a good rally that we have seen. Consider it as a defensive segment, but a good rally in overall pharma sector.
Certainly, I am very optimistic on domestic, small, particularly the domestic focused pharma companies. There is a lot of opportunity, no doubt. This company, I looked at it. They are basically acquiring a distribution company. So yes, it is positive, but there is no great deal. I mean, you are not acquiring any branded domestic business. You are just acquiring a distribution platform. Positive, nothing, to cheer too much and reward the stock like this, because stock also trades at a little more than 5 times enterprise value to domestic pharmaceutical sales, which is little stretched. But otherwise, it's a good cash-rich company, and the dividend payout is also quite high. So therefore, my suggestion would be to hold the stock. In case it rises another 10%, one can consider booking profit, because then it would be trading close to 6 times EV to sales, so which would be very stretched in valuation.
Okay. Let's move on to our next counter, that is Jindal Photo. Now, the stock has been in focus largely on the back of the promoter's intention to delist the company. Why so, and what price are we looking at this delisting? Let's get in Shivam with more details.
Yes, the stock has been seeing a strong momentum as the promoters have initiated a delisting proposal. Also, the stock has been up 23% in last 1 month and is currently trading at 4 months high. Now, let's talk about the briefly about the company, what it does. So, Jindal Photo Limited is a core investment company which is making strategic investments into group companies and also provide management consultancy services to them. Now, with this delisting proposal, the company will acquire remaining 25% public shareholding, and currently the promoter group holds around 74% stake. Also, the company hasn't mentioned the floor price yet for this acquisition. Now, the key reasons for the delisting is that the company believes the company must have the full ownership of the operational performance, and also the company believes that it will provide a greater flexibility in operational terms, which will also lead to lower compliance cost. Looking at the Jindal Photo's investment portfolio, so majority of the economic exposure is towards the power sector, where Jindal Photo holds 20% stake in Jindal India Power Tech Limited and 33% stake in Mandakini Coal Company Limited. Apart from that, it also holds around 18.6 lakh shares of Jindal India Power Limited. In terms of stock performance too, the company has been doing pretty well and has been seeing positive returns on 1 month and weekly basis too.
Right. Mr. Chokhalingam, any view on Jindal Photo here?
It is basically a holding company.
Right.
90% of the balance sheet is in investments, as your colleague mentioned, a power company. But I was not able to get the exact, the valuation for these investee companies. But roughly, if you look at the current market cap, which is around 1,256 crore, the book value in the last balance sheet for these companies comes to close to 1,000 crore. So I think the valuation is fairly fair, current price. So as an investor, if I am holding the stock, I would sell if the stock goes up further 5-10%.
Okay. And Mr. Chokhalingam, thank you for joining us and giving us your perspectives on the stocks that we discussed on this show today. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving, and so is energy. Suzlon, good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all those stock-related queries that you might have at this point of time. So do start sending in those queries on the numbers that are flashing on the top of your screen. You can also call us on the landline number as well as speak directly to our guests for those stock-related queries as well. But it's been a very interesting day to say the least for the markets because we've largely continued to be below that 24,000 mark for the index. We even slipped below the 23,900 mark, yet again recovered those. So the last 90 minutes of the trading session continues to be very important. The heat map shows you the divergent trends that are visible in the auto pack right now. Now, Eicher Motors continues to be down and out today, down 4% on the back of the Delhi EV policy. We'll put the stock in focus in our next show, which is India Market Close. But on the other hand, there is a clear divergence visible with Maruti Suzuki. Now, there hasn't been any kind of direct benefit coming in on hybrids, which you would expect from Maruti Suzuki. But that big brokerage update coming in from Jefferies has pumped the stock above that 14,000 level, and very important to do so because it's been a really long time since Maruti has traded above that level now. Titan, Tata Motors PV, Adani Enterprises, Bajaj Finance and Adani Ports are some of the other gainers for the Nifty 50 as well. When you look at the sectoral heat map also, because of this you're seeing Nifty IT being the biggest loser, and that's continued to do so as well. Auto, largely because the Maruti has continued to be sideways to say the least, because we would have expected a bigger move there. But the Nifty consumer durable and defense continue to be the top gainer, so is the realty. And there is, in terms of the advanced decline ratio, that's the other important factor. Now, in the morning, roughly around 1,400 stocks were advancing in trade today versus 1,100 declines. That has slightly increased to almost 1,600 stocks now. The mid-cap, small-cap index showing you that trend, and so is the BSE 500 also. So mid-cap 150 now at almost the highest point for today. Small-cap is also there with up a 0.6% increase, and the individual names as well. Now that's led by Quest Corp as well as Gland Pharma and Maruti Suzuki, of course, visible there as well. Solar Industries is also showing a very good move, while ZF Commercial, also one of the impacted stocks, to say the least, in the auto pack as well. But let me welcome in our guest who will take your stock-related queries. Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset, Sher Khan, and Tapan Doshi, Research Analyst at CA-Tapan.in, joining in. Now, both of you gentlemen, thanks so much for joining in on this Tuesday afternoon. The first stock-related query coming towards you, and this one is from Navindu Sharma, who is writing to us from Patna. He's holding Leela Palace at the IPO price and asking a 1 to 3 year view on the stock now. Tapan, good afternoon. Welcome to the show. We've largely seen, in terms of Leela Palace, being in that 4 to 450, 480 kind of zone. Would you recommend Navindu to continue holding the stock for now? And what's your recommendation?
See, hospitality sector is doing well now. If you see the revenue growth guidance is almost 10 to 12%. EBITDA margin going onwards or maybe above 50%. Of course, they have a high debt, but I think they will be able to control. That is what the management is saying. And luxury travel demand is cyclical, but I think coming quarters things will be better. They have already have 1,000 keys pipeline. So overall, I think things look good here. Asset light expansion model is there. So please hold this stock. Even I'll say that if it goes down, you can add it more.
Got that view, but let's go across and take our first caller for today. This is from Mysuru, and Mohan is dialing in for a stock query. Mohan, good afternoon. Welcome to the show. What's your query?
Good afternoon. I just bought 10 shares of Gabriel, 1,100. I just want to know, can I add this share for long-term perspective?
Long-term perspective, got it. Well, let me go across then back to Tapan. Tapan, Gabriel, another big beneficiary of the auto growth that we've seen since the GST rate cuts. Should he continue to hold?
Yeah, totally agree, Puneet. This company will be beneficial. If you see premium vehicle demand is quite strong and EV suspension opportunity is quite big, going up, and export also opportunities for this company is going up. Capacity expansion is already underway. So only thing that OEM concentration remains high. But if you see the balance is debt free and strong OEM relationship, so yes, he can add more as in when it goes down, but hold the stock.
Hold the stock, got that view. But the next question coming in from Raj, and he wants to know about Rain Industries, asking if it's a good buy at this point of time at the current levels. Kunal, welcome to the show. Would you recommend buying into Rain Industries right now?
Good afternoon to everyone. So I think if you look at the long-term chart for Rain Industry, it has already given us a breakout when it surpassed the hurdle of 173, 174 on the upside. So now that will become a support, currently trading at 182. So if we get that dip in the market towards that 175, 170 zone, I think ideal level to enter into the stock. I'm expecting the stock to go again back towards 220, 230 on the upside.
On the upside, got that view. The next question now coming in, and this one specifically is coming in between a couple of counters. So IEX as well as UTI AMC, and Jayashree from Coimbatore wants a 2-year view on what's a better pick. Now, Tapan, the challenges continue on IEX in terms of the regulatory nature. Is UTI one of the preferred picks in the AMC space? What's your opinion?
Yeah, I agree with because UTI ANC is much better situation. If you see the AUM growth will be better from here. SIP inflow is already strong, and operating leverage will be improving from here. I know UTI AMC has not performed compared to other AMC, but I think valuation is much better. IEX still, I feel a lot of headwinds are there, so better go with UTI AMC for long term.
Got it. The next question coming in now, and this one is on IDFC First. Viewer Ramanan from Tamil Nadu is holding these shares at 83 rupees and was holding 1,500 odd shares right now. He's asking if it's advisable to hold at this point of time. Kunal, very, very sideways momentum since that, on the fundamental side, that fraud that happened and just lost the momentum, right? Is it advisable to hold right now?
I think even if you want to hold from a medium-term perspective, I think 77 on technical front, that should be a stop loss. That is where the key averages are there. If that is breached on the downside decisively with volumes, then probably we'll be seeing the stock heading towards 67, 68 on the downside. So if he's holding at 83, keep a strict stop loss of 77 on a closing basis.
77, got that view. The next question, and viewers, you can also call us for your stock-related queries as well. The landline number for that is flashing on the top of your screen right now. And this one's on Genius Power. Again, a counter that our viewer wants to enter. Now, there was a block deal in the morning, and hence you saw a larger impact on Genius Power. Let's pull up that counter now. Kunal, a view, because stock's down 8.5% today. Is it a good entry level to look at this point of time?
I think too early to say at the current levels. 295, 300 has been the support zone earlier, and we are exactly trading at those levels. Need to sustain above this for the next couple of weeks, and then probably you can see some base formation happening, but currently no view on the stock.
No view on the stock, got it. Also, Kunal, on Titagarh as well, because Aniket, who's writing to us from Karnataka, wants to actually, he's holding shares at 844. There's been a 6% up move in the last 1 month or so. Should he book out at this point of time, or would you recommend him to continue holding?
So depending on what his time frame is, if it is a short-term time frame, then probably one can book at the current levels. But if it is a long-term where he is looking at for investment for the next 1 year of perspective, then I think it's a very good bet to continue on the long side. 968, 970, this has been the major hurdle for the stock on the upside. And once that is taken out, then we can expect a good rally toward 1200 on the upside. So the larger term trend is bullish, but from a short-term perspective, since the stock has rallied a lot, it can cool off, come down to the averages around 800 and then probably resume the uptrend.
Got that view, Kunal. But let's go across, take the next caller from Mumbai. And Kezad has a stock query for us. Kezad, good afternoon. Welcome to the show. What's your query?
Hi, good afternoon. My query is for RailTel. I have bought this stock when the market was at the peak at 440 levels. I have bought 1,000 shares of RailTel, and I'm a long-term investor, minimum 10 years. So what should be the price I'm looking after 10 years? That is number one. And there is a steep correction at the moment, around 30%, which I understand. But in the long term, will everything be good for the company? And how is the company progress coming up in the next 10 to 12 years? That is what I would like to know.
And Kunal, fair question. But also, Kezad, how big of this position is right now in your portfolio? I mean, I can see that you're holding 1,000 shares, but is it more than 20% of your portfolio?
No, this is the particular investment I have done, and I have kept it for for 5 lakh rupees, which I have long-term perspective this is the only one I have.
Got it.
I have multiple shares, but this is like a big chunk of investment which I've put in this company.
Fair, Kezad as well. But so let me get in both the views as well, because one on the fundamental side, Tapan, would you recommend Kezad to just continue holding because his time frame is almost 10 years? RailTel, in that sense, has been slightly underperforming as well, which is, in terms of financials, while FY26 was strong, the margin profile has changed materially compared to the last 3 to 4 years. So what's your opinion on the stock? Should he continue to hold and also his position because he's bought it at 440?
See, my advice will be just wait for 1 or 2 quarter more. Because if you see that government order dependency is high, sir, where any variation that it will have an impact. Again, most of them, execution delay is happening for this company. Working capital intensity is on a high, but of course, in future, demand is also good. BharatNet opportunities, data center business expanding, so all that is good. So my take is at least wait for 2 quarters more. Order book is strong, and railway digitalization is happening. That is also helping. So currently, fundamental looks okay with me. Just wait for 1 or 2 quarter more, then evaluate again.
Got that view, but take another call now. This one, hopefully, Kezad, that answers your question. Let's go to Gopinath now from Tirupati asking us a question. Gopinath, good afternoon. What's your query?
Good afternoon, sir. I have 10 shares of OFSS, Oracle Financial Services, at the average rate of 7,000 rupees.
Okay.
So what is the long-term perspective for that? Can I hold it or can I book profit? That's all.
Well, Gopinath, thanks so much for calling in, and many congratulations on the gains as well. Tapan, would you recommend him to ride this wave on Oracle Financial?
Well, this is the one stock which is quite moving in IT. But yes, if you see the global core banking demand is quite steady, and a cloud-based banking adoption is rising, so which is helping this company. I think things will be better. The management is quite hopeful that in coming quarter things will be better also. Don't add any stock, but yes, ride this trend with a stop loss, maybe 15% down.
Got that view. The next question. coming in now, and this one's on Deepak Nitrite. Now, our viewer has bought shares at 1680, and this is Thomas George from Cochin. Now, Kunal, since his buying price stocks down to 1550 odd levels, he's asking if this is a falling knife. I don't know if that 7, 8, 9% move would consider a falling knife, but what's your opinion on the stock now?
Yeah, I think for the stock, 1500 is a very critical level to be hold on to. If that is breached on the downside on a closing basis, then probably you will see further selling pressure. Even the recent low, what we had seen the recovery from 1300 to almost 1800, 1900 on the upside, that will fizzle out. So if he's holding, my advice would be to continue hold with a strict stop loss of 1500 on a closing basis. If that is triggered, then exit your losses.
Got that view. The next question now. And this one's on Fujiyama. Now, our viewer has bought, Christopher from Chandigarh, has actually bought these shares at 325, so very close to the current market price. He's holding 1400 shares. And Tapan, he wants a 3-year view on the counter. What would you recommend? A recent listing, but how are you viewing the space? Is this a preferred pick in the renewable energy space?
See, of course, it's a currently preferred take, and the only thing is whether they are able to maintain the margin or not. Of course, rooftop solar demand is accelerating, and 2027 demand will be also good. For them, the distribution network is doing good. The only thing is raw material price volatility and competition from the larger players. So that is where my question is whether he'll able to hold the margin or not. Otherwise, if you say healthy ROE, cash generation is good, and benefits of PM Surya Ghar Yojana. So I think hold the stock, but as I told, just have an eye on the margin. If that goes down, then he should get out.
Got that view. The next question now, and this one's from Mr. Setti, who's writing to us on Ecos Mobility, a smaller name. We don't discuss this too much, but he's holding these shares at 190. Holding 240 of them. It's been in a very sideways. Let's look at the year-to-date chart also. Not too much happening today. But Kunal, a lot of promise, I think, during the IPO as well. But since then has re-rated quite substantially. Is there any momentum? Should Mr. Setti hold till his buying price? What would you recommend?
Sorry, I'm not able to find the stock and neither the ticker for the stock.
Okay, I'll just check that for you. But Tapan, in the meantime, I don't know if you tracked the listing at that time, the Shofu service driven business, but any view on the counter?
See, valuation is quite above the historical average. Now, if you see the premium corporate segment, they are depending on that only. And now slowdown impacts the business travel also. That will have a future impact. I think airport mobility demand will be there, but one good thing is that it's an asset-light model. So currently hold it, but honestly, I'm not too much sure about this. So 1 quarter more, otherwise, please get out from the stock.
By any chance, could you view this, Kunal? The code is ECOS MOBLTY.
No, sorry, I'm not able to find it.
No worries. We'll come back to you, Kunal, with on the Ecos Mobility. But the next question coming in, and this one's on HDFC Bank, becomes and continues to be a retail favorite counter. And Ajay from Pune is holding 5,000 shares of this particular counter. It's almost 25% of his portfolio. Now, we've seen multiple changes here as well, right, Tapan? A new CFO being appointed. He's also a well-known name in the industry. Is there enough evidence now to continue holding the stock for Ajay? And or maybe he should add some more, if in the banking space, any other name also that you would recommend?
I think if he wants to go for large cap, I think ICICI Bank and SBI is also another option where he can transfer some fund. Because I feel the stock is good. I'm not saying not good, but it will be slow mover. Of course, the positive development today happened. In future, maybe loan growth will be 10 to 12%. But they are seriously, credit growth is much lesser than other private banks and all that. And if you see the merger synergy is still, it's not visible. So my take is allocate some fund to ICICI Bank and SBI also. As is, I think he wants to go for large cap. That's why I'm talking about these two names.
Got that view. The next question, and this one's coming in on Wokhart. Kiran Kumar from Hyderabad is holding shares at 1975, holding 108 shares, asking what he should do with this counter. What would you recommend here, Tapan? Of course, Zenic being a very important drug, should he just continue to hold?
Yeah, please hold it. Now, if you see the specialty portfolio is expanding, even global antibiotic demand is rising. Some licensing opportunities also coming up. The main thing is now they are spending good in R&D. So innovation-led growth strategy is there already with the company. So yes, I'm quite positive. Company is good. So please hold this at this level also.
Shankar from Tirupati wants an opinion on JK Enterprises. It was one of the key stocks that continued to be in focus a few months ago. Let's look at the year-to-date chart, the one-year chart also for JK Enterprises. Now, he is currently sitting on a 15% loss in this particular counter. Kunal wants to know if he should, continue to hold. It's trading at 176 odd right now. But this year itself has been sideways momentum. What would you recommend? Should he still hold for that 15% to come back?
Sorry, I'm again not able to find this stock as well. JK Enterprise, right?
Yeah, it's JAYKAY should be the ticker name on NSE. I think and continue to be in news flow. I think, and hence we've picked up this counter. But any luck there, Kunal?
Yeah, I found it. Again, for JK Enterprise, what we have seen that already there has been the top out signals on the stock around the mark of 205, 206. From those levels, it has been trading in the lower top, lower bottom formation. Key levels to watch out for here is 165. If that is breach on the downside, then the fall could be severe and the stock could glide towards the mark of 140 on the downside. So if it's a holding long, keep a strict stop loss of 165 on the downside.
And Kunal, any luck on Ecos Mobility as well? Because any view that you can offer there as well?
Still, I have not been able to find Ecos.
I think I'll touch base with you offline and Kunal on that one. But let's start the rapid fire round now, and Kunal as well as Tapan, drill. First question coming in on Paras Defense. Our viewer Lakshmi is holding shares at 670, and he's holding 25 shares. So almost doubled the money, but Tapan, should she continue to hold or book out?
No, hold.
Next question coming in, and this one continues to be, and actually no, we've answered this question, but on Vedanta Iron and Steel, our viewer Vijay is holding shares at 28. Now, I think it's one of the beneficiaries of the demerger is what Vijay is. What would you recommend here, Tapan?
Yeah, currently hold. Valuation is okay.
Next question coming in from Jay Krishnan. He wants a 6 to 9 month view on MTAR Tech. Now, Kunal, we've seen some momentum, respite quite and meaningfully so. But what's your opinion on MTAR now?
I think one of the biggest outperformer what we have seen in the last 6 to 8 months. So again, if he's holding from the lower levels, continue to hold the stock. From a trailing stop loss perspective, 6,200 should be the trailing stop loss on the downside.
Also, Kunal, on Persistent Systems, yesterday stock was down 11%. I think today also largely sideways. Vijay from Chennai wants to know if it's a good time to enter for the medium term.
I think definitely no. Again, if you get bounces, that would be an opportunity to exit the stock or probably short. We can see the stock again gliding towards the mark of 3,800 on the downside.
3,800. It's a level that we've not seen on Persistent for a while now. So important call coming in from Kunal there. Next question coming in on Rane Madras. Again, a smaller ancillary name there, Tapan. Would you recommend venturing into it or go for a more bigger name in the auto ink space?
No, I think better to go for a bigger name and like Uno Minda or something like that.
Got it. Finolex Pipes bought at 130 by Ajay. He wants to know if he can hold on for the long term as well. Tapan, would you recommend that?
Currently hold.
Hindustan Copper, JSW Energy, what's a better pick to enter now is what Srinivasan is asking. What's your view, Kunal?
Just a sec. I think JSW Energy looks much stronger compared to Hindu Copper at the current level. And one can see some decent upside at least towards the mark of 620, 630 on the upside.
Got it. Well, got the view, Kunal, and that was the last question of the rapid fire as well as this edition of the show. Tapan as well as Kunal, thanks so much for joining in and helping us with the stock related queries. But viewers, out of time on this show, thanks so much for watching. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hello and welcome to NDTV Profit. You're watching India Market Close. I'm Hiral Dadia. Very interesting day in terms of markets because you've seen those gyrations that have happened from the day's highs of what? 24,035. We've given up those kind of gains, but this sudden spike that is coming in right now, you've reclaimed 23,950 mark in intraday trade. So that is the interesting point to watch out for. Let's quickly look at Bank Nifty as well, and then we'll look at the advanced decline ratio as we speak. If you look at the Bank Nifty, a similar kind of spike which is coming in here, though we are still some points away from the day's highest levels of 58,011. We are below that 57,750 mark in terms of Bank Nifty. Let's look at individual counters or even in terms of the heat map for Nifty 50 to just understand as to what's happening in terms of individual stocks. Maruti Suzuki 5.5% up move, and the stock, Jefferies has put out a note as well. They've increased the target price on the counter. Titan has seen that sudden uptick that has come in. Tata Motors, PV, Bajaj Finance, in fact, that stock will be trading ex-dividend in today's session. 3 Bajaj companies, or 4 of them are trading ex-dividend. Adani Enterprises, Eternal, Adani Ports as well. And this is on that $1.4 billion stake sale. That stock is up in trade. Bharti Airtel, Nestle, a pretty mixed picture is what you're seeing in terms of individual counters. However, on the downside, Eicher Motors bearing the brunt, 4.5% downtick, and this is on the back of the New Delhi EV policy that we're talking about. You have IT, which continues to see the pressure. TCS, Infosys, Wipro, Tech Mahindra, as well as HCL Tech. In terms of consumption names as well, you have HUL, ITC, and a Tata Consumer, all of these 3 that have been trading under pressure. In terms of other heavy weights, if you look at a Reliance Industries, a 0.3% downtick is what you're seeing there. From the PSU banking space, you have SBI, which is slightly under pressure. Axis Bank also seeing cuts of nearly 0.2%. Let's quickly look at the advanced decline ratio, and then we'll look at broader markets as well. In terms of the advanced decline ratio, you have what? 1,600 advances. Clearly the gap is broadening, and that is the beauty over here, Tamanna. I mean, the range that you're picking up in terms of the advances versus the declines, pretty much in favor of the advances. However, your benchmarks, again, not doing very well, but that initial spike that we are seeing right now is encouraging.
Yeah, but you also have your monthly expiry, which is taking place today, and which is why you'll see some volatility in the benchmark. A bit of a spike there now, and let's see how it sustains. I think the story also is what happens in the broader markets. And let's just pull up the mid cap and the small cap. There is no problem there. There's 0.73%.
And that's what your advanced decline ratio is indicating, right?
Absolutely. The small cap 250 also doing well. Let's pull up the sectoral heat map and see where that strength is coming from. Because you had some improvement in the auto pack, but it's reality who's really ruling the roost today. India Defence is doing well. Consumer durables on news that Dixon, etc. are going to get their JV nod. So that was doing well as well. Autos are doing fine. And actually, it's the Nifty IT. If I remove the Nifty IT from the picture, the rest of the market is not that bad. 2.5% down on the Nifty IT, which is why that muted kind of impact on the Nifty as well, because of its outsized weightage there.
We should look at the contributors as well, and that'll exactly
on the Nifty.
Because if you look at the contributors, that'll exactly tell you what Tamanna is talking about.
Yeah.
I mean, there you go. Infosys, TCS. You have a ICICI Bank, you have a ITC from the other sectors. However, what is interesting is a Maruti Suzuki. One-sided move is what you're seeing in terms of Maruti in today's session. Bharti Airtel, in fact, Bajaj group of companies, I think 3 or 4 of them are trading ex-dividend, and that's the impact that you're seeing in terms of the stock price. Titan has also seen a interesting surge in today's session, in the second half of the day. So I think the markets are trying to get there, but there is something which is pulling them down, and I think it's mainly the expiry day impact that we're seeing.
Yeah, and because Brent is benign, we'll pull up Brent in a bit. Europe is doing okay, but these are some of the other triggers this afternoon on Dalal Street. The Nifty is holding on to crucial support levels of 23,850 to 23,900 on expiry day. The broader structure is constructive as long as the Nifty holds above the 23,800 mark. So that support is important. It's a decisive one. 24,100 to 24,250 are your key resistance zones. Value buying is seen in mid and small cap names. The Nifty IT is the top sectoral loser in trade, and the index is now down over 30% on a year-to-date basis. The Nifty IT's worst start to the year since 2003 is what we're seeing. For the Bank Nifty, profit booking for a second consecutive session continues to trade above its key moving average, and supports rest at 57,500 to 57,300. Resistance stands at 58,000 to 58,200. All right, let's go across to Sunny Agarwal joining us this afternoon for his view on the markets. He's, of course, head of fundamental equity research at SBI Cap Securities. Sunny, very good afternoon to you. Where is this nervousness in the markets coming from?
Good afternoon, and thanks for having me on the show. I think, again, maybe frequent flip-flop as far as US-Iran peace deal is concerned, it's something which may have some nervousness. And at the same time, today being an expiry day, that is leading to some kind of subdued trading activity as far as markets are concerned. But having said that, we believe that ultimately now Q1 earnings season is likely to start in the next 7 to 8 days. So market will start focusing on 1Q number, and we all know that 1Q numbers are likely to be muted because of inflationary pressure which most of the sectors have faced during the last 2-3 months because of an higher crude oil prices. So that's a known event, but however, since we know that 1Q is likely to be muted, followed by an slightly concern as far as monsoon is concerned, monsoon how it is playing out. So in case July and August doesn't play out as per the expectation, that can have some impact on earnings even in Q2. But as of now, we are working with an estimate that 1Q will be slightly muted in terms of earning growth, and the remaining 3 quarters for FY27 will be slightly better. So on a full year basis, FY27, we believe that Nifty 50 companies can deliver kind of 12% kind of earning growth, and then followed by 14 to 15% earning growth in FY28. In a short term, what we believe is that so auto sales number will be pouring in tomorrow, and because of the low base, most of the auto companies across two-wheeler and passenger vehicle can deliver a healthy volume growth. And the one way to ride is obviously auto OEM, and another is auto ancillary, where we are seeing a gradual uptick as far as content per vehicle is concerned due to various tailwinds like premiumization, diversification, or inorganic growth.
Okay. Akshay P. Bhagwat also joining in. His senior VP JM Financials, and will give us a view of the technicals today. Akshay, what are you looking at as levels for the Nifty?
Good afternoon to all. So it's a choppy day in a very tight range for the Nifty index, but the crucial level to watch from here from a short-term perspective is the support of 23,800. That's an important support as we head for the new series, that's the July series tomorrow. And if the recovery ensures from the support, then once again we are looking at upsides of 24,250.
Okay. Akshay, good afternoon. Hiral on this side. So those are levels you're watching out for in terms of Bank Nifty. Nifty 50. What is the setup looking like in terms of Bank Nifty as well? Because you are talking about private banks probably who will try to catch up with the PSU bank performance as well in the last couple of months. So is the setup positive, number one, and then your topics?
Absolutely. The support for banking is better placed over the Nifty index. It's just that it's lost a bit of a momentum in the last 3 days, but I believe level-wise 57,500 is an important support, and I believe Bank Nifty should again recover as we start the new series because the rollovers, as I see right now, for the July month are pretty strong, and 58,500 is the immediate top which Bank Nifty can retest in the shorter term time frame. As far as the call recommendation goes, the recommendation is a buy in Federal Bank, where the trend is pretty strong. It's a one-way trend. Current market price 329. We're looking forward for possible targets of 340 to 345 on the upside with a stop loss below 322. That's trade number one. And the second trade which you can look at is Laurus Labs, where again the technical trend is pretty strong. It's a one-way trend, and at the rate of 1517 where it trades, you can buy for possible targets of 1560 to 1570 with a stop loss below 1450.
Okay. I want to quickly address what's happening with transformers and rectifiers. The company has over 1,000 crore order from Power Grid that has come in. That's why that big spike in the stock that you're seeing. Power Grid order for manufacturing transformers is the detail that we have on what has happened with the stock. Just transformer and rectifier is something that you're tracking, Sunny?
Yeah, definitely.
Yeah, so what is your view on it?
So again, we continue to remain constructive on the entire Pharma, including trail. So although one has to keep in mind that in short term, there can be some margin pressure, which we have seen even during Q4 numbers. Most of the transformer companies, because of exponential rise in copper prices, have witnessed some margin pressure, which may continue during the Q1 also. But having said that, the opportunity seems to be pretty large when it comes to our ancillary as a pack. And even for coming to transformer, we have seen that during the last 2-3 years, there has been a significant turnaround in terms of performance. So revenue has doubled, profit has gone up by 4 to 5 times. So I think again 1,000 crore order. So seems that sitting pretty well in terms of order book visibility. So we continue to remain constructive.
Sunny, thanks for that. I mean, this is an ultra mega order, and usually little over 1,000 crores is something which is called as an ultra mega order for a trill, and the execution timeline is over the next 30 months is what they're looking at. And if you have to talk about their order book as well, it stands at little over 5,000 odd crores already. So this is going to be an addition of another 1,000 odd crores that will be coming in, which had, 5,000 odd crores had a revenue visibility of around 2.5 years. So that's what you're watching out for in terms of where trill is concerned. Akshay, quick one in terms of trill. With the spike that you're seeing, are you seeing further momentum?
Yeah, so with the momentum perspective, it's a good stock to buy. From a momentum chasing perspective, the current rate is 350. BTST traders can look forward for this trade where possibly 362, 367 can be the targets which might open up for tomorrow. 340 is the support.
Okay. Stay on with us, please, Sunny, and let's just, and Akshay as well. But let me just talk about one of the big stories of the day, which is a lot that is happening in the private bank space. So a couple of things that have happened with HDFC Bank. Rajiv Kumar has been appointed as part-time non-executive chairman. Beyond that, a new CFO has come in, who used to be the CFO of Axis Bank. The Bandhan Bank CFO is also just put in his papers and will be moving somewhere else. One is not quite sure where. In fact, let me get Sharad in to decode that musical chairs for us. Sharad.
Well, it was actually quite confusing in the last 6 hours of yesterday's exchange filings, but there's a musical chair at play for the CFOs, or in Hindi as we call it, Kissa Kursi Ka. Very interesting. We have Axis Bank CFO resigning, going to HDFC Bank. They are announcing. On the other hand, Bandhan Bank CFO has also resigned. A lot of changes at play. But yes, first of all, let's focus on HDFC Bank. This is pretty much important. And you see that Puneet Sharma has been appointed as the designated CFO from September 1st. And from 1st December, he'll be taking charge of this. Now, of course, this announcement comes in after the legal review has been done regarding Atanu Chakravarti. Also, Keki Mistry, who was already the part-time chairman, now in his place comes in the ex-finance secretary. We have Rajiv Kumar here. He's the interim part-time chairman, and interesting details about him as well. Here's the 1984 IAS batch officer, and also regarded in the role in the BFSI segment in 2017 to 2020, where there were issues in the banking sector. Also, he retired as the finance secretary as well. Also, for Axis Bank, Puneet Sharma, over here he has 26 years of experience coming in the leadership roles in Citibank, BCG and Tata Capital as well, and a lot to actually wonder, especially because earlier the expectations were for HDFC Bank that we would be having Bhavin Lakpata Wala as the expected front runner, but now he has gone to RBL Bank. Of course, CFO Rajiv Mantri also resigned in Bandhan Bank to pursue another career opportunities, and Street might be factoring in that he might be going to another large listed bank, but more on that a bit later. Also, looking at how the shuffle is happening, it gets quite confusing, but over here we try to make it more simplified for you at NDTV Profit.
Okay, let me go across to Abizar Divanji, founder of Neostrat, who's joining us with more. Abizar, the reason we wanted to talk to you about is, no one will really know or tell why a CFO left an X place and moved to a Y place. But from the perspective of how large private banks work, how crucial are some of these appointments? And in the context of HDFC Bank specifically, this shuffle at the top tech with the CFO and the chairman as new people coming in, how much of a bearing does it have on the functioning of a bank?
Okay. So first of all, I think none of these are sudden changes. The chairman was a temporary chairman and he was supposed to be replaced by somebody else. And the CFO was due to retire and hence was to be replaced by somebody else. So I don't think these are reshuffles as a reaction to anything. These are just that over time these have happened. Now, critical to HDFC Bank in particular is see what it's been through in the past. It's been through a governance crisis of sorts, where allegations were put in by a sitting chairperson who then resigned on the back of issues that he considered to be ethically different. Now, those issues have been thwarted, one, by a legal review. So clearly now the bank is out of this governance crisis type issue. However, there were some procedural lapses that had happened in the system, be it the 81 Dubai issue or maybe some technological issues on the ground here. There have been issues in the banking system rather. Let's not talk about HDFC. Kotak faced those issues in the past. IndusInd faced those issues. So ideally, in the run to innovation, in the run to growth, a lot of banks have not had their systems go with them. So now clearly from a chairman perspective, the good thing is that we have somebody who may be able to impact influences. So for example, if HDFC wants to put a point through or get with the government or get things done, I think a chairman of Mr. Rajiv Kumar's capability and reach would be fairly useful from a chairman's perspective to be able to guide it. Of course, I'm sure Mr. Rajiv Kumar, and has he been known in the system, will be slightly more moderated in terms of the actual divide between the role of a chairman and the role of the management. And I think that will be taken care of well. Now coming to the role of the management, if you're having a new CFO, clearly today's CFO in the banking system is somebody who is a back-ended CEO, I would call it. Somebody who is a good check to the existing CEO. So while the CEO is focused on growth, the CFO has to be focused on making sure that the accompanying systems and the processes and the accounting and the transparency levels are maintained. More importantly, the CFO is also now the face to investors. So ideally explaining the numbers and the actions that go behind it is what a CFO really does well. So I think investor or stakeholder communication and managing the back end in terms of making sure that the business is in check is really what a CFO's position is. And I think they've got capable people for that going forward.
Abizar, just on one more question on HDFC Bank. The appointment of a former bureaucrat who's been the Chief Election Commissioner of India. Because remember, some of the names doing the round included a former Deputy RBI Governor, and K.K. Mistry had the interim part-time job till, and came in to help the bank at that time of flux. Do you think that some of the concerns that were being talked about when this whole saga began, Atanu and Shashidhar on two sides of it, may surface again? Because again, now you have a former bureaucrat who has come in.
So it's not about the bureaucrat, Tamanna. It's more about how does a chairman view the position. So it's not. In fact, the bureaucrat is in a way beneficial because there needs to be a stakeholder representation that needs to be even more stronger, and the commitment shows out with the next bureaucrat coming in. But the important is that this particular individual, it's a very individual trait. It's nothing to do with being a bureaucrat or not being a bureaucrat. The individual trait has to be to exercise constraint, consensus building, and encouraging management to perform better, at the same time having a high level of healthy skepticism. So if that is the role of the chairman, is very well defined in the system. Though nothing is well defined in governance, but the attitude of the individual will matter more than what the background is.
Okay, Abhisar, good afternoon, Hiral here. My question to you is, we're talking about HDFC, but what happens to the others? Do you think on the back of the reshuffle that's happened right now, there is talent scarcity in the system or in the sector as a whole, number one? And the domino effect of the attrition that will happen, because if you talk about a Bandhan Bank as well, I mean, it's left with a vacant CFO, and this is at a critical time when there is a transitionary phase ongoing at Bandhan as well. What do you make of that aspect?
No, clearly, everybody has career aspirations and everybody needs to move to the next phase of their career. And I'm sure Mr. Mantri would have done the same. So clearly, is there a void for Bandhan Bank? Clearly, there's a void for Bandhan Bank. Is it something that Bandhan Bank needs to make sure it puts in place very quickly? It has to. Because at the phase that it is in, it's in a transformation phase. It's got a very good team otherwise. And I think it will be able to attract one of the better CFOs rather, who will be having the same attributes. So it's a question of how people want to move around in the system. And most people believe, in the banking system, if you look at it, look at what Bhavin has done. Bhavin has kind of left an HDFC bank to join a RBL bank, which is the new age promise. because of the Emirates Bank investment, it is the next AAA bank which is moved out of being a mid-level bank into a larger level bank. So I think people have aspirations, and those entities need those kind of people. So ideally, it's not only the career advancement for the individual, but it's also the right place for the right CFO. So I'm sure Bandhan will get his. Maybe Mr. Mantri was up for better things, and hence he may have left Bandhan Bank. But yeah, I mean, this is an evolution that happens everywhere and has happened here in banking.
Just a follow-up to that, do you think for mid-sized private lenders to then retain the top-tier finance talent will be difficult when you have mega names like a HDFC, Axis who come in? And in that kind of a scenario, when analysts are talking about mid-sized banks where they're seeing growth coming in, if there is that little shake-up happening, what happens?
So let me remind you that when these mid-tier banks were set up, there was a rush of talent to them because there was an expectation that this is where they will be able to create real value and real organizations. Now, as those organizations have matured, people have reached different levels. And RBL would not have attracted somebody unless they got an NBD which says, oh, now I've got $3 billion of capital. And I can do a lot more with that kind of capital, and the right CFO will help me drive the way through and transform the bank. So people look for challenges. And the challenges will exist in mid-tier and large tier. I don't think there is any doubt about that. It's the question of the promise that the bank shows for the incumbent. Now it's for the incumbent. It's not that the bank does not have promise. It's for the incumbent. So there'll be somebody else who sort of spent enough years in X organization, a mid-tier bank. Now let me move to a more mature bank. And somebody else would say, let me take up the challenge at a mid-tier bank and grow it to a large bank. So I think it's individual career preferences which normally drives where people need to be. The other thing, of course, is what are your skill sets? So the kind of effort and the kind of investor focus, externalism required in a mid-tier bank is far larger than that required in a larger bank. Because in a larger bank, frankly, unless you have a crisis management to do like HDFC may have going forward, there is not much to do. There's a way to keep the ship controlled. But some people may like the challenge and others may be more fitted for running organizations which have matured and grow well.
Okay.
Okay, thank you so much, Abhisar, for joining in. I mean, I think there is so much more to talk about in terms of how, as one segment, banks get a lot of focus on who's running them versus a lot of other companies. And definitely banks too, because the stakes are that high. But we'd love to catch up again for a deeper conversation. Abhisar Divanji there. Let me go across to Sumit Sarkar, that time of the afternoon where we get you all the chatter from dealing rooms. Sumit, what's on your plate this afternoon?
Well, firstly, it's Apollo Microsystem and Premier Explosive. Now, the buzz on the street is that Apollo Microsystem will look to acquire Premier Explosive. And for this acquisition, Apollo Micro might also do a fundraise, is what dealers are acquisition. The fundraise will primarily be to fund this acquisition of Premier Explosive. When it comes to Genius Power, there was a big block deal that took place in trade today. GIC was a likely seller here, but what dealers are also indicating that there are smart HNIs have started to accumulate this counter at lower levels. So keep an eye out for Genius Power. They're expecting the stock to bounce in trade tomorrow. For Kotak Mahindra Bank and Axis Bank, there are buy flows on the PMS desk. Dealers are expecting the Q1 updates to be quite strong for both the names. So keep an eye out for both the banking names as well. And lastly, when it comes to Just Engineering, there's a block deal of around 12 lakh shares that took place in trade today. Dealers are indicating that a prominent large HNI was one of the buyers in this block deal. The stock was down over 3% in trade, but has recovered very swiftly. It would be interesting to see the names that come out in bulk and block deal data post-market today.
Okay, thank you for that, Somit, in terms of interesting names that we're looking at. Akshay, let me come to you. From the names that actually Somit has mentioned as well, there are some of the movers that you're looking at. Apollo Micro, Premier Explosives. In fact, the defense sector as a whole has been one of the top gainers today. Anything that you like on the charts?
Yeah, so Apollo Micro looks promising. Now, the stock has been in a range since the month of June. The range is pretty evident, 380 support and 440 resistance. And what I see on the charts is possible accumulation in this range. It is setting up for a breakout above 440, post which you can look forward for potential targets of 475 to 490.
Okay, so that's with regards to where Apollo Micro System goes. Thank you for that. Stay with us. In fact, another company which is buzzing in trade, Magellanic Cloud. Let's pull up that one on the screens. Now, that stock is up 6.5%, did touch an intraday high of around close to 10% kind of gains. And e-surveillance, that has emerged as the key growth driver for this company, as one of their subsidiary has secured a letter of intent from Manappuram Finance across 1,000+ branches. We have Joseph Sudhir Reddy, Global CEO and Chairman and MD at Magellanic Cloud, joining in. Mr. Reddy, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question coming to you is, if you could help us understand, what does this LOI actually translate into that you've got from Manappuram Finance, which will be applicable to 1,000+ branches?
Thank you for having me here. Joseph Sudhir Reddy, Magellanic Cloud, group company that has multiple subsidiaries, which one of the major area of segment is the e-surveillance. This LOI from Manappuram is one of its e-surveillance that we do have the intent of doing the entire monitoring of their branches and watching out their vaults and giving the access to their vaults. That is the kind of high-level picture of it, but we do utilize AI with models and give a predominant view of what is happening in their gold branches and how do we secure them, how do we protect them, and it automatically alerts the command center where our people will be watching out, vigilant if there is incident. Most of the AI technologies that we utilize. If you want me to expand or elaborate more, I would love.
So, Reddy, just trying to understand, how are you differentiated from any other surveillance systems that are available? What would you be doing in these 1,000 branches of Manappuram, for example, that the regular surveillance systems cannot do? Just trying to understand the differentiation you bring to the table.
Absolutely. I think, yeah, that's the great question. So traditional surveillances are direct CCTV cameras that were installed, and there will be some people watching out at the command center, live, eyeball monitoring, those kinds of things. Everybody is moving to a proactive intelligence that has been put in place. We have been serving in this e-surveillance specific area and providing to a lot of banks, branches, over 25 to 30,000 branches or banks or ATMs could be other things. Gold is a special case that where we have put in our effort to create these models, AI models that will be sitting on the edge, and that gives the alerts mechanisms when you have some incident or observation that is suspicious or a deviation without regular SOPs. A standard operating procedure has been defined saying that this has to be done this way. A traditional will be looking after manually and or minimum automation kind of a process. But here we are utilizing AI models to be able to identify where you are deviating from a regular standard operating procedures. I cannot elaborate more as it gives to you the insights of the business and whatnot. But with the traditional, it's manual or semi-automated, which is having a particular rules that you write. But here, we are utilizing the AI and giving you and learning what could happen and what not. That is the differentiator.
Sure. We would love to talk more about this order as well, and we will connect back with you as well. But thank you so much for joining in on this edition of India Market Close. We'll quickly have to slip into a short break. We have lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suslan. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means. Welcome back. You're watching India Market Close. Nagaraj Shetty joining in now to talk about the technicals that we're seeing in the markets. Nagaraj, very good afternoon to you. Let's just talk about why the Nifty has been flailing in that very narrow range. Do you see any possibility of improvement?
I think the short-term trend remains range-bound for the market. The near-term trend remains up. We have seen some tremendous up move from the lower levels. That market found the resistance somewhere around 24,200 levels. I'm expecting this consolidation movement is likely to continue at least 1 or 2 sessions before showing a breakout of 24,200 again from the lower levels. So remains choppy for the market, and 23,800 is going to be a good support for the market in the near term.
And what about stocks on your radar?
I have 2 stocks from alongside. First one is from a pharma front, Gland Pharma. Chartically, this Gland Pharma has witnessed a sharp breakout recently, continuously moving up over the last 3-4 sessions. Overall chart pattern is looking positive, currently trading around 2515, 2516 levels. So I'm expecting this to move up further, and immediate upside target would be around 2650. One can place a stop loss at 2425. Second one is ITC Hotels. After a small downward correction, the stock price has bounced back very well from the lower levels, indicating a positive chart pattern. Currently placed at the edge of moving above 200-day EMA, the chart pattern is looking positive with rise in volume and positive RSI pattern. I'm expecting more upside from here onwards. Currently trading around 179.75, 179.80. One can look to buy at CMP. Immediate target would be around 190. One can place a stop loss at 175.
Okay, so ITC Hotels and Gland Pharma is what you're watching out for, Nagaraj. Nagaraj, the other sector I want to pick up with you is what's happening with real estate and defense. Both these counters, the momentum is absolutely strong in terms of today's session. Anything that you like over there which could be good momentum plays?
The real estate has witnessed a good build-up recently and moved up very well. Uber Realty is the one, the stock price is continuously moving up, placed at the edge of breakout. On the defense front, BDL is the one, after a small downward correction, bounced back very well. And even Mazgaon Dock also placed at the consolidation, placed very well above the support. So these are the two stocks which are strong in the discussed sectors.
Okay, so, in fact, all of these counters are seeing some bit of profit booking from the day's highest levels, if you see in terms of Nifty India Defense as well as the real estate pack as we speak. In fact, another stock that we should be watching out for, Eicher Motors, and that is our stock of the day. And this is after the Delhi government has actually cleared the EV policy. Puneet joins us to tell us why is it negative for Eicher Motors as well. Puneet, 4.5-5% downtick on Eicher Motors. Seems the Delhi EV policy is not really working for them. And if other states follow, I don't know what's going to happen.
Well, most certainly, and it's something that the company will have to look at in terms of increasing the product suite. But largely, as you rightly mentioned, that continues to be the biggest impact, the biggest loser for the Nifty 50 today as well. From 2028, only the electric two-wheelers will be registered from April 2028 in Delhi. Now, very importantly, such policies could actually become a template for the other states and hence could be a very key monitorable to watch as well. When you look at Eicher Motors, the total combined sale is roughly around 3.3% at this point of time, and this is only for the Royal Enfield brand. It's also important that the company does not have a product which is at full scale right now, and we'll get to that in just a bit. But compared to the others as well, TVS as well as Hero both have electric scooters as well, along with other bike options that they will look at in the future. So hence, the most impacted at this point of time because of this policy as well. When you also look at what brokerages have also flagged off as concerns, specifically, for Morgan Stanley, they have mentioned that they are seeing less of an EPS impact, but this could weigh on the multiples and essentially on valuations, something that we're already seeing today. They've also said that Eicher in particular now needs a successful electric vehicle option. If that would be under Flying Flea or any other sub-brand, will be something to watch. Kotak Securities has also said that all motorcycle heavy OEMs, in which Eicher does count itself in, are at a big disadvantage at this point of time because of this policy. Now, what do you have to watch out for if you're a shareholder already, or if you have to watch as someone who's looking at it prospectively also, is because they launched the brand Flying Flea in April of 2026 and the first model is out, but the rollout continues to be very slow at this point of time, and hence the mainstream motorcycle brand, of course, in the EV space, but the rollout has been much slower, only in a couple of states as of now. And in terms of the other competitors, Ultraviolet, Revolt, as well as Ola Electric are all present. Ather expected in the next year as well. You could expect some strong pushback from OEMs as well as on auto ancillaries and dealers. Watch out for that impact. And finally, on valuations, has come down materially from that 5-year average of 34 times price to earning. Currently trades at around 27 times, but compared to the other OEM players also is slightly more expensive. So if you can pull up the plate, if not, 31 times is what TVS Motor trades at. Eicher is at 27, but Bajaj and Hero are at 15 to 20 times price to earning multiple.
Okay. Just want to get a quick view from Nagaraj on Eicher. Eicher, let me get, and Maruti as well. Both stocks in focus and seen as diametrically opposite in terms of the impact they have of the Delhi EV policy.
Yes, rightly said. Eicher Motor broken down after moving into a consolidation and placed at the 200-day EMA support, but looks like we could see some more weakness in the short term. At the lower level, 6,800 is going to be a support for the stock price to at least show some bounce from the lows. And other side, Maruti is looking very positive after moving into a consolidation band. It has bounced back very well in today's session after the news and surpassed the 200-day EMA, which was a hurdle over the last couple of months. The chart pattern of Maruti is looking positive. I'm expecting more upside towards the next overhead resistance of around 14,800 to 15,000 levels.
Okay, let's also talk about Goldman Sachs. Goldman Sachs has an interesting take on Page Industries. They have hiked their target price to 48,000 from 45,000 and maintained a buy. The price hike is taken in May and volume growth momentum to sustain is what they're saying. Volume growth recovery is led by structural factors. Signs of improvement in the EBO experience bode well for the long term, and the online channel continues to see good growth. That's one of the points that we have on the show. Nagaraj, just a quick view on Page Industries.
The industry has been moving up continuously without showing any reasonable downward correction in between. The strong upside momentum, the chartically very bullish setup, I'm expecting more upside from here onwards. Though it has placed at the higher levels, still there is no indication of any significant reversal building at the higher levels. So 44,000 is going to be the next resistance to be watched in the near term.
Okay, so that's with regards to Page Industries as we speak. But moving on, Tamanna, Dixon has been in focus, I think, since the time Shrimi actually broke the story with regards to the JV with Vivo, that it's being fast-tracked. And now there is a further update that's coming in there, on the back of which you did see the stock spike once again in today's session. The Dixon-Vivo deal is gathering pace, and as sources indicate that the JV is now in the final stages. Rishabh is here to tell us more. Rishabh, the stock did see a good spike, has cooled off, but still trading in the positive. What are you picking up?
Absolutely. What we're picking up is the fact that the government is inching closer to approving the Vivo-Dixon JV that has been in the works for quite a while. There have been a lot of aberrations and delays. The company's management has also been very cognizant of that. A lot of issues with Vivo being under the scanner for a bunch of reasons. Of course, it is a Chinese company, so there are concerns that the government has on that front as well. But what we're picking up is that this JV is moving closer and closer to the final approval letter being received by Dixon. Just a couple of weeks back, we reported that the interministerial panel that the government had appointed had already cleared this approval. So this is making progress as we speak. What we're picking up is, of course, the fact that this deal will be extremely value accretive to Dixon Technologies. They will be making, if this deal goes through, up to 22 million units for Vivo smartphones on an annual basis. So that is going to be a big contract and a big deal that this company signs. The company has been doing well basis this news as well. So what we're picking up is the fact that this deal is moving closer to fruition, and we will keep reporting on this like we have over the past few months or so.
For that, Rishabh, but the fact is that this story has been in the ether for so long as far as Dixon is concerned. I think the street will now maybe react when it finally happens. Let's talk about our bull versus bear candidate for the day. It's a mixed outlook emerging for Bharat Dynamics. Strong order wins at one end, and a robust order book is supporting long-term growth. But near-term margins, execution and supply chain risks remain key monitorables. Varsha joining in to give us both versions of how we should look at the company.
First of all, the 1,350 odd crore order from HAL improves visibility for this company. That's the bull case that I'm going to start off with. A good order win from HAL. But recently Goldman Sachs has maintained sell 8% downside from current market price. This is one of the bear thing that this company has. But moving on, the 1,110 crore Helena order came earlier than expected. This was expected, but this came much earlier, so kudos to company for that. But the revenue from these orders will only come from FY28, and the point here is the FY27 we might see some kind of pressure there. Moving on. New missile programs and UAV systems will add opportunity for the company, so that is the next growth trigger that the company has. But margin will be at risk and higher due to the use of higher external components. So one must keep a watch on margins for this company. Talking about large order book of around 26,000 crores gives strong visibility for the company, but Q4 performance was weak. Even there was a margin impact in Q4. Also, company did miss its guidance as well. But they are expecting a strong comeback when it comes to margin, which is expected to improve with better execution going ahead. But FY26 overall performance was actually weak. And why I'm talking about this, because we need to keep a watch on FY27 whether company company will maintain that guidance, or how FY27 will be overall for the company. Moving on, so overall, if you see, there are good growth prospects when it comes to BDL, considering the order book that they have, but margin improvement and FY27 growth is one key factor that you should watch out when it comes to this counter.
Okay, thank you for that, Varsha. We'll take a very short break at this point. Let's do a quick market check before we get into that break. Bharat Dynamics is fine. We've seen the broader markets improve, but just let's take a look at the Nifty before we get into that break. If we can just pull up the Nifty very quickly, languishing, right? Below that trend line, 0.34% up, nothing much happening there. We're coming right back with all of the latest, plus your BTST ideas. Don't go away.
Co-powered by Coin Switch.
Economy, business, world.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names.
Welcome back to India Market Close on NDTV Profit. Now, clearly, as Tamanna was just mentioning, if you pull up Nifty 50 and Bank Nifty, absolutely languishing in the last 15 to 20 minutes of trade. We're nearly at the day's lowest levels. I mean, no major direction is what you're seeing. In fact, let's also get in Ashish Chaturmurthy, Managing Director and Fund Manager at Apex PMS JM Financial. Ashish, good afternoon and welcome to the show. We know it is expiry, but clearly with the way markets have been moving right now, what is your view in terms of a direction? Do you think this could still be a good opportunity to look at some strong names, and if so, which would they be?
Hi, good afternoon. So yes, I think it's broader markets are into a consolidation phase, and obviously if one look at Nifty 50, then obviously certain sectors like IT, FMCG, they have been underperforming the broader market, and also within the large cap private banks, which has got a very, very significant weight at an index level. So if you look at HDFC Bank has not delivered any return. So obviously because of these factors, index is looking very, very tight within a range of 23,500 on downside to 24,200 on upside. But if you look at the real strength which is coming into mid and small cap, where I think very, very strong earning visibility is being seen across mid cap, where we have seen almost 26% kind of earning growth, and small cap almost 18% earning growth. So clearly the traction is getting built into mid and small cap indices, and particularly into themes like data center, energy, defense, and CDMO to a great extent looks very, very promising within the broader market per se.
Okay. Stay on with us, Ashish. Just going across to Parth. Parth is joining now to tell us what are the top volume buzzers in afternoon's trade. Parth.
Yeah, sure. So there are three stocks that are buzzing on the back of really good volumes. The first one is Gufic Biosciences, which earlier today saw an up move of 15%. In the last 2 days, the stock has seen an up move of 20%, touching the highest levels the stock has seen since January 2025. Volumes today are the highest ever the stock has seen since May 2017, and 14 times its 20-day average volumes. Next in line, we have Genius Power Infrastructure, which is on a 3-day losing streak and has lost almost almost 20% in the last 3 days. Today, the stock has seen the highest ever volume since it got listed in 2005, and they are 13 times its 20-day average as well. Lastly, we have Saxoft, which is on a 3-day gaining streak and has gained over 50% in just the last 3 trading sessions, hitting a new 7-month high as well. On the volume side as well, volumes today are 10 times its 20-day average and the highest ever since the stock's listing in 2005. So these are the 3 stocks that you should keep on track on the volume side.
Volumes picking up as well. Saxoft is up 12 to 11, 13% as we speak. Nagraj, anything on the charts that you like on these names?
Pick is the one that has broken above the hurdle and erased some of the gains today from the higher levels from 442 levels. I think looking very positive at this point of time, and even RSI pattern is also looking good. So 440, 450 is going to be the next resistance to be, 445 to 450 is going to be the next resistance to be watched for the stock price in the near term.
Okay. All right. Let's, just get some very quick BTST ideas from you also, Nagraj. Anything that you're liking from the auto sector which you think can continue momentum?
Maruti is looking positive. It has broken above the consolidation band and looking positive, moved above 200-day EMA. I think placed at the higher levels, slowly, gradually, higher tops and higher bottom is indicating gradual momentum on the upper side. I think looking positive for the short term. 14,500 is going to be the next hurdles to be watched in the short term.
Okay, so that's Maruti. In fact, Genus Power also is something that was mentioned by Parth. Now, MK also has come out with a note and they have a buy for a target price of 550. This is mainly on the back of the smart gas meters, where the opportunity is ripe and expecting orders in FY27 as a whole. Nagraj, on the charts, now you're seeing a Genus Power which is down 6.5% as we speak. But you have a lot of brokerages which have a tall target price on this one. Do the charts match that?
Last 2-3 sessions decline has damaged the chart pattern, obviously, from 360, 350 to almost 275, 280. So looks like very negative at this point of time. And though there is a possibility of minor bounce after having declined from 350 to around 285, 290 levels, there is a scope for some bounce. I think I'm not expecting a bigger upside from here onwards. The bounce could reach up to around 315, 320 levels in the near term.
Okay. Now, amidst a pause in the Iran war and the reopening of the Strait of Hormuz, falling crude and higher fuel margins could help OMCs recover losses in about 7 months, provided current market conditions persist. Somit joining in with details of how we make that race to 7 months. Somit.
Well, if you look at the crude oil prices, they are now averaging around the $72, $73 per barrel mark. Now, this is because the settlement of US and Iran and normal crude oil flowing through the Strait of Hormuz, that is close to 20 million barrels per day. Along with this, it's a combination of lower excise duty and higher retail fuel prices. So 3 things that is helping oil marketing companies to aid higher gross marketing margin at this point is lower crude oil prices, low excise duty and higher retail fuel prices. Now, if you assume that the landed cost of crude in India is around $77 per barrel, that is $5 per barrel higher, assuming that is the transportation cost. The blended fuel gross marketing margin earned by oil marketing companies is 23.1 rupees per litre. This is what they are earning on selling every litre of petrol and diesel, as against the historical average of 12.4 rupees per litre. So clear gap, or clearly they are earning 10 rupees more right now on every litre of petrol and diesel. Now, if you use this against the consumption that we are seeing, now on a daily basis around 463 million litres of fuel is consumed, of which 90% is the market share for the oil marketing companies. So they are selling close to 417 million litres per day. And the losses that oil marketing companies had seen earlier because of higher crude oil prices was close to 90,000 crore rupees. And this is for the month of March, April, May and part of June. Now, this 10.7 rupees per litre that they are earning higher compared to the historical average, multiply that with the multiply that with the fuel that they are selling on an everyday basis, they can recoup nearly 446 crore rupees of loss on a per day basis that they were doing earlier. And this, if you multiply with if you compare with the 90,000 crore loss, it can take nearly 7 months for the oil marketing companies to recoup the losses. But there are a few assumptions to this, and those assumptions are also a big risk to this calculation. Firstly, if crude oil prices move higher, then the time taken could be longer. If rupee depreciates further, again the time taken could be longer for the oil marketing companies. And the two of the biggest risks which could happen is what the street is anticipating, and hence we are not seeing a big move when it comes to oil marketing companies. Firstly, government could roll back the excise duty cut. They had reduced the excise duty by 10 rupees per litre. So street is expecting government to roll back that. And also, oil marketing companies had increased fuel prices by around 7.5 rupees per litre. So that could also be reduced going forward to keep inflation on check, is something that the street is expecting. And because of these two reasons, oil marketing companies are not performing at this point of time. But given the scenario, it will take nearly 7 months for the oil marketing companies to recoup the entire loss that they had seen in just 3.5 months.
One can assume things will only get better from here, because we've just seen the start of flow of crude prices. Ashish Chaturmota, oil marketing companies is something that you're looking at as a potential gainer. We have a 6 to 7 month timeline that we've talked about today.
So, Tamanna, generally we have avoided this space of oil and gas space, whether it's on the oil marketing company side or even the explorers for that matter, because maybe from a valuation perspective, they might look very promising at 1.1 time price to book and with a very strong dividend yield. And I think now, obviously, crude prices coming down, rupee also stabilizing, there could be chances of good recovery. So maybe some short-term pullback could not be ruled out in these names, but as a matter of fact, from a medium to long-term investing perspective, we have avoided these names because of the kind of volatility this space has reflected over a 5 year or a 3 year long period journey. So clearly, from a short-term perspective, yes, some pullback of 10, 12, 15% could not be ruled out, but as an investor, we have been avoiding this space.
What are the spaces where you're finding potential though? When you say you're avoiding OMCs, what are you liking?
So definitely, I think as we mentioned, CDMO is one space which looks very promising to us, because if you look at CDMO as an opportunity, it's very structural. The way innovators are doing tie-up with a lot of Indian players and the way the molecule development has been taking place, many companies in this space have seen a growth of almost 30 to 60% on a Y basis, clearly indicating that there's a very, very strong growth trajectory which is being witnessed. And within this space, we have been positive on stocks like Laurus Lab, Divi's Lab, Naveen Fluorine, or even for that matter, SciLife, which has been working on many molecules. So I think this is more structural trend which is getting reflected into this space. If you look at the entire energy space, we believe that the entire HVDC space or transformers and so if you look at the overall T&D space, the capex is going to be almost 9 trillion rupees, and I think that's where a lot of order book is getting built, and we believe Siemens Energy is one stock which is one of the cheapest within this space. So our sense is stocks like Siemens Energy, CG Power, Thermex could be a very big beneficiary of this entire energy transition, plus the entire data center story which is going to play out.
Okay, so those are a few of the power names that you're talking about as well. Any view that you have, Ashish, with regards to real estate? Because that sector has been gaining traction, but the concern over here is initially the ask was that probably your new launches is something that probably will get delayed. Then the question came in that is it going to be execution, because launches are happening, especially with your large builders. So how would you advise investors to look at real estate as a space?
So, Hiral, we believe that we have always believed that rather than playing direct real estate, one should play the proxy. And proxy, ideally, the good way to play could be wires and cables as a segment, because that's not just the proxy for real estate, but also the entire capex, manufacturing, data center. I think it can't happen without wires and cables. So we believe that the best way to ride the real estate story should be through these proxies, and ideally wires and cables, because if you look at the leaders like Polycab and KEI, the earning guidance is going to be 20%. If you look at some of the mid-cap companies, like for example, RR Kabel is going to grow at 30%, or even a smaller players like VMark, which is more into SME or a small or micro cap segment. These companies are going to grow at 35 to 40%. So clearly the growth trajectory is very, very strong. They have maintained their margin profile even in an environment when copper prices were extremely volatile. So clearly indicates that the earning visibility could be seen from a medium to long term perspective. And with almost 20% kind of top line growth, we believe this is a space which is going to compound very well.
Okay. Thank you so much, Ashish and Nagaraj, for joining in. And, we are in the end of the 30th of June, Hiral. The halfway mark for this calendar year has already happened. I don't know about you, but I feel like this year has just zoomed past.
Absolutely, zoomed past, and there has been so much that has happened on the geopolitical front, the impact it has had on markets as well, the commodity cycles as well, because you've seen that upcycle, and now in the last couple of days, that slump that has come in. So lots that has happened, and I think the best way to look at it is how markets have fared. Just look at the returns and that'll tell you the story.
Nifty is about 8% down. Mid-cap 150, this is since 1st Jan, so we're looking at a 6-month return. The mid-cap index is flat, the small cap is also flat, and that's actually not too bad. Let's look at a 6-month return in terms of the indices which have done well. Nothing, barely any returns coming in across the board. India Defence, Metal, Pharma, PSU banks, all of them are barely showing any returns. Let's look at, on the other side, what's happened with Bank Nifty. 3% down. Financial services, 3% down. Nifty Realty being one of the worst performers, 4.5% down. The Nifty Auto is about 5% down. But there are worse ones out there. Hold your breath. Okay, the oil and gas, 7% down. FMCG, 11.5% down. And wait for it, the Nifty IT in 6 months has given you a negative 31% return. What are the stocks that have been top performers in the last 6 months? On the positive side, in terms of a 6-month return of individual stock, you've got Adani Enterprises, Apollo Hospitals, Adani Ports, and SEZ. But that's pretty much it. I don't know if we have the top losers in the last 6 months. That would be also interesting to see. But it's been quite a tumultuous year so far. You've had, Hiral, a trade war, an actual war, the blocking of the Strait of Hormuz, a massive IPO with the size of SpaceX, and this whole AI transformation which has taken place.
Absolutely. Lots happening. That's exactly what we're talking about as well. But the question over here is, Tamanna, all the sectors which have underperformed, will they see a ray of hope in the second half of 2026? And that's what everyone is going to watch out for. But clearly, right now, if you see in terms of closure as well, the advanced decline ratio is what I want to pick up first, because clearly your declines have increased, the gap has narrowed, and that's telling you what's happened with the markets. Pull up Nifty 50 on the screens, because from the kind of surge that we saw when we started off India market close, that has been given up. And again, Tamanna, look at the rise. So this is clearly telling you this is a pure expiry play. I mean, there is no major movement. You're at that 23,920 mark. So 23,900 is protected, which is slightly positive right now.
Yeah, barely 100 and 150 point range like we saw in Monday's trade as well. Pull up the Nifty contributors and then we'll get to the heat map very quickly and tell you what's been happening there as we close off for trade. Infosys, TCS, some of the biggest losers dragging down the markets today. Maruti, Bajaj Finance and Titan have been contributing on the Nifty, but that's not quite the heat map. Come back with a heat map. Let's just see what the heat map is showing you today. And Maruti really 5.5%. The EV policy, everything they're doing to clean up Delhi is helping. Titan's doing well today, so is Adani Enterprises and Bajaj Finance, Eternal as well. But Eicher Motors, I mean, the lack of an EV play is really hurting
them. And I think, if other states follow, the pressure is going to be more in terms of Eicher going ahead. The consumption play also comes to my focus, Tamanna, because look at ITC, look at Tata Consumers and look at HUL. I think the rainfall issues, the El Nino impact is what you're looking at. Your Kharif sowing is 22% below normal right now.
Yeah.
So if that is we are not able to catch up on that in the next 2 to 3 weeks, your FMCG companies will see a hit.
There was an IMD alert just before we've closed up saying that there's a red alert in some parts of Maharashtra as well. So you're going to have a very extreme kind of weather event there. We'll just look at the top gainers and losers in the broader markets before we wrap out of India market close and look at the picture over there. Quest Corp, about 7.5% up. Balaji Amines, Cochin Shipyard, Balrampur Chini, some of the winners today, but not too much action. On the losing side, KPI Tech, ZF Commercial, Eicher Motors are some of the ones which are hurting. So
again, majorly IT.
Of auto and it's mostly an IT down day kind of a story. But that's all the time we have on India Market Close. From Hiral, me and the team that put the show together, thank you so much for watching. Stay tuned. All the action continues on the other side.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $60,000 mark. The levels are coming on back of technical bounce. Germany leads Mika crypto authorization on deadline. Dubai's Vara license sells 50th crypto firm. Strategies Michael Saylor hints at another Bitcoin buy. Well, that's all about the headlines. Let us talk about some crypto basics here. Remember, tokenization is the process of converting ownership of a real-world asset into digital tokens on a blockchain. Now, think of it like dividing a property or a bond or even a piece of art into thousands of digital units that people can buy, sell, or trade. Remember, each token represents a share or a claim on the underlying asset. A simple analogy is a pizza. Instead of one person buying the entire pizza, you cut it into multiple slices so many people can own a piece of it. Now the tokenization does the same thing but with assets. Rather than requiring someone to buy an entire building worth 100 crore rupees, tokenization allows investor to own a small fraction for a much lower investment. Now the biggest advantage is accessibility. It lowers the entry barrier, improves the liquidity by making traditionally illiquid assets easier to trade and enabling faster, more transparent transactions through blockchain technology. Globally, we are already seeing interest in tokenizing assets such as government bonds, real estate, private credit, investment funds, and even commodities. Financial institutions view tokenization as a way to modernize capital markets by making ownership more efficient and settlements much faster. That said, tokenization doesn't automatically make an asset safer or more valuable. The value still depends on the underlying asset and the strong regulation, investor protection, and of course a clear legal rights which remains essential. So tokenization is best understood as a new digital infra for representing ownership, not a new asset class, but in itself as well. Well, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved. whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome back to NDTV Profit. You're watching Market Express. My name is Puneet Zaveri. Let's get straight into the show. Markets stay choppy in trade. Nifty ends near the day's low, below the 23,900 mark. The Sensex is also down by over 250 points, while Maruti Suzuki and Titan top the gainers in terms of the Nifty 50. Eicher Motors continue to be down and out in today's trade, led by the Delhi EV policy. Tata Consumers also lags behind, while the broader markets outperform the benchmarks. IT, banks, metal and FMCG were the top sectoral drags for the day, with the tech index falling by over 2.5%, while defense, realty and pharma were among the top gaining sectors. Shilpa Medicare jumped by over 5% today after the company's wholly owned subsidiary Shilpa Biologicals entered into a co-development and supply agreement with the Finland-based Orion Corporation. Now the agreement has been inked for the company and co-development essentially and supply of intravenous nivolumab biosimilar, referencing one of the world's most widely used cancer immunotherapies. Goldman Sachs stays bullish on Page Industries, raising the target to 48,000 rupees per share from, and says essentially that the price hikes, improving volumes as well as stronger EBO experience, which is exclusive brand outlet experience, as well as the online growth is underpinning the long-term demand visibility of the counter. Stock was up almost 2.5% today. Zaggle Prepaid is in focus after entering a 5-year agreement with APSE Financial Services to provide its Zoyas platform and expense management solutions. Now, it is strengthening its SaaS offerings going forward as well. Shares of transformers and rectifiers surged by over 6% after the company secured over 1,000 crore power grid order, boosting investor sentiment as well as strengthening its order book visibility. Stock continued to be up and all about today. Eicher Motors was the top loser for the Nifty 50 and slipped after the Delhi government cleared the EV policy for the state, encouraging more electric vehicles. Now, this move draws a hard line under the capital petrol and CNG two-wheeler trade and leaves Eicher Motors Royal Enfield brand exposed at this point of time. They just carry one electric model that is under the Flying Flea brand, and that's despite Royal Enfield's commanding market position. Delhi contributes to about 3.3% share of the overall sales for Eicher Motors, and hence, with no EV alternative, this will be something to watch. It comes in on April 1st, 2028. Now, the government is in final stages of issuing an approval letter for Dixon Vivo joint venture. Now, sources say that the venture nears the final node after the interministerial panel clearance earlier this month, marking a key regulatory significant progress on a joint venture that's been stuck for 19 months now. Oyo is checking back into Dalal Street. Now, the parent firm Prism has filed for a 6,650 crore rupee IPO. All fresh money, no exit from the existing investors. Big names like SoftBank and Ritesh Agarwal himself are staying put, signaling confidence at this point of time. Now, the focus is clear. Clean up the balance sheet and back growth even as profitability improves and key overhangs fade away. Gold prices are on track for their biggest quarterly decline in more than a decade. Now, the precious metal is heading for its sharpest fall since 2013 as a hawkish US Fed Reserve continues to weigh in on investor sentiment. Now, expectations of a higher interest rate for longer have strengthened the dollar and reduced the appeal of non-yielding assets like gold. WhatsApp is working on a new feature that could make chatting more private. Now, the platform is expected to let users connect using unique usernames instead of sharing their phone numbers. Now, that means that people will be able to start conversations without revealing their personal contact details. Now, the feature is aimed at improving privacy, especially when messaging someone for the first time or joining group conversations. A major leak has put Apple's next generation iPhone in the spotlight. Details, images, and supplier information linked to the upcoming iPhone 18 Pro have reportedly surfaced online following a breach involving a Tata Electronics facility. Now, as per reports, the leak includes photographs of components and reveals parts of Apple's global supply chain. While Apple has not commented on the report, the incident raises fresh concerns over supply chain and security, as well as product secrecy ahead of the future iPhone launches. Prime Minister Narendra Modi is likely to travel to the United States and Canada in December for a series of high-level engagements. Now, the visit is expected to include the G20 summit as well, as talks on strengthening economic ties continue. Now, a key focus could be progress on the proposed comprehensive economic partnership agreement with Canada as well. At least 30 people were injured after a fire broke out at a naphtha pipeline inside the Haldia petrochemicals plant in West Bengal. Now, the blaze triggered a major emergency response, with fire tenders rushed to the site to bring the situation under control. The injured have been shifted to a nearby hospitals for treatment, while the cause of the fire is yet to be confirmed. The Kerala High Court has ordered a swift investigation into the alleged irregularities in the Sabarimala gold plating case. Now, the court directed the special investigation team to carry out a thorough probe, stressing that no aspect of the case should remain unexplored. Now, the High Court has also called for a time-bound investigation to ensure accountability. The case relates to allegations surrounding the use of gold for works at the Sabarimala temple. An India-US trade deal could be just around the corner. The US ambassador to India, Sergio Gore, has said that the negotiations are now in final stages, with only the last 1 or 2% of the discussions left. Now, the remarks signal that both sides are close to resolving the remaining issues. Once finalized, the agreement is expected to boost trade, strengthen economic ties, and open up new opportunities for businesses in both countries. Iran has dismissed US President Donald Trump's claim that talks are underway between Washington and Tehran. Now, Iranian officials say no direct negotiations are taking place with the United States. However, Tehran has confirmed that an expert delegation will travel to Qatar later this week for separate discussions. Now, the death toll for the devastating earthquake in Venezuela has continued to rise. Now, authorities have actually said that at least 1,700 odd people have now lost their lives, with rescue teams still searching through the rubble for survivors. Now, thousands have been injured and many more have been displaced as entire neighborhoods were flattened by the powerful earthquake. Now, emergency services remain on the ground, while aid agencies are stepping up relief efforts for those affected. Morocco has pulled off one of the biggest upsets of the FIFA World Cup, knocking out the Netherlands in dramatic penalty shootout. Now, the round of 32 clash finished the draw after the extra time before Morocco held their nerve to win the shootout 3-2. Goalkeeper Yassin starred with a crucial save, while Ismail Saberi scored the winning penalty to send Morocco through. Germany's FIFA World Cup campaign is over after a heartbreaking penalty shootout defeat to Paraguay in the round of 32. Now, the match finished 1-1 after extra time before Paraguay held their nerve to win the shootout 4-3. So the result sends Paraguay into the round of 16, while four-time World Cup champions Germany suffered an early exit from the tournament. It's another major upset in a World Cup already full of surprises, with Paraguay keeping their dream run alive. Japan's World Cup journey has also ended in a heartbreaking fashion once again after Brazil scored a late winner to seal a 2-1 victory in the round of 32, denying Japan a place in the last 16. Now, Japan had battled hard and looked set to take the game into extra time before Brazil struck in closing stages. Now, the five-time world champions now move into the round of 16, while Japan's wait for a first ever World Cup quarter-final appearance continues.
Get in Ashwini Agarwal, founder of Demeter Advisors, on the show. Ashwini, great having you as always. Thanks for taking the time out. Is your smile telling me that you're constructive on the markets because oil has cooled off, the conflict seems to be nearing an end potentially, so the macros have improved a bit? Or is it that it is still unclear as to what to do?
No, I am a little bit constructive for all the reasons that you mentioned. Historically, at least, stabilization of the rupee has been a predictor of FII inflows, FPI inflows. And to that extent, I think maybe not now, but once the FCNRB deposits have gathered some momentum and the rupee looks to kind of be stable, then I think, you should see that event playing out in the sense that of FPI portfolios inflows turning positive, which should be positive news for Nifty and the large caps, because large caps have significantly underperformed the small caps over the last 3 months. Such a wide performance divergence is not usually observed. So to that extent, I think, you have some room for the large caps to move up. I just hope the Iran-US, kind of dance doesn't get messed up. We continue to see a lot of mixed news out of the Middle East, and I think that's concerning. But I'm hoping for the best there.
You know, the strange thing about the Iran-US dance, as you call it, it seems to pick up pace only on the weekends when markets are shut in the US, and then by Monday morning, they go in for a pause. But having said that, for India and for Indian equity investors, what becomes the biggest factor now as that threat recedes? Is it the spillover effect of the inflationary impact that we saw in the first quarter?
So, Tamanna, my sense is that there are a bunch of things that Indian investors have to think about. One is, how does the earnings season pan out? Earnings season is very difficult to predict this time around because there are going to be a bunch of inventory gains and inventory losses. A lot of it we will not be able to foresee. Second is that the rains are playing truant. Historically, again, GDP growth, agricultural output hasn't had a significant impact of late on overall growth from poor monsoons, but I think consumer demand may slow down a little bit, and that's something that we have to watch for. So those are the two issues which will probably determine investor sentiment. Mind you, the earnings momentum, if you think about it, if you take fiscal 26 in perspective, first quarter was the weakest, followed by gradual strengthening across the quarters, with fourth quarter being pretty decent on earnings. I think that narrative may get a little bit challenged in the short run. And what I've seen is that retail investors or domestic investors are very sensitive to quarterly earnings. That's not my preferred way of looking at things or investing. But be that as it may, one has to recognize that fact. And that, to me, could be a bit of a hiccup, especially on the broader market where you see a lot of sort of hard to predict variables coming into play for the first quarter earnings. My sense, though, is that over the next 2 years, you are looking at a scenario which is a little bit positive, because I don't think there are any macroeconomic imbalances. The worst of the rupee is behind us. Investment seems to be picking up. Domestic demand seems to be picking up. Credit growth is signaling positive cues. Valuations are not very attractive, but they're not very expensive either. So I'm hoping that we'll muddle along with kind of low teens to mid-teens type of returns.
Okay. Ashwini, what about the auto pack? I think the Delhi EV policy may be throwing a spanner in the wheels of the ICE plans, but a lot of notes currently talking about very bottom-up ideation within autos. So Maruti gets an upgrade despite the fact that it does not have as large an EV portfolio, if you will. But M&M also gets an upgrade because EV penetration is going up. And then there are two-wheelers, etc. How do you kind of separate the wheat from the chaff here?
So, Neeraj, I think, like you said, it's very bottom-up. While EV is obviously gaining traction, it is not a one-stop solution. I continue to believe that even 5 years from now, there will be a significant number of gasoline or diesel vehicles on the road. As a vehicle owner, unless the charging infrastructure becomes ubiquitous, especially with public access, it's not possible to rely completely on electricity, barring for intra-city runs and short runs. So my sense is that automobile is more about consumer demand, and consumer will choose between petrol and EV, depending upon their circumstances, how much do they drive, what is the charging infrastructure available to them, and so on and so forth. So, while the Delhi policy, I did read about it, is probably there for the kind of pollution Delhi faces. I don't think that's going to be true for the rest of India. So I think it's going to be very bottom up. People who are winning market share, people whose sales momentum is continuing to be strong, I think those stocks will do well.
Okay, thank you so much, Ashwini, for speaking with us.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management.
Markets end in the red today for the second consecutive session amid volatility. Nifty below 23,900 on weekly expiry day. The benchmark index has shed a little over 8% in 2026 so far, weighed down by an FII exodus on account of the Middle East war. US President Donald Trump says talks with Iran to take place in Doha adding that they would focus on stripping Iran of its nuclear capabilities. However, the Iranian Foreign Ministry says that the Iranian delegation is only visiting Qatar to advance efforts for release of frozen assets. Sources tell NDTV Profit that the government has cleared 1.25 lakh crore rupees of semiconductor mission's next phase. India is expected to cater up to 75% chip demand domestically by 2030. HDFC Bank in focus after key management appointments. Former IAS officer Rajiv Kumar appointed as a part-time chairman, while Puneet Sharma of Axis Bank designated as CFO from 1st September. Adani Port strikes a big-ticket deal with Mundi, a unit of Mediterranean Shipping Company Group, to offload a 49% stake in the Vizianzam port for $1.4 billion. Dixon Technologies shares jump after sources indicate that Dixon Vivo joint venture is moving closer to receiving the government's final approval. Kharif crop sowing drops nearly 23% as weak monsoon delays the planting across India. Weak sowing raises risks of food inflation and rural slowdown. Prime Minister Narendra Modi to chair a meeting with all secretaries today. Review of reform initiatives on the agenda. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar, and let's take you through all the important stories of the day in the next half an hour. First, beginning with the equity markets, and markets stay choppy in trade today. Nifty ends near the day's low point, below 23,900 levels, remember, and Sensex down over 250 points. Now, some of the stocks like Maruti, Titan come out as the top gainers on Nifty 50, while Eicher Motors, Tata Consumer lag behind, and broader markets really outperform the key indices today. So that's the snapshot of the market. Jasmeet is right here to complete the roundup of the market action and the highlights for the day. Jasmeet.
Well, a weak day for markets today. Nifty 50 ends in red for the second consecutive day in a row, and Nifty 50 is down about 0.3%. Now, we look at the top losing companies in Nifty 50. We have companies like Eicher Motors and Tata Consumer Product, both losing the most. While the Eicher Motor was down about 5% and Tata Consumer Product saw a downtick of nearly 3%. In terms of the broader market, we see a complete opposite image. While broader market outperforms the benchmark, and Nifty Small Cap 250 and Mid Cap 150 ends in green. In terms of top gainers in Mid Cap 150, we have stocks like Cochin Shipyard and Coromandel International, both gaining the most in Mid Cap 150 space. We look at the Small Cap 250 when that ends in green, and the top gainers of Small Cap 250 are stocks like Ola Electric and Transformers and Rectifiers, both gaining the most. When we look at the sectors end on a mixed note. While the top losing sector is Nifty IT, and Nifty IT has been seen that extended fall over the time. Now, in terms of the top gaining sector, we have Nifty Defense has gained about 1.4%, and in terms of top gainers in Nifty Defense, we have stocks like Paras Defense and Cochin Shipyard, both gaining the most. In terms of percentage wise, we do know that Paras Defense is up nearly 9%, while Cochin Shipyard saw an uptick of nearly 5.5%. When we talk about the losing sector, that's Nifty IT, and the top losing stocks in Nifty IT are stocks like LTM down about 4%, while Infosys saw a downtick of 3.5%. When we look at the key trends, we do make a note that Nifty Defense snaps its 4 days of losing streak and gains in today's trade, while Nifty Oil and Gas snaps its 2 days of losing streak in today's trade. In terms of Nifty Financial Services, Nifty Bank and Nifty FMCG alongside Nifty PSU, but down for the second consecutive day in a row, and Nifty IT is down for the third consecutive day in a row, showing that extended pressure that the IT industry has been seeing all this while.
All right, Jasmeet, thank you so much for getting us the good roundup on the market action for the day. Let's focus on the important macro data that's flashing on your screen. April to May fiscal deficit at 9.6% of the FY27 target. It comes at 1.6 lakh crore rupees. So that's the big number that we are really tracking at the moment. Remember, for this one, this financial year, the April and May fiscal deficit at 9.6% of the the FY27 target. So that means for 2 months, almost 10% has been clocked in terms of the run rate. How are we really stacking up? And on the other hand, how is the macro data really looking to support the economy? That's something to really ponder over. Fiscal deficit has come in at 1.62 lakh crore rupees as we begin this new fiscal year, April to May. And that fiscal deficit has been clocked in at 9.6% of the stated FY27 target is the number that's flashing on your screen. And fiscal deficit, the numbers that we have in terms of the amount is 1.62 lakh crore rupees that has been clocked in. And those are the numbers that are flashing on your screens in terms of fiscal deficit data coming in. So those are the numbers that we are really looking at. Almost 10% of the fiscal deficit of the FY27 target has been brought in. All right, Ranjan Ratna, who's an economist, joining in to decode these numbers and tell us what this really reflects about this particular fiscal year's economic health of the country. Thank you so much, Ranjan, for joining in. So April-May fiscal deficit at 9.6% of FY27 target. How does this really stack up and what does this show for the economy?
Good afternoon, Nisha, and thank you very much for hosting me and asking me. Just released the data, and as you have rightly said, this being 9.6% the fiscal deficit for the target. The government aimed for 26-27 4.4% as the target. And this 9.6% is, of course, kind of more than double than what they estimated for the full year. But definitely for this April-May fiscal, when we are talking about, it has several factors to be considered in mind, and most of them which are the external factors beyond the government anticipated plan, and mostly this has emanated, or this we could see is an effect of the US, Israel, Iran war or the conflict. As well as the Strait of Hormuz, which we saw leading to rising crude petroleum prices. Now, it's lesser than pre-war, but that definitely has affected many of the countries, including India, because the outflow of the foreign exchange has to be more for importing the same amount of quantity, not only oil, but it had also effect on other things. The global supply chain disruptions were seen, and that also led to high transportation cost of anything which you are importing or anything that you are exporting. We have also seen rupee devaluing during this period of time. So it's a mixture of all these external factors mostly, which have led to this fiscal deficit of 1.62 crore, which is 9.6%, as has been rightly pointed out.
Right. Looking at these numbers, Ranjan, of course, there were many external factors which were beyond the control of the government. And rupee also depreciating actually reduced our purchasing power, made things much more expensive for us. But all that is now receding. At the current moment, we are sitting much better when it comes to the oil prices and the rupee level. While we look at the future numbers when the war was still on in May, June, June period, and that is what is going to be impacting the fiscal deficit numbers going forward as well. Have you penciled in the kind of impact that could be seen in the next fiscal deficit numbers that will be shared?
For May and June, if you will see, I have anticipated that it would be lesser. It would. I think it will come to around 6% for the next 20 for May and June, but it won't go to 4%, of course, because till May. We have seen these and first week of June also, and still there are uncertainties. US and Iran are talking. Things are said to be normal, but still a couple of days ago we saw again some ships to be destroyed. Iran claiming that they will still control the Strait of Hormuz. Sure. Still there are uncertainties, but if things go the way which is at present, even as this stand still, then we might reach to between 6 to 7% from this 9.6%.
All right, so it is definitely reducing on a downward trend in terms of the deficit, Ranjan. But government will have to look out for the recovery if they have to maintain the fiscal discipline for this particular year, considering that we had an unusual circumstance because of the war. Thank you so much for joining in with your expert take on this particular matter. But going on to the global news developments, well, the US and Iran are set to hold crucial talks in Qatar, signaling a possible shift towards de-escalation. But Iran has denied any direct negotiations with Washington on a broader deal to end. But Iran has denied any direct negotiations with Washington on a broader deal to end the conflict in West Asia. Instead, Iran's foreign ministry says that its delegation is heading to Qatar to discuss the contours of an interim arrangement. In fact, Iran has also clarified that this visit is focused on advancing the efforts to release its frozen assets, not formal peace talks with the United States. In fact, listen in to what Donald Trump said about the ongoing talks earlier.
The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say. And it's really very simple. It's the denuclearization of Iran. We don't want them to have a nuclear weapon, and they're not going to have a nuclear weapon. And they've agreed to that, in all fairness.
All right, the finance ministry has cleared a 1.25 lakh crore rupees outlay for the India Semiconductor Mission 2.0. Now, the government aims to meet up to the 75% of the country's chip demand domestically, and Atmanirbharta really showing here by the year 2030 is the target. In fact, my colleague Rishabh Bhatnagar joins us with all the details on this big plan on semicon manufacturing. Tell us, Rishabh.
Right, what we're picking up with respect to the India Semiconductor Mission, the second version of which is expected to be rolled out very soon. What we're picking up from official sources is that the approval by the Finance Ministry panel for roughly about a 1.25 lakh crore rupee outlay has been given. This is yet another step towards the rollout of the scheme. Now, just the final bit, the final nod by the cabinet is left before this scheme actually comes out. Remember, this the first version of the scheme came out with roughly 76,000 crore rupees worth of incentives. You've had more than now 12 facilities being approved under this mission so far in the first iteration of this mission. Now, the second version of the India Semiconductor Mission is set to come out. What we know about this is that this will have a much sort of a broader approach. There will be focus on gas makers, on specialty chemical makers. The ancillary ecosystem essentially is set to gain from this particular development. We've already seen that the Finmin nod has come in last week. Now you have the cabinet approval that's left before the final rollout. What the government aims to do with this mission is, of course, to have about 75% of India's India's demand be met domestically. And that is something that's very important to cut the sort of forex spend that we currently do on semiconductors and related parts. So that's something that we're picking up from official sources.
All right. Thank you so much for all those important details coming in, Rishabh. Now, big signals coming in from the insurance space. The IRDAI chairman says that the investor interest is really picking up sharply after the government really opened the sector to 100% FDI. In fact, new licenses are being cleared, foreign players are lining up, and general insurance is leading the growth charge for now. Listen in to Ajay Sheth, who is speaking to NDTV Profit.
Good afternoon, sir. Piyush from NDTV Profit. In May, the government had opened up the 100% FDI in insurance sector. I just wanted to understand from IRDAI perspective how many applications we have got from foreign entities, has there been any progress, any JVs that have been, sought for on this FDI and insurance, any interest?
See, after the sector was opened up for 100% FDI, from the authority, we have already given 2 licenses to general insurance. One was approved yesterday. I'm not sure whether my office has made the announcement as yet, but one was approved yesterday. There's a lot more interest is coming on general insurance side. And the reason is obvious. As I mentioned it, last 10 years, life insurance sector grew exactly as per the economy, whereas 2.5 times, it became 2.5 times. General insurance became 3.5 times. So that growth is more. But I do see the life insurance also has the potential to grow at the same pace because there's a large unmet need. And that's what I would like to work with all insurers, that how we can make that happen, what ingredients are needed. Coming to your question, there's also a lot of interest coming in for some of the foreign promoters seeking to get into 100% ownership position. There are a few conversations happening, and one application has been approved already. Another one is with us at this point of time. Not 100%, but going up to a fairly large number, and with the intent to go maybe the full go at some point of time. Very recently, there has been an application on life insurance, and that was a very welcome development, because a large foreign insurer coming and taking a big position, that is something showing not only us, we feel that this sector has got the potential, even other foreign investors also feel, the promoters have feel that there is a potential in this sector. Precise number I would rather avoid, because that has more of a commercial nature. Let things fructify, and then you will get to know in due course of time.
All right, moving on. Dixon Technologies, remember, proposed joint venture with smartphone maker Vivo is moving closer to receiving the government's final approval. In fact, sources do tell NDTV Profit that the centre is in the final stages of issuing this approval letter after the proposal was cleared by an interministerial panel earlier this month. Now, the partnership is, remember, expected to significantly boost smartphone manufacturing here in India. According to the company's management, well, the venture could eventually add 20 to 22 million smartphones units annually, and also create a revenue opportunity of nearly 30,000 crore rupees over time. So that's a big JV coming in on the smartphone space. Now, India's home services market is getting more crowded. After cleaning and repairs, No Broker has now entered the at-home salon business with its new brand, Zevora. But unlike the rivals really chasing the instant delivery, the company is staying away from the quick service race for now and betting instead on profitability as well as a largely untapped market. To talk more about this, I'm joined by Saurav Garg, who is the co-founder and chief business officer of NoBroker.com. Saurav, welcome to NDTV Profit, and there couldn't have been somebody better than me to really talk about this, because I'm a usual user of the home services of salon services, and I quite like it. What is it that you're offering which is differentiated?
So, Nisha, I think we believe that at-home salon service is definitely a big convenience, because if people have to go to a salon in today's traffic, it's very, very tough. So we think it's a large market. It's highly underpenetrated. Less than 10% of people who potentially use salon services use it at home. So there's a long way for the home services, especially the salon service, to grow. And No Broker is uniquely positioned because we have 4 crore users, out of which almost 35% are women. And these are typically women for which we have all the data, what rental they're looking at, what price of property they're looking at, what PIN code they're staying in. So all the data is available with us, which gives us a huge wedge into this market. And more than 1 crore people have already used our home services, things like cleaning, painting, repairs, packers and movers, and these kind of services. So I think a salon at home was a natural extension for us, and that's where Zivora comes in. And with the unique data which we have, I think we will be able to make this sector more organized, because I think one of the big pain here is that it's a highly unorganized segment, and the consistency of quality is something which is a very, very desired thing, especially in a beauty service. So we have our own training academy where we train all the people who go for a salon service at home, and the consistency of quality is something which we are aiming for.
That's right. In fact, Saurav, this particular place has only one important aspect. That is the consistency of the service and the quality, because of the brand name that it gets attached to and the training that you give. Apart from that, this space has been working with at-home services for a very long time and at a lower price than the salon services. Now, what you are doing is a little differentiated, which is not on quick service or instant, but focusing on profitability. How are you going to do that?
Yeah, so like I said, that I think our focus is always on quality, because here what is more important is that when a woman books a service, they get a delivery which is what they're aiming for, not something which is delivered in like 10 minutes, but they're aiming for the right kind of a facial, right kind of haircut, whatever they're looking for is delivered consistently, and that's what would be the aim for. And I think, like I said, that the data which we have puts us in a very unique position, because we know which PIN codes, what price range people have looked for a home, which directly corroborates that what kind of pricing is possible over there, what kind of demand is possible over there. And a lot of AI can be used to predict that people who are using home services, which of these will become a salon service user. And we also see that increasingly more and more women, I think we are the only real estate platform which have 35% women on the platform. So that also puts us in a very unique position. And that is what we are going to deliver with Zivora.
And what about, Saurav, the intense competition in this particular space? Because I already use a service, I'm pretty happy with that. And what will it take for you to expand and compete in the market? What will be your moat here?
Yeah, so I believe that this segment is highly underpenetrated. Less than 10% people are using a salon service at home of the people who are actually going to a salon. So 90% people are still going to a salon. So we believe that is where the entire moat will be coming from. One, people who are going to a salon who would start choosing a salon at home. Secondly, people who are using a at-home salon service, but from an organized player, where quality is always suspect. These are the two pieces from where the entire customer flow and the demand will come from.
Right. So, Saurav, very interesting points. But as a regular user, I would also say that's also the real estate. While you benefit by taking the real estate off the user, but in India, it's also underpenetrated, this kind of service to a large extent, because people don't have that kind of privacy and real estate in their own house. And that's why probably an outside salon also works in many categories. So that's my one feedback to you. But great chatting with you, and all the best for your new venture. Thank you so much for joining us. Thank you. All right, completely out of time on this edition of Profits 360, but do stay tuned to NDTV Profit. Thank you so much.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his
Presented by Suzlon, good energies that work.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. In this show, we get in very interesting companies and to see whether any alpha can be made or not. and we try to decode the entire picture and also get the management to talk with us. But before we start talking about the company for today, let me give you some hints. Try to guess the company, what this company I'm talking about. The first hint, it's a listed garment exporter. Also recently a big beneficiary of the FTAs which have been recently concluded. Stock is up 18 times in the last 5 years. It has been a multi-bagger. It's of course in the textile industry. The clients include Ralph Lauren, Target and a lot of global marquee players. And of course, we had mentioned earlier about the FTAs as well. The company in focus, try to understand what this company is. It's of course quite global, as I had spoken about, and that's the second part of the company's name as well. The company in focus is Pearl Global. This is what we are talking about. But why are we calling this company? What do we want to know more? What's something incremental right now to call the company right now? The first question, definitely try to understand the impact of FTAs. Is there more re-rating left for the exporters? Because it takes time to actually judge this company. Also, we'll try to understand the dynamics of India, Vietnam, Bangladesh businesses for the company. They have sourcing in different countries. So what works best? We'll try to decode that business model for you, and also the confusion on tariffs. What happens now? Is it the old tariffs? Is it the new tariffs? Or is there something else at play for these exporters? The company's growth outlook for 2 to 3 years, we have to understand, where does the company stand at the end of FY26. Also, the capex and expansion plans going ahead. Of course, FY26 was a good year, stock run up, but will that momentum continue or not? These are the key questions we will be actually asking the management, and the right time to enter. If you're an entrepreneur, if you want to get into the textile business, exports especially, is it the right time? That's one question also. It's pretty interesting for me to ask. And of course, the last one, the benefits of rising spreads. Yarn and polyester in Q1, does it benefit the company? It's a fully integrated company, or there is an angle to the forward integration. Pallab Banerjee, MD of Pearl Global, will be talking with us in a while. Stay tuned with us and he'll answer all these questions. But what does the company actually do? Company के बारे में बताते हैं. One by one, we'll get you all the layers about Pearl Global. Of course, established in the year 1987, so almost you could say a 40-year history. Company is one of India's largest listed garment exporters, and we get into a bit of depth for this company. That is, the products includes knits, woven, denim, outerwear, activewear and athleisure. So there is a big spectrum of products which the company is offering. 25 manufacturing units they have, but I would like to point out, it's just not only in India, it's spread across Indonesia, Bangladesh, Vietnam, and interestingly in Central America there is a country, Guatemala. That's pretty interesting, especially for the US clients. They have kept this exposure. The company has a total capacity to manufacture 101 million pieces per year. This is the most updated number which we have got from the fourth quarter or the FY26 numbers. It provides end-to-end supply chain solutions. This is value as well as premium retailers. And I'll shortly give you the client list also, but hang on for that. Customers, of course, are located in US, European Union, UK, Japan, Australia and Canada. So a lot of developing nations are a part of their client list. In-house laundry capex, that's what they have announced for FY27. The amount is 250 crore rupees. That's where it's going to help the ROCs come back to that 18 to 20% mark. And remember, amongst the textile companies, this company is having one of the highest return ratios as well. But let's understand the revenue breakup, how things are looking. I've broken it down in US and non-US markets. It's all even Stevens 50-50%. But remember, majority or almost the entire revenue comes from exports only. Of course, in Indian brands, India also there are some global brands which they focus on. But who are the global clients? Let's talk about it. We have Chico's, we have Cole and Muji. This is of course a Japanese brand, but looking at the other key clients also for global, let's focus on the other names as well. There's of course Ralph Lauren, Target. Target is of course in the value retail as well. So these are the bigger brands as well, which are the key global clients for Pearl Global. Interesting, right? Let's move ahead and try to understand the other picture, and that's the geographical revenue split of the product. product, it's knits. That's around, you could say, almost 27%, and the remaining 73% comes in the woven segment. These are the product specific, breakup coming in. But what may work for the company? That's the big question. Analysts remain bullish. Only 6 analysts are tracking the stock. All have given a buy rating. But remember, stock has run up. Strong industry tailwinds are coming in all across. We have already covered that. But in the long term means this might be a structural change. Diversified manufacturing presence. So any problem happens in Bangladesh, they resort to India. Any problem in India, they resort to America for manufacturing. So that is pretty strong. Strong incoming capacities which are coming in, that will aid in the benefits, going ahead for the production, and the long-term vendor agreement for marquee clients. So there isn't much of, non-stickiness of a customer. It is a very customer stickiness friendly company. But what may not work? Short-term price escalations. The management has spoken about it. So you can expect that in the first quarter. The execution risk in case the FTAs which are already announced, is there any delay? And there's of course a procedural risk as well. And also the India-US trade deal, the completion is still an overhang right now. So definitely short term and medium term there is volatility, but yes, long term seems like the story is pretty strong. But let's try to understand with our KYC ratings also, how do we judge a company? Of course, it includes income statement, balance sheet, cash flow and return ratios as well. But there are other parameters जिस पे आपको ध्यान रखना होगा. This of course includes shareholding, street cred, and interestingly I have got for you 5 companies where I'm going to do the valuation check as well. So stay put with us and I'm going to give you those 5 companies and try to understand whether this is the cheapest stock in a textile space or not. And remember, this is after the rally coming in, the outlook of the industry and the company as a whole. Let's start with income statement to show you what's the strength coming in, and look at the CAGR numbers. It's a pretty decent, 15 to 20 plus growth coming in the last 3 years, and that is where a little bit of conviction comes that this has translated into numbers. A good structural up move coming in, almost better than the peers also. And if you look at the numbers, pretty decent. The margins also saw a good jump coming to the double digit. Look at that, 10.3%, and PAT also seeing a good up move coming in. And these are the benefits of a fully integrated player. Largely, this has been pretty decent, around 9.3, and whether it touches the 10% and holds, that's the key question to be asked. But as of now, the numbers seem strong, so I'm going to give this a thumbs up. Let's get in the balance sheet and let's see what's happening here. Of course, a little bit of borrowing levels that has gone up around 687 crores as per FY26. But on the other hand, even the cash bank balances that has gone up almost 747 crore rupees. That means there is a good balance sheet management also at play. But as of now, I'm going to give this a neutral rating. Cash flows on the other hand, they seem to have been improved, as compared to what we saw in FY24 and FY25, and then you compare that with FY26 and look at that, especially the conversion numbers, they seem pretty decent. The net cash flows have also increased. This of course includes your operating, investing and financing activities, all three put together, and it's pretty decent. Look at that, 437 crores of cash flow from operations coming in, and that is showing strength in overall numbers. So as of now, it's a strong thumbs up when it comes to the overall cash flows. But return ratio is something where we have seen a good momentum coming in. First of all, we get in the ROC numbers. These are the adjusted numbers from the company itself. The story starts from FY22, and that is where it starts going up, and now it's maintaining that 28 to 30% mark as well. A slight dip coming in on the capacity expansion and capital deployment. Let's pull up the ROE numbers also to show you what's the growth looking like. And of course, the ROE numbers, this is largely pretty stable coming in, and we see that 20% plus, these rates are coming in. FY26 also we see a pretty, slight dip coming in. But net, it's a neutral rating for the return ratios when it comes to Pearl Global. Let's talk about shareholding and explain you how things have panned out. Earlier, there was a very little FI and DI exposure. DI was literally non-existent, just 1% 2 years ago. But after what we have seen in textile, the entire industry, look at that, it's up 19%. Of course, FIs have also slightly trimmed their position, but still at 6%. Promoter stake, of course, coming down because of larger blocks coming in. Public stake is down, it's almost 14 odd percent, but look at the DIs, 19% stake they're holding. And that is where a lot of interest has come from the mutual funds, especially as textile as a theme. So it's a strong thumbs up when it comes to the shareholding. Let's talk about the street trade, how much stock returns have come in. And if you are a holder of the stock, congratulations, be it short term, medium term, long term, you have made money in all the cases. Last 5 years, the stock is up 18 times. That's a big number to look at. If you're a long-term investor, you have been rewarded. Congratulations. But medium-term basis also stock has done well. From March low, stock is back almost 47% up, 1 year 33%, and this year itself stock has given 23% returns. So even if you are a medium-term shareholder, you have made money in this counter, and because of that, I'm going to give this a strong thumbs up. And remember, whenever a stock runs up, of course, at times valuations do become a bit questionable. But let's have a look at the peers, how things are setting up. I have taken the 12-month forward P ratio to judge the companies. Vardhaman, Gokul, still you could say Gokuldas Exports is expensive, more than double when it comes to the forward P valuation, and still on a cheaper side, companies comes in at 33 times. But of course, from its historical numbers, it is higher as well because of the stock run up. Compare that with KPR Mills and Kitex Garments, the valuation is pretty expensive. So amongst the peers, the valuation is cheaper for Pearl Global, but nevertheless, from its historical numbers, it is slightly higher. So I'm going to keep this neutral rating when it comes to the overall valuations. But let's talk about the outlook. What are the key factors you should be watching out for? Is of course, the beneficiary of the recently concluded FTAs. This is a long-term, strategy, and the textile positions looks good. The clarity comes from the US tariffs. If that comes in, that becomes another major trigger. But right now, it is a slight overhang. If you are noting that down, the capital commitments range between 200 and 250 crore rupees for FY27. And lastly, they foresee that the energy cost escalation might impact in the first quarter. So there are some hiccups. It's not full rosy picture, and because of that, I have given this a neutral rating for the overall outlook. But come over, let me explain you the entire KYC ratings for Pearl Global and where does it stand. Of course, the numbers, be it income statement, cash flow, all of them doing well. That's why I've given them a strong thumbs up. Return ratios, a little bit of moderation is at play, but nevertheless, it's on the higher side if you compare that with another textile company. Shareholding, DI's favorite. DIs have been lapping up, and on the other hand, Streetcare, the stock has been a multi-bagger if you are looking at a longer time frame. Valuations and outlook, I presume it's a neutral rating, but the total KYC rating for Pearl Global stands at 6 out of 8. It's largely on the higher side of the average numbers which we give, but let me give you a history about this company. This is a company is coming second time recently in KYC. November 2025, the historical ratings we had given was 5.5 out of 8. Largely a slight increase has come if you compare that after the next 6 months, and it's around 6 out of 8 which we have given for Pearl Global. And of course, the stock has run up also in this setup. But let's talk about the speaker. We are joined in by Pallab Banerjee. He's the MD at Pearl Global, and interesting tidbits about him. He has more than 30 years experience in this apparel segment, out of which almost 20 years have come in from MNC Gap. And that's a big name. Of course, he was the head of India, especially in the sourcing category, and that global supply chain solutions is something which he specializes in. And to put that in perspective, that'll be very interesting to have a chat. And now we are, of course, joined in by Pallab Banerjee. He's the MD at Pearl Global. Good afternoon, sir. It's always a pleasure to have you with us. I want to first understand the impact of the FTAs. Is there a re-rating for textile companies at a play right now?
Thank you for having me on your show. Yes, FTA is an important milestone for India as a textile industry, and especially the garment industry. And I think it will have a lot of positive effect despite what the normal condition is worldwide at this point of time. But still, I think FTA is definitely a major milestone, and most of these customers who are from these countries like UK and European Union, they definitely would like to have a better presence in India with the FTAs coming into the effect. So that should give both sides interest, like from the players out here. That should inculcate better capacity planning or increasing their capacity. That means more investment, and across various textiles and fabrics, which have been quite limited in India. As a country, we have been very limited to only cotton and cotton-based products so far. So this kind of milestone will open it up for multiple products and much more traction, I think we will see.
And Pallab, what's the dynamic of your India manufacturing, Vietnam and Bangladesh? All three countries are there. How does this dynamics play out for your company?
So Pearl Global has got manufacturing across the globe. Like we have manufacturing units in Bangladesh, Vietnam, Indonesia, India and Guatemala. In terms of what we see, the two countries which have done really well in the apparel sector are Bangladesh and Vietnam. This is after China. So as the China plus one strategy played over the last few years, I would say, what we are seeing is that these are the two countries which has really benefited and the ecosystem that has got developed in these two countries are very, very strong. So Pearl Global definitely takes that benefit of being present and historically for a long time in both these countries. And that's the advantage that we have seen has come to our business over these last 3-4 years in a good way. Compared to a Vietnam or a Bangladesh, India is also manufacturing. India and Indonesia, they are very similar. Although the proximity to China for Vietnam and the amount of raw material that is available and the ecosystem that got developed over the years in countries like Vietnam and then eventually in Bangladesh over the last 10 or 12 years we have seen is very dramatically different compared to India. Bangladesh had the advantage of no tariff or no duty for countries like UK, European Union and Canada. That really helped them to develop the industry very competitively. And of course, their costs were low. So both these things helped them to build up a very massive industry. And Pearl being there, we have seen and we have taken the benefits and we have got very efficient factories running in both these countries of Bangladesh and Vietnam.
Right, Pallab, but there's always that question on the clarity of tariffs. What is that situation right now for the industry right now? Because there is still, it seems like there is an overhang.
So from US point of view, yes, there is a lot of, I would say, changing dynamics that we are seeing over the last 1 year. So the initially under the emergency power, the IEEPA, I think President Trump had implemented a reciprocal tariff. That has been shot down by the Supreme Court there. So currently there is a section 122, which is applicable till 24th of July. And that is a 10% flat tariff for all the countries which are exporting into US. And this particular tariff, this 10% is levied on top of the MFN duties that were prevalent. MFN duties were depending on which HSN code, every HSN code had a very different duty structure. And it used to vary for linen kind of products. It used to be in the less than 10%. Cotton products were between 10 and 20, I would say. And the synthetic products were more than 20%. So that's the kind of classification that we had for MFN duty. And on top of it, there's a section 122, which is currently prevalent till 24th of July. Now, after this, Trump administration is doing some kind of investigation on all these countries. If these countries are importing or using the benefit of countries which are using forced labor and all, and they want to penalize these countries. So that penalty can be as high as 15%. So that's something India is also undergoing that investigation as compared to many other countries like Bangladesh and Indonesia. In fact, all the countries, exporting countries into US are at this point of time undergoing that investigation. So that thing is the open thing that we have still. So what we hear from the grapevine is that if they put India under some kind of penalty because of this importing goods from China or any other country where there is a forced labor, so that can give to an additional 12.5% tariff. But once this bilateral trade agreement will be signed, which India and US, both the countries have worked towards getting into an 18%, what we heard from our ministers. So I think that's something would be the final one. And technically speaking, like this 18%, once it is comes into effect, that should take care of the MFN. So the MFN should not be there; it should get replaced. But again, with Trump administration, things have been so volatile for the last 1 year. We don't know what will be the final outcome.
Like from the industry, Pallab, what's the growth outlook looking like for the next 2 to 3 years for Pearl Global?
So Pearl Global, we have been planning a growth. We have committed to our stakeholders that we are growing at the rate of anywhere between 12 to 15% on a CAGR basis. That means even the tough years like last year, we did grow significantly, and even also before, we have seen that we have grown at least about 9-10%. But in a good year, our growth has been much better. So CAGR wise, we have committed 12 to 15%, and by 2028, our milestone is to cross the 6,000 crore milestone that we want to cross as a top line. So I think we are significantly on, in terms of very solidly, I would say, on track on that plan.
And in short, Pallav, what will be the capex and the expansion plans ahead? I know there's a 250 crore kind of allotment for FY27.
So we have been improving our capacity. So this year, on 31st of March, we declared that we have already crossed 100 million pieces capacity. So with that means like the 6,000 crore is possible at this point of time with our existing capacity. But current financial year, which we're undergoing, we are further adding to it. So by 2028, we are still expecting to have a capacity in the range of 120 million pieces plus annually. And we should be able to do more than 6,000 crore very comfortably.
Well, right time to enter the textile exports. Is it that for an entrepreneur, this is a pretty interesting take coming in from a lot of viewers. They wanted to ask, is the right time?
I think textile is interesting, and I would say that all the time is good because, all human beings, we always need clothes. Although, in terms of exports and the kind of sector that the export market to the developed countries, so there I think there are some barriers, like the understanding of the laws, the regulations, the tariff. Those are the things I think are a kind of barrier, and also the compliance standards, which has been also involving the kind of sustainability that they want. So those are things like somebody has to really take care of. But purely if you're making a textile or garments and catering to even to domestic market, I think it's always a good time.
Right. Thanks a lot, Pallab, for giving your views on the company and the industry perspective. It's always a pleasure to have you. So pretty interesting story of Pearl Global and how the India's textile industry is faring. And for these interesting stories, keep watching KYC and stay tuned to NDTV Profit.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise.
Aswath Damodaran is often known as the valuation guru and rarely speaks to Indian media, which is why I'm so excited for this interview. He's one of the most respected voices in the financial world globally, a professor at the NYU Stern School of Business, and someone who speaks very clearly about what is going around in the world. Right now, he's gone viral for talking about what he thinks SpaceX should actually be valued at. With that, let me welcome Aswath Damodaran on the show, and thank you for giving us time on this interview. Aswath, my first question to you is around those valuations, and I'll come to SpaceX specifically. But are there very real concerns about valuations right now with large AI players around the world?
No, I mean, people are seeing it, but remember, markets are driven by consensus, not by what any individual, no matter how credentialed, thinks about the market. And the consensus view is there are concerns, but there is potential. And for the moment, potential is winning out over concern.
All right, so then let me put it this way. Is the euphoria you're seeing right now reminding you of the dot-com boom that you have looked at so closely? Are you seeing elements of that?
No, I don't. I mean, I think that is one of the most wasted exercises in markets, is to keep looking backwards and trying to recreate what you saw. And I mean, it's an exercise that old people play, which lets them think they have an advantage over younger people. I was around in the dot-com boom, so I've seen it happen. Markets never repeat themselves. So you've had things that play out over time. There are some common features that play out. But I generally don't look back and say, this looks like the dot-com boom. There are elements of it that will always show up in any boom. But for me, it's always about looking forward. And I think the concerns here are valuation concerns. Ultimately, everything is a valuation concern. Because ultimately, valuation is about, what's your revenue growth going to be? How profitable are you going to be? And how much will you have to reinvest? And every single concern can be framed in one of those three questions.
Aswath, let's talk about SpaceX specifically. The euphoria that we saw, was some part of it about the cult of Elon Musk?
That's part of it, but Musk is a mixed story now. There are people who will not buy SpaceX because Musk runs it. So the net effect of Musk is not necessarily a huge boost in the stock price, because there are just as many people who will not invest in SpaceX because of Musk as there are people who will invest in it. I think the reality is SpaceX is if you are creating a futuristic company in a movie, think Avengers, right? Stark Industries. You would create a company like SpaceX. This is not a tech company that makes software or apps. This is a company that actually does engineering. I mean, they create engineering marvels, getting satellites into space at half the cost of anybody else. Right now they're delivering internet service to Venezuela, where nobody has broadband connection. And to the extent that Grok plays with Gemini and OpenAI and Anthropic in that market, it's potentially another big market. So there's a real story here, and I think part of the problem is because people are in two separate camps with Musk. Either he's the greatest entrepreneur ever, or he's a scam artist. They're incapable of seeing the middle ground, and there is a middle ground here. This is an amazing company. After all, I've attached a valuation of 1.3 trillion for a company with 20 billion in revenues. That requires a lot of story, a lot of potential, a lot of stuff to come true. So you can have a great company that's not a great investment. Now would separate the two. SpaceX is an amazing company. It's a company that only Elon Musk could have created in many ways. But at the same time, at 1.8 trillion, I thought was overpriced. It's now over 1.8 trillion. So it's a great company where the price is not right for the moment. But that could change.
So for those who are invested in SpaceX directly, indirectly, they just have to wait it out till the valuations catch up.
It depends on whether you're an investor or a trader. 95% of people in markets are not investors, they're traders. And the difference is the following. If you're an investor, you value something and you buy it at a price lower than that value. If you're a trader, you buy at a low price, you sell at a higher price. It's a much simpler, in many ways, a much more honest game. You're not doing these dances with intrinsic valuation. You say, I don't care. As long as the mood and momentum are in my favor, if I buy at 200 and sell at 225, I'm going to make money. And I respect that point of view. And many people, I think, have to look in the mirror and ask themselves, am I an investor or am I a trader? If you're an investor, then you have to do your own valuation. You can't go off my valuation. That's my valuation, my story, my investment decision. Investors have to take ownership decisions. They can't listen on CNBC to somebody telling them that SpaceX is worth 1.8 trillion and go out and just buy the company because somebody told them so. That's not investing. That's just following the herd. Trading, it's all about mood and momentum. There are lots of people who will get rich on SpaceX by buying at the right price and selling at the right price. It's all about timing. There'll be just as many traders who will lose money on SpaceX because the timing is off. So if you be honest with yourself about the game you came to play. And once you made the decision, then you can decide whether SpaceX is the right trade for you if you're a trader or the right investment for you if you're an investor.
Right now, everything AI is gold, and everything which is not AI is just been discarded or ignored. Do you think there is a real justifiable reason for all of this excitement around AI?
I think it's an easy hook for both journalists and market experts to use, that this is the market entirely driven by AI. That is absolutely not true. I mean, intuitively, you might feel that is the case. But you know what? If you took the AI companies out of the market, markets are still trading at multiples of earnings that were higher than they were before AI came on. So are there companies that are benefiting from AI? Absolutely. But this is not a market that's being carried forward by AI and AI alone. There's a much bigger spectrum of companies. But one of the most interesting phenomena is in the last 2 months, the AI trade has actually turned sour for the most part. You look at NVIDIA, you look at the Mag 7, and the most amazing thing is markets have held their own. That tells you that markets are, there's a much bigger breadth to markets than people accept, but it's become this lazy way of saying markets are high because of AI. And I think whenever I hear that, I say, you've not dug into the data well enough to be able to then follow up on that statement. So I think that AI is helping markets, but the degree to which it's carrying markets has been overstated.
Point taken, Aswath, and I'll take that one for the team on behalf of all journalists. But let me contextualize my question. In the Indian context, for example, FIIs are leaving. They are, though, investing in other emerging markets, including Korea and Taiwan. And what we hear constantly is because India does not have an AI play.
No, but let's step back. Does South Korea have an AI trade? The only reason they benefit is they make chips that feed into AI architecture. So they're almost accidental beneficiaries of the AI trade. They haven't developed an LLM or the AI products and services that really is the questionable part of the market. In fact, the benefit of being a chip company in this AI story is you're supplying the architecture to build these immense AI factories. And people are already spending this. This is not about the future and potential. This is already happening. So from NVIDIA all the way down to the architecture companies, and this includes some of the companies that provide the power to the data centers, that is the most tangible part of the AI story where the benefits are already there. And again, it's easy to blame AI for money leaving India, but there are plenty of markets which don't have AI trades that have actually done very well in the last couple of years. So while it might again be easy to blame AI for why money is leaving India, I mean, let's face it, foreign institutional investment is always a sheep trade. You go where everybody else is going. Now, South Korea, if you look at the last 2 months, has been catastrophic for foreign institutional investors. So if the argument that money is flowing because the AI trade is true, the money should be flowing back to India. So if it's not flowing back, then the question you got to ask is, what are the reasons the India story is not selling as well as it did 2 or 3 years ago? And again, it's good to get some perspective. Indian markets are down, but relative to where they were a year or 2 years ago, of course. But relative to 5 or 10 years ago, Markets had a great run. Sometimes you need to take your profits and kind of consolidate. So before we attach big stories to why foreign investors are leaving Indian markets, I think the story has to be fine-tuned to what else is going on, what else can explain these ebbs and flows of foreign institutional investment.
I'm actually going to put that question to you. Why do you think FIIs are leaving in droves and not really coming back? A few years ago, the question was about valuations in Indian markets. Clearly, we're not as highly valued as we were even a year ago. Valuations have come off.
Indian markets have a fundamental problem, which is Indian investors, for the most part, are almost forced at gunpoint to invest in domestic markets. It's very difficult. I know it's easier now than it was 10, 20 years ago, but investing outside the Indian market has become easier, but it's still very difficult to do. So in many ways, Indians have invested in the Indian market, and they don't have the luxury of foreign institutional investors of taking their money out and going elsewhere. Is India a better price market than it was a year ago? Obviously. But it's still, if you think in terms of relative pursuit of my money, it's not a market that competes with another emerging market with the same amount of risk without the capital restrictions that India does. So I think that there's a cleaning up phase, and it might be healthy for Indian markets to actually take a pause, kind of consolidate and think about how things are priced. And that's healthier for markets in the long term, rather than this endless uprun where people basically come into the market expecting to make money no matter what. That's not a healthy equity culture. So sometimes developing an equity culture requires these consolidation phases. And for me, India is going through that consolidation phase. It's still by no stretch a cheap market. It's just cheaper than it was a year or two ago, and that's a relative statement.
There's an ongoing debate in India right now, and I want you to weigh in on about how domestic investors coming in through SIPs and other means are just providing liquidity for FIIs to exit the Indian equity markets. What do you think about this?
I think, again, the FIIs are not across Indian equities. They're in the large cap Indian equities, the liquid Indian equities. So, there are some questions to which the data has the answer. If the reason if this is all about providing funds, capital, exit strategies for FIIs, you should really have two divergent markets in India. You take out the large cap liquid stocks and you look at the rest of the market. The rest of the market should be incredibly cheap if this is all about exit strategy for institutional investors. I think that's part of the story, but that's part of markets. That's neither good nor bad. And my problem is not that they provide exit strategies for foreign institutional investors. It's that you're forced to provide that exit strategy. I think the Indian market would be healthier if the capacity for Indian investors to invest overseas was significantly expanded. But let's be clear, that's going to be painful. It's going to be painful for Indian equities, because that phase where you have that transition is always going to mean a correction downward. And it's going to be painful for Indian companies that have had access to equity at what I would call below market rates. Rates lower than they should be paying given the risk that you're taking on. And I think for Indian corporates, that's a great thing to have access to this capital at below market rates, but it's not good for them long term to have that capital because they get lazy and they develop bad habits about how to invest.
Coming back to the question of AI, which seems to be the all-pervading point right now, how transformational at its core is AI? Because you were talking about how Korea has done terribly despite in the last 2 months, despite having that one AI trade. And what does it really mean for Indian IT companies?
Let me ask you a question. How often during the day is an AI agent helping you in what you do? You talk to Siri on your Apple, there's an AI agent in the background. You get on Google, there's an AI agent looking at what you're searching for and providing a summary. This is not an abstraction. This is in all our lives. So the notion that AI is like the metaverse, a passing fancy, that's out of the picture. It's clearly transformation. It's clearly big. But that doesn't mean it's worth a lot of money. And that sounds weird. This can be a big market where the competition is so intense that companies don't make much money. The unknowns in AI are not so much about market size. The market size, I think, is going to be big. The question is, how profitable is it going to be, and what will companies, the AI companies, have to invest to deliver that growth? So the questions are more about business models that will make money than about whether AI is a big market. I think we have to concede that even in the pessimistic scenarios, AI is a market that could be in the trillions of dollars. And that's not necessarily good news, because that means people are going to be losing jobs to AI agents. So it's a big market, but the questions that kind of hang over it, and I don't think even the big players know the answer to these questions. Is it going to make money for the companies that provide the LLMs and the AI architecture? And what will they have to invest to keep this engine going?
Aswath, to you, what is the most exciting AI story? Is it the chip makers, the LLMs, the data centers? Which part of this AI buffet do you find the most exciting?
I think almost all the big stories are still in the architecture. I mean, I think of AI, the AI architecture as building a big factory. Right? That factory needs chips, it needs data centers. There are all these companies that feed off it. They've been discovered already. That's the discovered part of AI. The LLMs have thrust themselves in the spotlight, so they've been discovered too. I think the big part, but they're both still the factory part. The products and services that come out of this factory are what will keep the factory going. And this is, I think, the most astonishing feature of the AI build-up. We've spent more money building this AI factory than any other infrastructure investment we've made in the last century. You can go railroads, you can go automobile companies. We've spent basically trillions of dollars building the architecture without a sense of whether the products and services that will come out of that architecture will make enough money to make this architecture worth building. I think the phase of AI where people will make money next will be in the product and service part. What kinds of companies are providing AI products and services that will make money for those companies? Not just sell a lot, but make monies. Right now, I can't think of a single company that said that's the company that's going to do it. But if you think about, if you go to the dot-com boom and bust, I mean, you go to 1997, 98, there are lots of dot-com companies. You don't know which ones would win. Eventually, you had a winner in Amazon. There will be a winner in this space. I don't know what that winner looks like right now. It might not even be public. But the winner will be a company that delivers products and services rather than the architecture company. I mean, look back again at previous booms and busts. The infrastructure, architecture companies were not the end winners, right? The dot-com boom, it wasn't Cisco, which made the networking equipment that ultimately ended up as the big winner. It was Amazon. And I have a feeling with AI, you're going to get the same phenomenon play out. It's not going to be the chip companies. It's not even going to be the LLMs. It's the companies that provide the products and services with that architecture and are able to do so in a money-making way that will be the big winners.
And can any of these companies come out of India, considering we seem to be entirely left out of the AI party?
Let's ask a more generic question, right? I mean, if you look at every boom in the last 40 years, the technology boom, almost all of it is centered in the US. For better or worse, that's where it seems to be centered. And it's not just, I mean, people always give the easy excuse. It's because you have more venture capital access in the US. That might be true, but I think that you got to step back and ask, why is it that if you look at the top 20 Indian companies, you don't see any young companies in that mix? One of my tests of whether a market and economy is in balance is whether you have companies across the life cycle at the top of the market cap table. I mean, let's take an example. You take the S&P 500, you take the top 25 companies. You take a company like Facebook, it's 14 years old. It's young by corporate standards. NVIDIA is 26 years old, but it's still young by corporate standards. There are a lot of young companies in there that essentially have blown out of small market caps to become large market caps. I can't think of a single other market in the world, not one, Maybe South Korea with the chip companies briefly, where you take the Sensex, try it in India, take the Sensex, go down the list. Look at chronological age, look at corporate age. The end game seems to be that you have to become a large, mature company to make it on that list. There's got to be something structurally in the US that allows these young companies to kind of break out and become the largest market cap companies. And I think until you fix that structural issue, India has the smarts to do it. They have the technology to do it. But the structural challenges that you face in making, I mean, you have lots of startups, right? But they tend to be startups like, you take Zomato, you take Paytm, you have startups that essentially rise to a certain point, but they never make it to the very top of the list, or they stay in a space. You need to find a structure that allows young companies to break out to the point that all of a sudden they're towards the top of the market cap table. And that might require structural changes, a willingness to forgive people who've made mistakes, to let them try again. I mean, that's one of the things about Silicon Valley is how many people are on their fifth or sixth company, and the previous tries have all been failures. Maybe there's something structurally that needs to change for those great AI, because there's nothing that requires, there's nothing US-based that cannot be replicated elsewhere.
A couple of quick follow-ups to that. For one, in the Indian context, have quick commerce companies and e-commerce companies that are attracting huge capital not been seen? Is that our answer to innovation?
It's not just India, right? 90% of what we've called innovation for the last 20 years is surface level innovation. By that, food delivery wasn't invented by technology. So Zomato is just taking an existing business and living off. I've argued with people that, these companies should turn over a third of their market cap to Apple and Samsung and Reliance Jio, because they're really smartphones plus the internet, and then they had a business on top that allows them to take an existing business and make it scale up. There's nothing innovative about this in terms of, hey, we're changing the way people live. So it's not just India, even in Silicon Valley, 90 to 95% of the startups in the last 20 years really haven't changed much other than breaking down existing businesses and making them more winner-take-all businesses. And I think that's, so it is true, a lot of stuff. And that's why I said SpaceX is not just a technology company. It's not an app company. It's not a software company. The reason people are attracted to SpaceX, it does real things that are technologically at the cutting edge.
Aswath, you spoke earlier about the AI trade souring in some markets. Do you share some of the concerns investors seem to be having around how much AI can actually do versus what is being portrayed right now?
It'll happen, and it's usually expected to. I call it the big market delusion, which is anytime there's a big market, people will overreach. Why do they overreach? Because that's what human beings do. They think they can do things that cannot be done collectively. Thank God for that, because that's what leads to change. Every big, disruption, innovation in markets and economies has also been accompanied by a big market boom. And then there's a correction and a cleaning up, and you say, I wish I hadn't done that. But you know what? So what? It's good to have big market delusions driving people to overreach, because that's how you get change. In my classes, the question I ask is, do you want to live in a world run by actuaries? We'd still be in caves, because they'd be still assessing the risk and fire. You need people to overreach, but it also means that when people overreach, there will be a correction and a cleaning up. And as long as that cleanup doesn't spill over into the rest of society, why does it matter? Why are you worried that people are putting their money in SpaceX at $2.2 trillion? It's not your money. So when people are, start complaining and wagging their finger about how speculative markets have become and how much people are paying for these young companies, my advice is mind your own business. Just go back and manage your own money. Don't worry about what other people do. Let them make their mistakes. And the only caveat I said is if their mistakes spill over into the rest of society, and that happens when they borrow too much to fund this architecture. Because then when they fail, it's not just they who are bearing the cost, it's the rest of us. So the part of AI architecture that I worry about is that component of AI architecture that's funded with debt. That's not the Mag 7. That's not NVIDIA. It's mostly small to mid-sized companies that are using borrowed money to build AI architecture. Those companies, when the reckoning comes, are going to take some of us down with them. And that's a part of AI that worries me. But the rest of AI, there's going to be a cleaning up. There's going to be a correction. There are people in some of these companies who are going to lose money. They've already done, right? Microsoft is down, 35-40% from its peak. But that's okay. That's part of investing. You take risks. Sometimes they pay off. Sometimes they don't. And it's not fair just taking a segment and say, look how much money I lost over the last 6 months if you invested 5 years ago.
The very real impact, though, of AI is on jobs, isn't it, Aswath? How do you see that panning out?
And that's really not even a market issue. It's a macro issue, right? The most optimistic stories about AI, the kinds of stories that lead you to put 10 trillion, 15 trillion, 20 trillion as market for AI are terrifying stories. For the AI market to be worth the 26 trillion, for instance, that you saw in the SpaceX prospectus, I would estimate that 1 out of every 2 white-collar workers would have to lose their jobs. Lawyers, consultants, bankers, journalists, where do they go? What are they going to do? And think of the income that leaves the economy when those people lose their jobs. Who's going to be buying all this stuff that your AI products and services deliver? So it is potentially catastrophic. You don't want the best case AI scenarios to play out, because while they may be great for AI companies, they're going to be catastrophic for the rest of us. At the other extreme, AI could just be a tool that allows us to become more productive, in which case it's a much smaller market. That's bad news for AI advocates, but it's good news for the rest of us. My guess is we fall somewhere in the middle there. We will have white-collar jobs lost in subsets of the economy, but it's not going to be as massive as the AI optimists think it's going to be. But it's not going to be as benign as the people who are blowing off AI saying nothing's going to happen. I'll continue to do what I'm doing today.
Aswath, we can go on speaking because you put things so succinctly, but thank you so much for your time, and we hope we have a conversation soon.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
For the first time on Indian TV, we have both Sandeep Kalra, Executive Director and CEO of Persistent Systems, and Manas Human, the co-founder and CEO of and custodian of Nagarro, joining in to talk about this deal. Gentlemen, both of you, thanks so much for taking the time out. And Sandeep, I'll start with you first. Why pursue this large-scale, all-cash, cross-border acquisition now when Persistent by itself has delivered consistent organic growth? You yourself have said 24-plus quarters of sequential revenue expansion. What specific gaps in Persistent's capabilities or market position does Nagarro fill that you couldn't have addressed it through smaller tuck-in acquisitions or on your own itself?
So first of all, Neeraj, thanks for having us. Both of us are very excited about this combination. Now let me lay out the strategic, reasons for this. This is not about growing in revenue or, basically scaling the thing out in a fast manner. If you look at it, there's so much complementarity about the two companies. This is more about strategically building a company built to last for next several years. Now, if you look at Persistent last 7 years, from 2019 being a $481 million company to a 1.7 billion roughly is the journey. Now, as we have come through this journey, our landscape has changed. Our customer base has changed. The competition in that customer base has changed. The kind of deals that we fight today has changed. So if you look at it, yesterday we announced a 125 million ACV, annual contract value, 650 million total contract value deal in an environment where most companies are degrowing. And that cements our growth for the year, and we'll talk about it separately. But if I was to look at it, we started to become a challenger in our market several years back. Today, when we bid on larger deals, sometimes, we don't have a seat to the table or right to win because we are not truly global in our existence today. Our revenues are 82% North America, 8% in Europe, which is a very important constituent for a number of our customers. We don't have a presence in Middle East. Nagarro complements that absolutely impeccably. Nagarro is very well positioned, very well respected brand name in Europe. They have a very good presence in Middle East. They have a good burgeoning presence in Japan. From a geography perspective, from a capability perspective, sometimes we don't have the seat to the table because we don't have an ERP practice. They have an impeccable ERP practice. They have a direct relationship with SAP where they do very good work for SAP in terms of product development, and I'll let Manas talk about it. They also have a very good implementation practice on SAP, which is fairly good addition to us. If you look at other things, they have verticals like industrial and automotive put together is a fairly good vertical for them, growing very well for them. They have verticals like consumer, like public sector. We don't have any presence in these verticals. Their presence in the tech vertical and in the financial services bolsters our size, scale, geographical spread, capabilities to give you the net of this. From being 82% US, 8.5% Europe, the combined entity now becomes 65% US, 22% in Europe, very well balanced, geographically diversified, vertical diversified, very good rich set of service lines. And now, even from a customer perspective, if a customer looks at us, they can look at as a very credible competition. And now on top of it, layer the AI capabilities. We are very good in engineering. We are very good on the data side, preparing enterprises for AI readiness. They have very good accelerators and capabilities on the domain side and so on, in addition to their own capabilities in engineering and data. So the combination is both from a forward-looking perspective and here and now, a very, remarkable and something that we would have taken many, many decades to build. So I'll stop there. That's the reason why we decided to go with Nagarro. And we are very convinced we can scale it nicely together.
Okay. Manas, if all goes well, you will be a circa $3 billion entity combined Where do you go from there?
So let me start with the second part of it. I mean, I think qualitatively, I leave the quantitative part to Sandeep, who's more quantitative than I am. But qualitatively, we want to build one of the world's leading intelligence transformation companies. I think, we talk IT, which is information technology, which is really old language. We had digital engineering and now but intelligence transformation. I personally believe that this is a burgeoning wave and you have to prepare yourself for that wave, right? And it's going to be disruptive to some players. It's going to be additive to some players. We want to end up with the seat at the top table at great clients all around the world in this AI transformation. So that's what we've been trying to do internally. What we really loved about Persistent is that they've gone through a somewhat similar evolution. They've gone from being a very techie company, which was well respected, like we are, but to also with Sandeep in particular, bringing this sort of sales and commercial savviness. We have been very different from that. We have not had a CFO till last month or 2 months ago, trying to build a very decentralized structure and so on. So there's a lot of margin room, I believe. There's growth room in terms of all the complementarity of the different regions and verticals and practices and so on. But also there is, I think, a growth room just in terms of learning all this stuff. Large deals, for example. It's something that we in our daily work, we managed to build accounts. In every account, we have very good standing. But even to build accounts is relatively new for us. But to build large deals, we just don't do them. So we have a list of very marquee clients where this sort of capability can just accelerate growth. And that's the whole premise, for us. Part of it is, the stock market in Germany or Europe is not maybe the best place for IT services. There's one structural thing that we've been thinking of solving for. But when we met and we were looking at this, it just seemed almost too good to be true. The complementarities and the fact that they're two similar companies at heart, right? So that's where we are excited about this.
Sandeep, I have, of course, questions to ask you about the valuations, etc. But before that, just your vision. When you've done this, you become a $3 billion entity. Where do you go from there?
Yeah, so let me go reverse gear. First, the 50% plus one with Manas, Vikram, who are the co-founders, their support, and the support from the largest shareholder. We are confident that will happen. So that one, I want to take off the table. Obviously, it's not done till it is done. That has to go through whatever process. Then comes the regulatory approvals. That also should be done in the next 4 to 6 months. We should be done with that. Now, as soon as that is done, and we have said we'll run the companies independently into public markets, but we will figure out a way in the legal way to make sure that there is synergies that we can bring together, and there is processes that we can bring to each other while we remain independent at some level. So there is synergies that we will start driving, and then as soon as we think it is the right time to do, 2 years or more or less, we'll figure it out to work together, and then comes the other part. Now, as far as the two companies working together, we are saying this is the Persistent Nagarro group. Both the brands have very good brand reputation in both the markets. Nagarro, in one place, if I can say, their customer satisfaction is even better than us in the ISG ratings. So we are all kind of convinced. Brands exist, the group exists, and now from a growth perspective, look, we are growing today at 16.5%, 17%. We have grown very well for the last several years. Our hope is, and our large deals support the growth momentum for quarters to come. If we can bring the same rigor as some of that to get quick wins in Nagarro over the next several quarters, we are confident of combined growing the company at a reasonable level from an aspiration perspective. This is not a guidance, nothing on those lines. But if we are able to grow the way we are saying, first milestone for us would be, we said as Persistent, we want to be $5 billion by 2031. As Persistent Nagarro Group, that journey becomes easier. If you do the maths, $2.9 billion right now, we have enough and more time to go there. And more than the revenue part, I would say this, our task is to build an absolute unparalleled company for the next generation. Something that is built to last for next several decades. What was built as Persistent for 36 years, what was built as Nagarro for 30 years, will last far more. That is the way we are looking at it.
Okay. Sandeep, now the stickler question, right? The belief amongst people who think that the valuation is steep, but even if you argue that the valuation overall that you've paid is fine, the transaction is likely to lower the growth profile of Persistent while imparting integration risk to the business as well, because Nagara clocked in 5% CAGR in the last 3 years with 3% growth guidance, but you've done much better. So the acquisition will bring down the growth profile from the current 15-80% US revenue growth, and it's a competitive scenario. How do you respond to all of these?
It will be a journey. I'm not saying that the next quarter things will change and become hunky-dory to the combined growth rate being better than Persistent standalone. Even Persistent standalone is a lot of effort. And thankfully our deals and our pipeline supports our growth rate, and we have already announced the deal when that should support this year any which ways. Now, from a longer term perspective, once we have the regulatory things done and we can work together, from what we have seen, look, there are 2-3 data points. Number one, there is hardly any overlap between the customer base. There is single digit overlap in the customer base. That is very, very heartening for us. Number two, the customer concentration in terms of revenue concentration in customers is low in Nagarro. And that is one thing that we would want to see. Their logos are impeccable. So if I can say one thing, I don't think I or the management team in Persistent could have got those logos in the next several years, even if we tried our best. So the kind of logos that we have seen are impeccable. And they have the propensity to spend huge amount of money if we do the things right in terms of client mining, right capabilities and so on. So from that perspective, look at Persistent's journey. Look at our own journey over the last several years. How we have scaled the accounts, how we have scaled the overall revenues. We are confident. The good part is we see in Manas, Vikram and the management team and the layer below, people who have not invented year syndrome. So there's and they are willing to work with us and we are willing to work with them. So through the diligence, we have figured that out and we are confident this can be a pretty strong growth story. I don't want to say more than that.
Okay, so pretty good growth story. Let's assume that is given. What about margins though? Because the margins of Nagarro versus Persistent are lower, and the lower revenue growth recency of Nagarro versus Persistent, could that be a stickler?
No. So the short answer is margins are easier to achieve. Margins will not be the problem here. And growth also will not be the problem. It is just a question of getting the regulatory approvals and getting to work.
Okay.
From what we have seen, there is enough and more. I
really believe that. See, one of our strategies, and you may think it's counterintuitive, but that's probably what strategy is. It has to be a bit counterintuitive. Was that we wanted to embrace the world, right? So we went into many verticals and many different parts of the world and so on. And so we are subscale. We say internally, we say it all the time, we're subscale. And I think these guys are actually going to, let us use and leverage some of those investments that we make in practices, etc., which I think is much higher than industry average. That's what our consultants tell us, right? So it's a bit matter of sort of giving that scalability to those investments, right? So that's the thesis.
Yeah. And we have done our diligence, and whatever we say has a good basis for that. And we'll let the time play out, but we are confident. We'll work together well. We'll integrate well. We'll bring revenue and cost synergies both. But more important than that, cost is not something that I'm too worried about. The revenue synergies playing out and some basic discipline and some places where we are subscale. Today we are very subscale in Europe. They're at scale. Similarly, they're trying to open certain geographies where we are at scale. There's enough and more to be done. And we are confident we'll deliver the Persistent Nagarro of tomorrow equal to what Persistent today is or what Nagarro today is or better.
Sandeep, how does this deal change Persistent's capital allocation priorities over the next 3 to 5 years? Dividends, buybacks, further M&A? What if there is a good deal or offer and you can't take it up because your money is locked here?
Too early to say, but at a high level, I can say this. This is a discussion with the board. I'll not comment on many things, but at a high level, the first job is to make sure what we are doing right now is successful. I will rule out any significant M&A for at least the next 2 to 3 years. Will there be sometimes, we land up doing tuck-in acquisitions because we are doing vendor consolidation, and the customer may say, as a part of this vendor consolidation, can you please consolidate this vendor? Or we may come across one small tuck-in which may make us sharper, brighter. But from any meaningful M&A, I can tell you, we are not going to look at anything else. We have our job cut out. We have enough and more to do. And even if we were to not open one more account, whatever accounts we have, and just do justice to it, we will lead the growth in the industry. So we have our job cut out for that.
Well, wish both of you and the Persistent Nagarro Group good luck for the future. Thanks so much for taking the time out and being with us.
Well, Rishi Anand, MD and CEO, Aadhar Housing Finance, give us a sense of how Q1 is going. I know you can't give us all of the details, Mr. Anand. Great to have you on the show. Has Q1 kept up its momentum among fears of what's going to happen to interest rates, overall geopolitical concerns, inflation concerns trickling down through the economy?
It was so nice to hear about the Kotak report early in the morning. Yes, I would say, while I can't give you a lot of numbers on Q1, but in terms of expectations of growth, the guidance that we've given, I think we are standing up to it. Numbers are looking good. Retractions are looking good. West Asia crisis, I would take it with a pinch of salt because the impact has not been seen at the consumer segment that we deal with. We actually deal with the lowest segment of the society. And we call ourselves, all of us, the names that you've been taking, we call ourselves low-income housing finance companies. So we have not seen the real impact happening on the ground. As I always say, the first line of defense for us is the change in the bounce rates, which have been stable for the last 8 quarters. So no real impact of the West Asia crisis. But yes, the numbers are looking strong and good.
Having said that, Mr. Anand, there has been a sort of slow down or a slowing of uptake in this low-income housing finance category, as you've described it. Do you think that's now bottomed out?
Tamanna, I would slightly beg to differ. Look at the numbers of the top 3 or 4 players in the low income space. Everybody's growing last 3 years at about CAGR of about 20% plus. That gives a clear indication that there has been no slowdown. Yes, we've been hearing of various reports where we're talking about the industry's talking about slowdown on the supply side with respect to I would say affordable housing supply. But that is to be taken with a pinch of salt, and I'll try and explain why. If I look at my portfolio, 35% of my consumers do something called self-construction. They have their own land and they construct properties on it. Now, this is data that is not captured in these industry reports. Another 35% of my consumers do something called secondary sale. It is hardly captured there. And about 27% of my consumers do take loan against property. So I would say broadly, a big segment of our consumers are not captured in these industry reports. So I will take it with a pinch of salt. But if you look at the numbers of the key players in the segment we operate, they've been growing steadily at about 20% plus.
Mr. Anand, Neeraj here. You ended FY26 on a really strong footing, right? I believe it was the largest disbursements in a single quarter for you. You crossed some critical marks, etc. Do you reckon that the pace and the momentum could well continue for FY27 as a year? And did Q1 show signs of that? You may not be in a position to give me exact numbers because you might be in a silent period. I just want the color.
That's right, Neeraj. Thank you so much. Yes, we ended the year with a big milestone of 31,500 crores with a ticket size of 10.5 lakhs. We're about 3.5 lakh consumers, 626 branches, 22 states. So yes, we ended the year on a high. If I look at the momentum, and you're right, we are on a silent period. I can't be sharing a lot of numbers. The momentum from a perspective of growth numbers, guidance numbers, we are dot on target. We are better off than what the last year could have been.
This 20% which you gave out at the end of the year on the con call, right? If I'm not wrong, AUM 20%, profit growth 20%, 17 to 18% disbursement growth. You are saying you are on track for that. Now, that's good, but maybe you can also call it's modest. Do you reckon this is the run rate that you envisage for the next few years, or is it difficult to call that right now?
So Neeraj, the way I look at our business is, from a medium-term perspective, 20% AUM growth is what we are looking at. I have called out in various forums that we are looking at a 50,000 crore book by the end of 3 years from now, which is if you by simple maths, a 20% growth is required for that. From there on, when we become a large balance sheet, when we cross the 50,000 crore milestone, that's when we will have to recalibrate and see the opportunities. We will have to look at maybe an 18, 19 kind of percent of AUM growth. But the confidence level for the next 3 years till the time we reach 50,000 crores is a 20% AUM growth.
I'm wondering if the pace of construction of homes in that category is keeping up. And I know you spoke about how a large cohort of your customers are those who construct themselves. Those costs have also gone up massively, especially in the last few months because of geopolitical issues, etc. Just the construction cost has gone up. Cost of all those elements have gone up. Have you seen that impact spill over in increase in loan size ticket?
Yes, you're right, Tamanna. Meaning, if I were to take this discussion little on the past, I think the cost of construction actually started rising post-COVID. It is not that the West Asia crisis has given a little bump on the cost of construction. It actually went off post-COVID and across states. Primarily in the metro locations and then trickling down to even the tier 4, tier 5. Yes, and you're right. That directly shows an impact on our ticket size. A gentleman who would have constructed a 2-room house pre-COVID with a 7-8 lakh rupee loan today wants a 10-11 lakh rupee loan, and that is at the book level also you see on an incremental basis my average ticket size has jumped to about 13 lakhs, while on the book I am 10.5 lakhs. And that's where I say you are right. Cost of construction has actually gone up, but has that impacted the momentum of construction activity? If that's where we are heading to the question, no, I would say it has not. My number stats are clear that still about 32-33% of our consumers are doing self-construction, which is primarily in tier 4, tier 5 locations.
Anand, any opportunities in West Bengal after that regime change here? Because I see a lot of announcements around infrastructure projects. Are you sensing higher growth in that region?
Neeraj, I think you've touched the topic. We are all very hopeful. In fact, we are the only low-income housing finance company which is available with about 13 branches in West Bengal. Very hopeful with whatever is happening in West Bengal. We have already, bumped up the teams. We are looking at numbers very carefully. We are looking at various, government decisions very carefully. And just as another data point, West Bengal in terms of low-income housing demand stands second largest in the country. So by demand, I think there are no questions around whether West Bengal should give the outcome that we all are expecting. It was all the situation in the past, but I think bygones are bygones. We are all looking at it very favorably.
Got it. Okay, Mr. Anand, we're wishing you all the best for that and more. Thank you so much for taking the time. I look forward to talking to you post your results, sir.
Thank you, Neeraj. Thank you, Tamanna.
Get in Ashwini Agarwal, founder of Demeter Advisors, on the show. Ashwini, great having you as always. Thanks for taking the time out. Is your smile telling me that you're constructive on the markets because oil has cooled off, the conflict seems to be nearing an end potentially, so the macros have improved a bit? Or is it that it is still unclear as to what to do?
No, I am a little bit constructive for all the reasons that you mentioned. Historically, at least, stabilization of the rupee has been a predictor of FII inflows, FPI inflows. And to that extent, I think maybe not now, but once the FCNRB deposits have gathered some momentum and the rupee looks to kind of be stable, then I think, you should see that event playing out in the sense that of FPI portfolios inflows turning positive, which should be positive news for Nifty and the large caps, because large caps have significantly underperformed the small caps over the last 3 months. Such a wide performance divergence is not usually observed. So to that extent, I think, you have some room for the large caps to move up. I just hope the Iran-US, kind of dance doesn't get messed up. We continue to see a lot of mixed news out of the Middle East, and I think that's concerning. But I'm hoping for the best there.
You know, the strange thing about the Iran-US dance, as you call it, it seems to pick up pace only on the weekends when markets are shut in the US, and then by Monday morning, they go in for a pause. But having said that, for India and for Indian equity investors, what becomes the biggest factor now as that threat recedes? Is it the spillover effect of the inflationary impact that we saw in the first quarter?
So, Tamanna, my sense is that there are a bunch of things that Indian investors have to think about. One is, how does the earnings season pan out? Earnings season is very difficult to predict this time around because there are going to be a bunch of inventory gains and inventory losses. A lot of it we will not be able to foresee. Second is that the rains are playing truant. Historically, again, GDP growth, agricultural output hasn't had a significant impact of late on overall growth from poor monsoons, but I think consumer demand may slow down a little bit, and that's something that we have to watch for. So those are the two issues which will probably determine investor sentiment. Mind you, the earnings momentum, if you think about it, if you take fiscal 26 in perspective, first quarter was the weakest, followed by gradual strengthening across the quarters, with fourth quarter being pretty decent on earnings. I think that narrative may get a little bit challenged in the short run. And what I've seen is that retail investors or domestic investors are very sensitive to quarterly earnings. That's not my preferred way of looking at things or investing, but be that as it may, one has to recognize that fact. And that, to me, could be a bit of a hiccup, especially on the broader market, where you see a lot of sort of hard to predict variables coming into play for the first quarter earnings. My sense, though, is that over the next 2 years, you are looking at a scenario which is a little bit positive, because I don't think there are any macroeconomic imbalances. The worst of the rupee is behind us. Investment seems to be picking up. Domestic demand seems to be picking up. Credit growth is signaling positive cues. Valuations are not very attractive, but they're not very expensive either. So I'm hoping that we'll muddle along with kind of low teens to mid-teens type of returns.
Okay. Ashwini, what about the auto pack? I think the Delhi EV policy may be throwing a spanner in the wheels of the ICE plans, but a lot of notes currently talking about very bottom-up ideation within autos. So Maruti gets an upgrade despite the fact that it does not have as large an EV portfolio, if you will. But M&M also gets an upgrade because EV penetration is going up. And then there are two-wheelers, etc. How do you kind of separate the wheat from the chaff here?
So, Neeraj, I think, like you said, it's very bottom-up. While EV is obviously gaining traction, it is not a one-stop solution. I continue to believe that even 5 years from now, there will be a significant number of gasoline or diesel vehicles on the road. As a vehicle owner, unless the charging infrastructure becomes ubiquitous, especially with public access, it's not possible to rely completely on electricity, barring for intra-city runs and short runs. So my sense is that automobile is more about consumer demand, and consumer will choose between petrol and EV, depending upon their circumstances, how much do they drive, what is the charging infrastructure available to them, and so on and so forth. So while the Delhi policy, I did read about it, is probably there for the kind of pollution Delhi faces, I don't think that's going to be true for the rest of India. So I think it's going to be very bottom up. People who are winning market share, people whose sales momentum is continuing to be strong, I think those stocks will do well.
Okay, thank you so much, Ashwini, for speaking with us.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hello and welcome to The Big Question. I'm Vikram Oza. Now, Delhi has just hit that accelerator on its EV ambitions, which is why we're raising that big question. The capital has cleared that EV policy of 2026, and it's backed by a proposed 15,000 crore rupee investment, which is spread over the next 4 years. So there is a massive charging infrastructure rollout. There are vehicle purchase incentives being rolled out. There are scrappage benefits as well, and also there are tax waivers. So all of this part of the kind of policy that has been rolled out by the Delhi government. And this is all happening while they're setting firm deadlines for the transition, which is moving away from the fossil fuels, from petrol, from CNG vehicles, all in key segments. The targets are set. So from January 2027, only electric three-wheelers are going to be registered. And then from April 2028, new two-wheeler registrations are going to effectively go all electric. These are the timelines we are working with. So from auto rickshaws and commercial fleets to the delivery vehicles and the two-wheelers, Delhi is making it clear that this is mobility future. Electric is the way to go. The policy is aiming to support as many as 30,000 public and semi-public charging points by the year 2030. That is again another target. So it's offering incentives of all kinds of up to 1 lakh rupees on certain commercial EVs, and significantly, it backs pure EVs while keeping the hybrids out of the incentive framework. So not hybrids, not the transition kind of technology, they're favoring direct EV. Now, nobody disputes the need for cleaner air. Delhi needs it. These are the kind of pictures that emerge every winter. But the question is, can ambition be matched by execution? Can charging infrastructure, can electricity networks and the financing scale, all of these, can they be put up quickly enough? And will consumers, the gig workers, the small businesses, will they all be able to make the switch without feeling financial strain? And very importantly, are these incentives enough to change behavior, or is affordability still going to be the biggest hurdle? The world's most successful clean mobility transitions have shown that the bold targets do matter, but so do infrastructure and affordability and execution, which is why we're asking this question. Is Delhi now moving and ensuring there is a blueprint for the entire country to follow? Or are they moving too fast and too quickly for the entire rollout of the infrastructure to keep pace? Let's take that across to our panel, and joining us on this discussion today, we've got Anumita Roy Chaudhary, Executive Director at the Center for Science and Environment. Good to have you. With her is Saharsh Damani, Chief Executive Officer at the Federation of Automobile Dealers Association, that's FADA as we know it. Sharif Kamar is also with us. He's a Fellow and Associate Director at the Energy and Resources Institute, that's TERI. And Palak Popli is here, Whole-time Director at Victory Electric Vehicles India Limited. So, ladies and gentlemen, thank you for joining us on The Big Question, and please feel free to disagree and agree with your co-panelists as well. Whenever you want to make a point, just raise your hand. I'll come to you ASAP. But Anumita, Delhi already has some of the worst air quality. I was just showing some of those visuals, the worst in the world. So is this kind of bold intervention, the kind of aggression that the Delhi government is showing in meeting these targets, is it what the clean air crisis in Delhi demands? Because the other argument is that even good environmental goals can risk failure if the timelines get ahead of real implementation on the ground.
Absolutely, Vikram, because what we really need to keep in mind that given the air pollution crisis right now, and knowing that the vehicles are the top contributor to air pollution in Delhi today, the next big transition has to be about zero emission transition. Delhi has done everything, CNG, getting rid of old vehicles, BS6 emission standards with ICE vehicles, but we have not met the benchmark. So now the next level has to be about zero emission. But now coming to your specific question, that you can have a clean air target, but to meet that ambition, is the business prepared? And whether there is any reason for pessimism around that. And I would say no. Because, for instance, what our experience has been, and where this new policy is different from the old one, clearly shows that only incentive-driven program doesn't help. Despite having 25% target and incentive in the 0-1 policy, we have only reached about 12% electrification. But in the next policy, what is important, we are combining incentive with a regulatory target, given absolute certainty to the market about that where the goalposts are, and that is needed to build industry confidence for investment. And we have seen this happening in the past with the CNG vehicle. The mandate for complete 100% target for CNG transition in 3 years was given when not a single CNG vehicle was produced in this country. And yet we admit that the moment the directive and the mandate was absolutely clear. And today we know the preparedness for electrification is much better. If you see today that the electrification of the production line of different OEMs that have already happened, the investments that is taking shape in the infrastructure of charging and battery development, what we now need as a next step is to create firm, committed demand in the market to ensure that that investment becomes viable and we can deliver on the target. Today, what awaits is the industry's firm policy, long-term certainty that yes, we are not going to deviate from the trend, and that's why I'm so glad that these loopholes.
So you're very happy. You sound very happy that this policy is as aggressive as it is. This is what Delhi requires. Cleaner air is a need of the hour. Zero emissions is where it's at, and unless you have this kind of clarity, these kind of tough deadlines, we will not do it. Saharsh Damani, do you agree? From a dealer perspective, from a consumer outlook as well, is the market genuinely ready for a future where only electric three-wheelers are going to be registered from 2027 and only electric two-wheelers from 2028? Are we ready for that? Saharsh? Perhaps you need to unmute yourself, Saharsh.
Yeah, thank you and good evening to all my co-panelists and to you and all the viewers. Yes, I believe the market is moving in the right direction, and this policy will further accelerate that transition. From a consumer's perspective, because we are close to the dealers, acceptance of EV has been improving steadily because people are now looking beyond the purchase price and evaluating the total cost of ownership. Lower running costs, lower maintenance, and the incentives announced under this policy certainly makes EVs more attractive. Having said that, consumer readiness alone is not enough because the entire ecosystem readiness is equally important. Delhi retails nearly 50,000 two-wheelers and around 5,000 three-wheelers every month. Today, India sells around 1.7 lakh electric two-wheelers and about 70,000 electric three-wheelers every month. Now, what does this mean? This means that Delhi alone could eventually require close to 30% of today's national electric two-wheeler volume and around 10% of the electric three-wheelers volume. These numbers clearly indicate that the scale of preparation that will be required from manufacturers, is a steep task from the current numbers what we are seeing. The policy has given the industry a clear demand signal.
Yes.
We now expect that OEMs should respond by ramping up production, expanding product choices, and ensuring that adequate allocation is there for the Delhi market alone. At the same time, charging infrastructure, financing, and after-sales support, must keep pace with the current demand what we are generating.
Can they or not? Let me ask the industry perspective from Palak. Palak, you belong to the EV industry. For the industry, are the kind of deadlines that are being mentioned over here, do you think, for one, it creates the demand certainty, like Saharsh is pointing out, and that's something the industry has always wanted?
Absolutely. The EV market has almost 60% three-wheelers penetration. 8% of penetration is there in the EV market, and it has drastically increased. Yes, there is a certainty in demands for EVs, and the industry is ready to cater the demand also. We have OEMs who are focusing on after-sales services and the demand, capturing new models, capturing new markets. And it is rightly said that as we approach to the policy, Delhi is the right place for the policy. But yes, the charging infrastructure also matters.
But
currently,
No, but how big is the risk over here, Palak, that supply chains, battery availability, production capacities, will they struggle to keep pace with demand as these deadlines drop upon us?
No, I don't think the market will struggle. We already have a lot of OEMs and manufacturers, and the manufacturers and the investors looking at the industry and looking at the growth. They're already ready. They already have plans in action. So there must not be a constraint in terms of demand when we talk about the products.
Fair enough. But Sharif, do you agree? The policy setting out this 15,000 crore rupee push, it's a massive charging network expansion that is required. But how big is the charging infrastructure as a challenge today? When customers walk into showrooms, is their biggest concern going to be the price, the resale value, the range anxiety, or is it indeed the charging? Which one affects their buying decision the most?
So Vikram, thank you so much for having me and Terry on the panel. And I must congratulate that we are talking about air pollution because of the EV policy that has come and not during October-November season when the pollution is at the peak level.
Yes.
So I must congratulate on that front. Now, coming to the charging infrastructure, of course, the industry would be ready in terms of the vehicles and the volume that is required for Delhi. But I think charging infrastructure would be the most critical aspect if you look at from the success point of view to implement such policies. And therefore, if currently Delhi has about 10,000 odd charging points, of which 3,000 charging points were built in the past 1 year or so. So I think clearly, and the target under the policy is about 32,000 charging points. Now, there is a clear, roadmap for the different departments, transport as well as power departments, to come together and set up that basic infrastructure that is required for the success of this EV policy, which is a very, I would say, one of the boldest EV policies in the entire history of EV in India. And that's where the hook lies in terms of, and the success lies in terms of implementing the charging infrastructure at this point.
Yeah.
That is a challenge, but I think the Delhi departments and the Delhi government and different stakeholders will come together to make it a big success.
So whether it's strengthening the electricity grid or looking at the local distribution networks, the renewable power integration, a lot of work will need to be put in. Where do you think the maximum push needs to come, Sharif?
I think one of the key aspects is to look at the siting of these charging infrastructure where it is required most. Currently, if you look at the fleet electrification that is happening in the city,
yes,
a lot of public charging infrastructure is being used primarily by the fleet operators, the taxis, taxi service, and less by the private sector and private individuals. So I think fleet level charging infrastructure and mass charging infrastructure would be required, and the siting would be the most critical aspect. We should have, and we should plan for megawatt chargers, bulk chargers, charging points across Delhi, so that the EV fleet operators are catered to, as well as leaving some space for private charging, space as well. The other aspect that we, keep missing is the swapping infrastructure.
Yes.
I think at the same time, particularly for two-wheelers and three-wheelers, we need to have these swapping charging points across the city, make it, omnipresent in terms of wherever the demand is. And therefore, in both these aspects, fixed charging as well as swapping, the siting would be the more important factor.
Palak, you agree with that? The swapping infrastructure needs to be put in place immediately too?
Absolutely, sir. The swapping infrastructure needs to be put in place. But when we talk about three-wheelers can be charged at home also. And the current three-wheelers that we have, they have a good range to sustain for a day. So the driver can easily drive in a day. And for the two-wheelers and gig workers, we would definitely need swapping infrastructure right away for the fleet operations.
But Palak, EV makers, they say that the total cost of ownership when it comes to EV vehicles is lower. But many consumers, they still focus on the upfront cost. That hasn't changed. So how do you bridge that gap and make the EV proposition compelling enough for middle-class buyers if affordability is really going to be where adoption is really going to come from?
So there are different variants. Like being in the industry, I have seen a lot of OEMs, and they almost now, looking at the customer demand and the customer reluctance, they've come up with a lot of variants. They now come up from economy to premium models. So looking at the customer's reluctance to the price and price sensitivity, they've come up with different variants which offer different price segments. And they have a segment that caters middle class also, and they have a segment that has premium models which come to people who want to go for premium models only in the industry.
So if they are going to have those kind of options in the market, it makes their affordability kind of parameter easier to tide. But Anumita, why do you think the government has chosen the pure EVs over the hybrids? Some would say the government should not ignore what is a useful bridge, a transition technology that hybrids offer that consumers may perhaps buy into more readily.
First of all, Vikram, it is very important to bust the myth that hybrid is a transition bridge to electrification. It's not. Look very carefully at the strong hybrids that we sell in India today. What is it? It is still a 45-liter petrol tank. You are burning that much fuel. You have a battery size which is smaller than that of a two-wheeler. It only assists with electric drive only for a very short and a very minimal time of your total driving. Hybrid is a technology to improve fuel economy of an internal combustion engine. It is not an electric vehicle. So what we have to keep in mind that at a time when we have to give very firm signal to the industry to invest in electrification, you cannot deviate and detract and weaken that roadmap by giving away SOPs to the intermediate technologies like hybrid. Therefore, I'm so happy, therefore, that this policy is therefore so categorical and has said no to any intermediate strategy.
So no to any intermediate technology. Saharsh Damani, are you in agreement? The industry's view is often that strong policy signals accelerate the innovation, accelerate the push, to be able to accelerate the kind of EVs that we need right now to be able to control pollution levels in Delhi. So if Delhi had continued supporting the hybrids, would that have slowed investment into pure electric technologies? Do you think that would happen?
Interesting question. In fact, the draft EV policy which had come out had hybrids in it. But as per yesterday's press conference, we are seeing that hybrids have been taken out of this. I think the larger objective here is cleaner air, and on that there is complete alignment. In fact, today, right now, while we are having this interview, it's 500 AQI in Delhi.
Yes.
So Delhi's direction towards lower emission mobility is absolutely the right one. The question is not EV versus hybrid. The question is how quickly we can reduce emissions while ensuring a smooth consumer transition. And strong policy signals certainly encourage investments. When the government lays down a clear roadmap, manufacturers gain confidence to invest in a certain product, production capacities, and also the localization of that product. So from that perspective, policy certainty is always positive that way. Having said that, the market also needs adequate consumer choice during the transition. Different technologies play different roles depending on consumer usage patterns. Ultimately, the market will decide which technology succeeds. But our immediate priority should be ensuring that enough electric vehicles are available to meet the demand this policy will create. That is the biggest challenge what we have right now, which we have to solve for. Delhi alone, as I said, retails 50,000 two-wheelers, and 30% of the total numbers will have to come to Delhi. So that is the big challenge what we as the dealers fraternity are looking at. Will the OEMs be able to manufacture this volume of vehicles? And second, will they be able to allocate such a big volume to the Delhi market alone? So these are the questions what we have in mind. Because a lot of dots have to connect, and we have to align all our stars together so that this policy becomes a success and becomes one of those policy which is then implemented across the nation.
So yes, exactly. So whether or not this can become a blueprint for the rest of the nation is largely going to depend on how the ordinary person on the street can look at making that transition into electric very easily. So the people who depend on mobility for their livelihood, we're talking about auto drivers, delivery partners, the small transport operators, are they being asked to bear too much of this transition risk, you'd say, Saharsh?
I think it is not a transition risk because the kind of policy incentives which are coming into play, registration fees getting waived off, road tax getting waived off, the scrappage benefits being passed on to the customers. And then there are a lot of manufacturers which are already running the BaaS model, battery as a service, because in electric vehicle, 40 to 45% of the cost of the entire vehicle has been borne by a lithium-ion battery. So if that also becomes as a service, then barely what you pay as a customer is around 60 to 65% of the vehicle cost, which then makes it quite economical from an upright purchase point of view. The down payment comes down, which becomes a big comforting area for a customer in the two-wheeler or in the three-wheeler space. And as manufacturing of these products ramp up, we will see economies of scale also coming into play. And first, it will become comparable to an ICE product, and then it also may, be available at a discount compared to an ICE vehicle. So I think on a long-term basis, it will only benefit not only the citizens of Delhi, but also customers because of the economies of scale coming into play and the kind of running cost which benefits EV buyer.
Are you in agreement, Sharif? If you're truly looking for mass adoption, then I'm wondering if manufacturers and financiers and governments should jointly create innovative models like the battery leasing, like the subscription ownership, like the low-cost financing, the battery swapping infrastructure. All of that is going to be required, don't you think?
So, Vikram, absolutely right. I think our Indian industry, it is very innovative and it accepts the challenge, whatever the government and regulators throw at them. We have seen the transition from diesel to CNG, and that's where we want to see, in terms of EV transition as well. And we will definitely look at this as a positive challenge for the industrial growth as well as for the air quality, better air quality. And that's where I think there is a huge opportunity there. Let's look at that. The glass is half full and not half empty. And with the EV policy, I think the job is half done. We also need to look at other strategies to reduce air pollution from the transport sector, be it phasing out of old vehicles. But I think overall, the industry is equipped. It is sufficiently equipped in terms of providing the volume that is required in all segments, I would say.
Yes.
I'll give you one example from my recent conversation with an EV fleet operator and a driver. He was running about 400 kilometers per day with an EV vehicle, as compared to about 250 to 300 kilometers per day. I think the income opportunity and the generation that will happen through EV will also have a positive impact on the livelihood of the people as well.
No doubt about that. Anumita, then how are we going to measure success of this policy if it has to become the blueprint for India? Then are we going to measure the success by the kind of sales numbers that EVs hit? Or should the ultimate metric be cleaner air and lower emissions and better public health outcomes? How are we going to judge the success of this policy?
The metrics for judging success, one, certainly to see the scale of the market building up across all vehicle segments, just not the smaller vehicles, small format vehicles, but also the cars, the commercial vehicles, trucks and buses. So that will be clearly the year-on-year the tracking that we need to do. And then, of course, its ultimate outcome will be how we are therefore eliminating the tailpipe emission in the city and its contribution to overall air quality. That's what we are all waiting for to breathe in this city.
Correct.
So this emission transition is really the way forward for us.
In that case, Sharif, if Delhi succeeds, you think it's going to become the template for Mumbai or Bengaluru or Chennai, other major cities, or you think Delhi is quite a unique case? The pollution problem over there, it's not like AQI is low in Mumbai, but I'm just saying Delhi has a uniqueness about it that cannot easily be replicated elsewhere. Where do you stand on that?
Absolutely. Vikram, I think we don't have to go far to Mumbai or Chennai. I think from air pollution, of course, we can. But we need to also deal with our Indo-Gangetic Plain states, which includes Punjab, Haryana, Uttar Pradesh, Bihar, West Bengal as well. I think all these states that I mentioned are affected by air pollution, and majority of it coming from the transport sector. And therefore, Delhi EV policy gives a direction to all these states as well, not only the individual cities that you mentioned.
Yes, indeed. So, I mean, there is no taking away from the fact the strength of this policy is going to determine on how exactly we are able to kind of bring all of these factors into play. And volumes, whether you're talking about the infrastructure, whether it's a vehicle front, the entire OEM part of the industry, all of them will have to fire on all cylinders, so to speak. But what emerges from this debate is that the destination is not really in dispute. We are looking for cleaner air, cleaner mobility, a more sustainable city. That's the aim. Now, the real question is whether Delhi can make the journey affordable, practical, inclusive enough for people to come along willingly. I want to thank my panelists for great insights. Anumita Roy Chaudhary, Saharsh Damani, Sharif Kamar, Palak Popley, thank you for joining us with your views on this. Of course, we'll keep circling back and seeing how quickly this policy is adopted. Its success is not going to be monitored on a day-to-day basis, but overall, you can talk about the policy having its effect in the long run only when you kind of see cleaner air to breathe. And when you are able to be able to breathe in a city like Delhi or Mumbai, it's going to be a boon. It's a policy that is going to be aggressive, but how quickly we can adopt it, making those targets, is going to be something that's on our radar. I'm Vikram Oza with a big question. Thank you for joining us.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome back to NDTV Profit. You're watching Market Express. My name is Puneet Zaveri. Let's get straight into the show. Markets stay choppy in trade. Nifty ends near the day's low, below the 23,900 mark. The Sensex is also down by over 250 points, while Maruti Suzuki and Titan top the gainers in terms of the Nifty 50. Eicher Motors continue to be down and out in today's trade, led by the Delhi EV policy. Tata Consumers also lags behind, while the broader markets outperform the benchmarks. IT, banks, metal and FMCG were the top sectoral drags for the day, with the tech index falling by over 2.5%, while defense, realty and pharma were among the top gaining sectors. Shilpa Medicare jumped by over 5% today after the company's wholly owned subsidiary Shilpa Biologicals entered into a co-development and supply agreement with the Finland-based Orion Corporation. Now, the agreement has been inked for the company and co-development essentially and supply of intravenous nivolumab biosimilar, referencing one of the world's most widely used cancer immunotherapies. Goldman Sachs stays bullish on Page Industries, raising the target to 48,000 rupees per share and says essentially that the price hikes, improving volumes as well as stronger EBO experience, which is exclusive brand outlet experience, as well as the online growth is underpinning the long-term demand visibility of the counter. Stock was up almost 2.5% today. Zaggle Prepaid is in focus after entering a 5-year agreement with APSE Financial Services to provide its Zoyas platform and expense management solutions. Now, it is strengthening its SaaS offerings going forward as well. Shares of transformers and rectifiers surged by over 6% after the company secured over 1,000 crore power grid order, boosting investor sentiment as well as strengthening its order book visibility. Stock continued to be up and all about today. Eicher Motors was the top loser for the Nifty 50 and slipped after the Delhi government cleared the EV policy for the state, encouraging more electric vehicles. Now, this move draws a hard line under the capital's petrol and CNG two-wheeler trade, and leaves Eicher Motors Royal Enfield brand exposed at this point of time. They just carry one electric model that is under the Flying Flea brand, and that's despite Royal Enfield's commanding market position. Delhi contributes to about 3.3% share of the overall sales for Eicher Motors, and hence with no EV alternative, this will be something to watch. It comes in on April 1st, 2028. Now the government is in final stages of issuing an approval letter for Dixon Vivo joint venture. Now sources say that the venture nears the final node after the interministerial panel clearance earlier this month, marking a key regulatory significant progress on a joint venture that's been stuck for 19 months now. Oyo is checking back into Dalal Street. Now the parent firm Prism has filed for a 6,650 crore rupee IPO. All fresh money, no exits from the existing investors. Big names like SoftBank and Ritesh Agarwal himself are staying put, signaling confidence at this point of time. Now the focus is clear. Clean up the balance sheet and back growth even as profitability improves and key overhangs fade away. Gold prices are on track for their biggest quarterly decline in more than a decade. Now the precious metal is heading for its sharpest fall since 2013 as a hawkish US Fed Reserve continues to weigh in on investor sentiment. Now expectations of a higher interest rate for longer have strengthened the dollar and reduced the appeal of non-yielding assets like gold. WhatsApp is working on a new feature that could make chatting more private. Now the platform is expected to let users connect using unique usernames instead of sharing their phone numbers. Now that means that people will be able to start conversations without revealing their personal contact details. Now the feature is aimed at improving privacy, especially when messaging someone for the first time or joining group conversations. Prime Minister Narendra Modi is likely to travel to the United States and Canada in December for a series of high-level engagements. Now the visit is expected to include the G20 summit as well, as talks on strengthening economic ties continue. Now, a key focus could be progress on the proposed comprehensive economic partnership agreement with Canada as well. At least 30 people were injured after a fire broke out at a naphtha pipeline inside the Haldia Petrochemicals plant in West Bengal. Now, the blaze triggered a major emergency response, with fire tenders rushed to the site to bring the situation under control. The injured have been shifted to a nearby hospitals for treatment, while the cause of the fire is yet to be confirmed. The Kerala High Court has ordered a swift investigation into the alleged irregularities in the Sabarimala gold plating case. Now the court directed the special investigation team to carry out a thorough probe, stressing that no aspect of the case should remain unexplored. Now, the High Court has also called for a time-bound investigation to ensure accountability. The case relates to allegations surrounding the use of gold for works at the Sabarimala temple. An India-US trade deal could be just around the corner. The US ambassador to India, Sergio Gore, has said that the negotiations are now in final stages, with only the last 1 or 2% of the discussions left. Now, the remarks signal that both sides are close to resolving the remaining issues. Once finalized, the agreement is expected to boost trade, strengthen economic ties, and open up new opportunities for businesses in both countries. Iran has dismissed US President Donald Trump's claim that talks are underway between Washington and Tehran. Now, Iranian officials say no direct negotiations are taking place with the United States. However, Tehran has confirmed that an expert delegation will travel to Qatar later this week for separate discussions. Now, the death toll for the devastating earthquake in Venezuela has continued to rise. Now, authorities have actually said that at least 1,700 odd people have now lost their lives, with rescue teams still searching through the rubble for survivors. Now, thousands have been injured and many more have been displaced as entire neighborhoods were flattened by the powerful earthquake. Now, emergency services remain on the ground while aid agencies are stepping up relief efforts for those affected. Morocco has pulled off one of the biggest upsets of the FIFA World Cup, knocking out the Netherlands in dramatic penalty shootout. Now, the round of 32 clash finished the draw after the extra time before Morocco held their nerve to win the shootout 3-2. Goalkeeper Yassin starred with a crucial save, while Ismail Saberi scored the winning penalty to send Morocco through. Germany's FIFA World Cup campaign is over after a heartbreaking penalty shootout defeat to Paraguay in the round of 32. Now, the match finished 1-1 after extra time before Paraguay held their nerve to win the shootout 4-3. So the result sends Paraguay into the round of 16, while four-time World Cup champions Germany suffered an early exit from the tournament. It's another major upset in a World